it? Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, I almost forgot because everything this morning, last night, it was all about the earnings. But we got Jerome Powell today at 2:30 p.m. Eastern for the press conference. At 2 p.m., you will be getting the FOMC release. And believe it or not, this is the lowest priced in FOMC, I believe, in about 14 months, meaning that today we are pricing in a 0.75% move. If you compare that to any of the Powell meetings we have had, I even got a little bit of news for that for you. This is going to be the lowest one. So pretty much people aren't expecting too much. This could potentially be the last rate hike. We did have a couple of earnings, Coca-Cola, Bank of America, Boeing. And then we have the bank shares from yesterday, but overall, we're getting a little activity. All eyes on the Fed during the day, and then after hours, we're going to get Meta, and then before you know it, this week is over, and then it's Apple, Amazon, the end of July, and then welcome to the end of summer, Chad. What's up, baby? Good morning. How you living, man? What's up, Flav? What's up, Techno? Mike Villarreal, baby. Joey, good morning. Oh, Benny Silverio in the house. That's what I'm talking about. What's up, Edgar, Maria, Zorise, yay. And hey, baby, J-Max. Oh, the chat's going now. That's what I'm talking about. Forever Young, Christina, Smosh, Josh Jacobs, 10% Alex, Malcolm King, good morning. What's up, Mr. McAllister? How you feeling, Jay? What's up, Brady? Oh, Carissa Hines in the house. Oh, good morning. And Najee Wolf. Oh, what's up, Jesus? Good morning. Robert Woods, baby. Robert Woods. Good morning, Zeke. David Surt in the house. Riley Mack came to play. Vance Santana on Powell Day. Open Faces ready to go. Good morning. Koya, Candy, Matt, Keanu, Ansel. Oh, good morning. What's up, Ari? Johnny Benz, Caballero, baby. Good morning, Enrique, Mr. Hanlon. Oh, Rizzy, Mr. Whitman. Oh, good morning. What's up, baby? RS, Kurt McGirt, Andrew, Dan B, baby, Damo. What about that Twitch? 8012, Rocky Balboa, fatten thy purse, baby. Good morning. What's up, Bobby? Dr. Marty Dool, Robo Handtech, Zaid, man, Slizzin. Oh, Charlie on the train. Good morning. What's up, Dr. Sway? What's up, Zuraz, Blazing Bob, oh, Chattadonia. And good morning, Jerome Powell. Jerome Powell, I hope you have a good day today, buddy, okay? So everybody say hello to Jerome Powell. Everybody, I hope you pray for Jerome today. You know what I'm saying? I didn't think about it. I pray for all the Chads every night. I prayed for Jerome Powell last night, okay? So amen, amen. Shout out Jerome Powell. Let's see what happens with Zuckerberg, the lizard after hours. But Chattadonia, good morning. Let us get into the news. I hope you're ready. And you are getting that. Again, Volkswagen just took a stake in XPEV. Shout out to the Chads posting the news in there, but you're getting a move. So there's a couple of pre-market movers. Bonds are going crazy. We're going to talk about the yen as well, the yuan. Or the yen. Why do I keep calling it the yuan? But just keep your eye out for everything right now. There seems to be a little bit of movement here, okay? So you have a lot of different earnings here. But earnings and rate outlook push stocks down before the Fed. U.S. technology shares fell pre-market trading on Wednesday, weighed down by a slew of disappointing earnings in the sector and the likelihood of more interest rate increases from the Federal Reserve. Contracts on the tech-heavy NASDAQ slipped 0.4, dragged down by weakness in some top constituents, including Microsoft, which posted tepid sales and a forecast of a slowdown in their cloud computing business. Chip makers lost ground after a lukewarm earnings forecast from Texas Instruments, the biggest maker of analog semiconductors, while Amazon fell as much as 2.5% after a news report about a looming antitrust lawsuit. On the plus side, Google parents Alphabet jumped 7% after posting better than forecasted revenue. Meta rose ahead of their own report later on Wednesday. European losses were greater. Stock 600 is down almost 1%. The region's biggest company, LVMH, slumped as much as 5.4% on signs of a slowdown in spending by U.S. wealthy consumers. Unilever and British American Tobacco also hided more recent softness in the U.S. market. We're going to see some deceleration in corporate earnings earnings, deceleration in economic growth, and softening demand. All of this will have a higher impact on equity, says Arathi Chandrasekhar, Director of Investments at Shua Asset Management. Still, the U.S. economy is weakening, but it's not weakening enough to price in a full rate cut next year. Despite the disappointments, roughly 80% of economists or companies have thus far beaten profit estimates, and half of European names have done so, according to data. This is partly down to a steady whittling down of expectations before the season kicked off. Later on Wednesday, the Fed is expected to raise rates by 25 basis points, and swap contracts are factoring in some additional rate increases by year-end as well, while the ECB should deliver a quarter point on Thursday. With those hikes baked in, investors are focusing on how much more tightening is warranted. So Fed preview, Federal Reserve policymakers are poised to hike interest rates to the highest level in 22 years while retaining a tightening basis that signals the possibility of an additional move later this year. The Federal Open Market Committee is expected to raise rates a quarter point today to 5.25 to 5.5, an 11th increase since early 2022. It will release this decision at 2 p.m. and Chair Powell will hold the conference 30 minutes later. Investors will be listening for clues about how the determined central bank is to raise again. They will be leaving all options open, said Veronica Clark, an economist at Citi. They will certainly stay cautious after only a couple months of softer inflation data, which is not enough for them to be convinced the job is done. It all sounds the same. That's why this is the lowest priced one. But who knows? Maybe we get a surpriser. Tech earnings. Alphabet shares jumped more than 7% in late trading after Google parent reported revenue that beat analyst expectations, while Microsoft fell after posting tepid sales growth. Alphabet revenues were boosted by advertising on the company's flagship search business while it's withstanding new competition from AI chatbots. It has also weathered an ad slowdown that affected social media companies in recent quarters. Microsoft's forecasts continue to slow down their Azure cloud business, overshadowing optimism about customer interest in new AI-powered products. Meta reports later today. China bonds. 3 Japanese market veterans are clashing on whether Chinese debt is the deal of the century or the road to ruin. The spat highlights the dilemma global investors are facing in deciding to play the world's second largest bond market. Tatsuya Higuchi, a finance veteran of Mitsubishi Asset Management, sees China as the top destination for bond investors as high interest rates climb even higher almost everywhere. Interesting. Oh, and this is the one. Powell has stopped handing gifts to Wall Street on Fed Day. So this is what we were talking about. In what was a brutal 2022 for investors, there was at least one surefire money-making proposition much of the year. All they had to do was buy stocks and bonds seconds before Federal Jerome Powell began speaking at his latest post-FOMC press conference and dumping as he was wrapping up. That March, when the Fed began hiking interest rates, the stock market gains during the 60-minute window were spectacular, 1.6%, and they just kept coming in, 2% at May, 2% in June, and 1.6% in July. Whatever Powell said, traders took it as dovish, or at least a little less hawkish than the FOMC statement they just read. In February, the frenzy suddenly reappeared, another 1.6% stock surge. Bond gains look similar, albeit smaller. Now, those easy money FOMC days are set to be over. Strip out February's pop, and Powell's press conferences are mostly delivering small losses as of late. That's the bad news for rapid-fire quant-heavy shops that analysts suspect were mostly deftly mining the trade. But there's a bigger, more important message here. The wild volatility that erupted across markets outside of the hiking cycle is slowly disappearing. With inflation now cooling, the economy normalizing, and the Fed close to ending its hikes, a quarter-point increase today may be another one in a month. The predictability of future rates is much greater than when Powell was urgently orchestrating the largest increase in decades. Wow. So again, today is pricing in 0.7. So it's a little bit under half of like the last 12-month moves that you've gotten. Rice surges to 3-year high as Indian export ban roils market. Rice prices in Asia jumped to the highest level in more than 3 years after top shipper India banned a hefty chunk of its exports, raising concerns of supplies of the food staple around the world. Thai white rice 5%. White rice 5% broken. An Asian benchmark soared $5.72 a ton, the most expensive level since April 2020. According to data from Thai Rice Exporters Association, that's a 7% increase from 2 weeks ago. India's curbs, which apply to shipments of non-basmati white rice, are aimed at controlling domestic prices. The move comes as concerns escalate about the impact on farm supplies of El Nino, soaring temperatures in Europe, and Russia's attack on Ukraine grain facilities. The situation could deteriorate. Thailand, the second biggest exporter, faces widespread drought conditions and has asked growers to reap only one crop this year. The country is also assessing the level of their reserves. And then hedges against the risk of a yen surge hit 4-month high before Bank of Japan. Traders are ramping up protection against the surge in the yen as speculation remains alive that the Bank of Japan may tweak their ultra-loose monetary policy. 1 week reversals for dollar-yen, a gauge that expected direction for that pair over the time frame, fell to the lowest level since early March. That's ahead of the Bank of Japan policy decision on Friday, which comes after the Federal Reserve is expected to point to the end of the tightening cycle. The signal from the option market shows how traders are nervous about the Bank of Japan taking any steps to unwind accommodative policy, a key driver behind the yen weakening to the lowest in almost 8 months against the dollar. Traders remain on edge even after Kazuo Ueda indicated that he will stick with easing as the central bank has some way from hitting the inflation goal. So we need to talk about this today a little bit, Chad. I even have a graphic for you, but essentially you have more people hedging the yen now than when, what's his name, left the last meeting. And even before the guy's first meeting, and this is all just related to what we've been talking about, but they should have squashed that rumor a couple days ago. So it's actually going to get very interesting on Friday. So keep that in mind. But Chatadonia, we still got a little bit more. I even got some more headlines. We even got some earnings recaps here as well. So very, very early. We got a lot of time. S&P futures, they're down 0.1 on Wednesday morning after U.S. equities finished mostly higher on Tuesday, with semis, chemicals, industrials, and builders among the standouts. Dow Jones gained for the 12th straight day. Oh my gosh. You guys know if the Dow goes up today, that's an all-time record. So the Dow has never gone up 13 days in a row, or it has. That's the limit. But we're about to set an all-time record. I think 1987 would be the time. Treasuries are rallying with the curve bull steepening following the recent backup in yields. Dollar index is down 0.2. Gold is up 0.5. Bitcoin futures little change. And WTI crude is down 1%, but still up over 2% on the week. Fed is widely expected to raise rates by 25 basis points today. Powell is not expected to give explicit guidance and likely to maintain hawkish tones, highlighting the 5.62 median dot from June. However, all likely to stress that the Fed is not locked into any decisions regarding near-term policy path and will remain data dependent. Peak Fed flagged a key bullish talking point for risk assets. Signaling effect is dampened by the higher for longer messaging and still elevated inflationary environment. Earnings is the big area of focus outside the Fed. No real change in the favorable secular growth narrative surrounding big tech. AI is still a bright spot, though monetization ramp and capex ramps continue to attract some scrutiny. Optimization of cloud spending expected to continue over the near term, and advertising demand stabilization is another bright spot outside of big tech. Disinflation theme remains evident across multiple industries. Consumer resilience, another common theme in recent weeks, while staffing plays into suggest some of the loosening in the labor market. Microsoft U.S. fourth quarter fiscally widely described as solid, but some focus on capex ramp for AI. Google is standout on acceleration in search and advertising growth. Visa takeaways focused on cross-border strength and slight acceleration in U.S. volume growth in July versus June. Coca-Cola beat and raised organic revenue growth guidance, though left commodity price inflation outlook unchanged. Thermo Fisher missed and cut guidance, citing China and macro headwinds. Texas Instrument beat but guided Q3 below consensus and normal seasonality. AT&T beat and highlighted confidence in free cash flow outlook. Williams-Sonoma missed and guided down, flagging softer renewable energy prices and slower event-driven volumes. That was Waste Management, not Williams-Sonoma. Snap down the big despite solid user growth and focus on profitability headwinds. RHI missed and guided below, flagging macro uncertainty. NBR missed and said drilling weakness expected to continue. Outside of earnings, Impact W and Bank set to merge. Wells Fargo raised dividends and announced a $30 billion stock buyback. Wow. We're not done. Oh, wait, I got pre-market movers too. Just in case. Again, I don't think XPEV's on there. A couple of plays started moving as we started getting ready here. But here are more headlines. Australian inflation slowed more than expected in the second quarter in the second quarter, thanks to falls in cost of domestic holidays and petrol, suggesting less pressure from another hike in interest rates. Japan service PPI in June cools more than anticipated, coming in at 1.2, down from 1.7 in May and below the street's 1.5 forecast. AMP plans to break off some non-core businesses as they prepare to revive Hong Kong IPO. People familiar said they may strip out blockchain database management and overseas units when they apply for financing license in China. An IPO attempt may come after 2024. Bloomberg has said Deutsche Bank bank's fixed income traders outperformed their Wall Street peers in the second quarter, with CFO James von Moltke noting that there was no concentrated or unusual gain. Labor leader Sir Keir Starmer has said NatWest was wrong in their treatment of Nigel Farage and that the chief executive had to resign after the private bank accounts refused the former Brexit Party leader a bank account. Alison Rose stepped up Wednesday after admitting the inaccurate briefing. Joe Lewis, the billionaire real estate investor and owner of Tottenham Hotspur Football, has been charged over multiple alleged instances of insider trading. U.S. prosecutors said on Tuesday the 86-year-old, who is one of Britain's richest men, is accused of tipping off employees, associates, and friends and romantic interest of non-public information. We expect a hike today of 5.2 to 5.5 in the last of the cycle, but on the probability-weighted basis, our Fed views remain more hawkish than market pricing. This reflects lower probability of recession and expectations that the threshold for rate cuts will be fairly high and that cuts will be gradual. We expect cuts to start in 2024, quarter two. That's a weird headline. Governor Ron DeSantis in Florida is sharply cutting the size of his presidential campaign staff, reducing by more than 1/3 a payroll that has swelled to more than 90 people in the first 2 months of candidate, according to 4 people with knowledge. And Bank of California, after the close, said they will purchase PacWest, a deal that is first reported on Wall Street Journal during the trading day on Tuesday. Stockholders will receive 0.6569 of a share of Bank of California. Wow. Oh, wait, XPeng is doing an offering, bro. Bro, all of these things, or they said they're going to give jointly developed 2 B-class BEVs. XPeng will issue Class A ordinary shares, 4.9% of their outstanding shares and capital to Volkswagen at $15 per ADS for approximately $700 million. So, dude, I guess they announced that it was already above 15, right? Yeah. I don't know. It's kind of like the NVIDIA one. So again, they took a stake in it, but instead the company, well, yeah, the NVIDIA one, RXRX, they did the same thing. So they sold shares, but it was at 15. They sold the shares, though, to Volkswagen. Not bad. But Chattadonia, we still got a little bit more. Microsoft reports slower revenue growth in the cloud business. Alphabet revenue tops forecast, indicating Google weathering ad slowdown and affecting other social media firms. Snap revenue at the lower end of estimates amid continued softness in ad demand. FTC finalizing antitrust lawsuit against Amazon, a move that could lead to a breakup of the company. Bank of California and PacWest confirmed merger, announced $400 million equity raise. Meta's Thread launches chronological following. Teamsters say they secured a $30 billion labor deal after UPS blinked. Fed posed to raise interest rates to the highest level in 22 years. Central banks may cut interest rates before inflation goals melt, polls show. Sell side warns of potential Bank of Japan surprise, arguing it may well tweak policy of buying bonds to depress yields. Option prices in ECB rate U-turn after weak data. ECB eyes capital charges for more banks on leveraged finance. RBA rate hike odds after inflation slows by more than expected. China GDP consensus forecast revised down. Markets welcome Xi's acknowledgement of growth headwinds. Japan's June business service inflation slows, suggesting companies remain slow in passing on rising labor. South Korea inflation expectations at 14-month low in July. Consumer sentiment improves. Investors shun U.S. consumer companies particularly exposed to an economic downturn. 7-day average Bitcoin trading volume hits a 30-month low. Senate targets U.S. investment in China and key defense legislation. Beijing replaces its foreign minister following alleged affair as Wang returns. Wow. So Chattadonia, now we get the pre-market movers. I think we're doing good time here. So we have a couple of plays. Like I said, some other things started to move. We've already recapped most of the earnings. So hopefully you've seen that already. But 8.2% UNP management and changes. They also had earnings. Google, again, that was the standout there for big tech. They are currently up 6.4%. Boeing, they still reported losses, but they were better than expected. They're up 3.5 on earnings. Banco Santander up another 3.4 on earnings. KeyBank, they're up 2.8 on a sympathy for the merger of PacW and Bank. Wells Fargo, dividend increase in new $30 billion buyback program. They're up 2.7. Spotify is up 2.6%. They got a Deutsche Bank upgrade after missing on earnings yesterday. Meta is up 2.2 on a Google earnings sympathy and pre-earnings. AT&T is up on earnings 1.6%. Stellantis, they had earnings and CMA updates case timetable. And then Coca-Cola is up 1.2 on earnings. SEMO up 80%. Chinese regulators approve pending acquisition of Max Linear. Tilray is up 13% on earnings. TSEM up 11%. Sympathy to SIMO and MXL deal to approve. VICR up 9.8 on earnings. Dish up 8.7 reportedly to sell premium wireless service on Amazon. Wall is up on the PAC-W merger, 7.1%. Teladoc is up 7% off of earnings. INSM is up 6.3%. Guggenheim initiates buy. And then the rest are earnings. PAC-W merger. TLGA up 7.6%. Shareholders approved previously announced combination with Electric Power. WW is up 7.6%. Morgan Stanley upgrade. That could be off of Teladoc. And Teladoc was pumping the Ozempic too. And then Wolf is up. Oppenheimer downgraded VTNR, but the stock's up 2.3%. Snap is down 17.9% on earnings. WM down 4.9% on earnings. Texas Instrument down 4.9% on earnings. EQNR 4.0% on earnings. Datadog, they're down 3.8% on Microsoft. Snowflake, these are all Microsoft earnings sympathies. And then WNG down 2.8%. CEO steps down immediately. And then Amazon down 1.9% on some of the other stuff. MXL down on the CMO deal, 27%. And then I think that's it. I have a couple plays from there. Otherwise, it should be pretty simple. Again, you got Powell as well. But look at the time. 9:20. We got about 10 minutes till the bell. 5 minutes till the pledge. And we even got some plays here. But let's see. Spotify, Deutsche Bank just raised to buy from hold. So let's see. But I will be right back. Follow me on Instagram. I'm going to go to the bathroom. Get ready to kick off the day, baby. Welcome to Powell and Earnings. I will be right back. Likes for plays. Oh, yeah. Oh, yeah, likes for plays. Amen. Amen. I'll be right back.
Currently, people are just testing this out. So that's really, it's so subscale at this point that, as I said, it's going to take at least a year to 2 years before we see some kind of big usage on the cloud side.
I noticed that both the CEOs of Alphabet and Microsoft in the quotes in the earnings releases, Mandeep, both led with AI. This was from Alphabet CEO Sundar Pichai, who said, our continued leadership in, guess what? AI. Was yesterday just about basic advertising, getting it done for Alphabet?
Yeah, and they talked about their large language model, the new version, Gemini, which they're going to be releasing, a multimodal version of, think of GPT, which is quite popular now. And what Alphabet showed yesterday is they are going all in terms of the AI strategy. The product cadence would improve. And it shows on the search side. I think a lot of people were concerned about the impact of ChatGPT on search volumes. That didn't show up in the results, and you had a nice beat on the search.
If you're a Meta investor, after a run-up of close to 150% year-to-date, Mandeep, did you like what you heard yesterday from the likes of Alphabet?
I liked what I heard from Alphabet, but not so much from Snap. And I feel Snap is a closer competitor to Meta than Alphabet is. And on the social media side, I get the sense it's still the recovery in ad pricing is still in the early stages. So my sense is, look, Meta is going to do great on the free cash flow side.
They're going to do great. Hunter Biden set to plead guilty on criminal tax charges. CNBC. And Deutsche Bank raises target price to 140 from 125 on Google. They just upgraded Spotify and Alphabet, and then Hunter just pleaded guilty on criminal tax charges. Yeah, there's a bunch of Biden stuff coming out now, I think. There was something about, they've been doing, I have one clip, actually, of Mr. Now, did you call him, did you say Republicanism is a virus? Is that what you said? He has a good video. Okay, now time to get to the place, Chatadonia. And I yield back. Thank you. So, Chatadonia, let's go, baby. We only got a couple of minutes. Drop it in there. You've already heard them. Get ready for Powell Day. You got the earnings. You're already seeing how the earnings are unfolding. What is your first play of the day, Chatadonia? Let's go. Put that in the chat, baby. Put that in the chat. Let's go. What do we got? First play of the day. First play of the day. Origin, earnings, 8.9. Solar names guiding down. Good morning, Chad. Microsoft flip shares. Let's go. TLT, Pound Town, baby, on the like button. Nike calls, long TTO, NVIDIA calls, BSGM shares, long-term deposits, Google, WorldCom stock, TLT calls, Tesla, WorldCom or WorldCoin, sitting on hands, holding RTX call from yesterday, short the bonds, vacation over, back in the game, INFY, Coca-Cola calls, Dish, MODG, 22.5, PayPal, Teladoc, January 19, Intel put, Baba put, SPY call, credit spreads, watching Pfizer, sitting on hands, REBN, closing snap short, long NQ, watching Teladoc, Tilray, Bitcoin, Lon, SQQ, PayPal calls, Meta put, World Star Coin, Enphase, Tilray, YOLO, PAC-W, sell Microsoft and Google puts, RCEY for long term, Teladoc 25, not trading on FOMC, buying Palantir, Tesla 277.5, 84, Amex, Para, LT, scalping, Dish shares, long TQQ, SPY, 446 put, bought pre-market, ESES, Boeing put, spreads. Powell calls Google from yesterday. We did it. We made it. Buying not. Neo shares. UPS. Airbnb. YCL puts maybe. Banks and comp puts. The Bears awake. Apple puts. Short coin. Impeachment is starting. End phase down. Apple puts. Sitting on my hands. Spot calls. Mara calls. Meta crushes 400. Dutch bows for the long term. What's going on with bank? Apple call. Apple call. Miami. And the final play. Boeing puts. Wow. That's bold. That's bold. So, Chad, we don't have much time. I only got a couple of plays here. Again, Bank from yesterday. That play is already up. We're going to hear about the regionals, I think, even into next week. Meta, we're still in those plays. I think Snap and Google kind of heightened it up. So, let's see if the option chain wakes up. Boeing, they had good earnings. It's either going to continue or it's going to reverse. So, that could be good. Also, UNP, another good earnings. Wells Fargo buyback news I like. Then we're in the Teladoc play. And then that CMO Max line deal. Just watch out for that. Again, CMO's already up 80%. And then YCL in the 2-year bond, baby. That's it. Yen in 2 year on Fed Powell, and then Bank of Japan, baby. Oh man, no, the call did not happen on Boeing. That's the thing. So let's see, baby. Are you ready? Are you ready, Chad? Because today's a big day. Again, earnings in Powell. But here at the Cult, my friends, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even their families. I hope you know you're appreciated, and I just want to say thank you, and I hope you know there are thousands of other people every day who agree with me. So thank you, thank you, thank you. We love you, and I encourage you all to show that appreciation. And big shout out to anybody else out there helping out their local communities. All the doctors, nurses, teachers, firefighters, public servants, police officers, janitors, coaches, garbage men. If you helping out, man, God bless you and keep it up. We appreciate you too. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senators! Oh, it's game time, baby. Or nah. Let's go, Chad. Oh, it's game time. That's it, Powell. We got to burn 4 hours, and then it's Powell, okay? 4 or 5 hours, then it's Powell. Then you get 2 hours to close the day. So then we're seeing. Then it's Meta, and then it's the Lizard Man, bro. Oh, my goodness. So, Chad, I hope you're ready. Again, a lot of different plays, a lot of different pre-earnings plays. So yesterday, if you were here, we were calling them all out. I would keep an eye out on all of the post-earnings plays. So you're going to have things to go after if you want to, but it should be exciting here. Wait till Euro close. We got a couple of things going on. Again, I think the yen and the euro kind of moved a little bit, but that's it. I'm going to hold bank for a little bit. Let's see how it plays out. I mean, we got like 17%, or we did. So let's see how people take it on the first like trading day. But I like it. Teladoc, I don't think the contracts are going to go up too much, but we'll see what happens. And then that's it. They were pumping Ozempic, so it didn't work too much, but good enough, 7%. We'll see what happens. So, Chad, we got about a minute and 30 seconds, and then we got 4 hours till Powell. So drop your thumbs up on the video. It'll be worth it. Trust me, the thumbs up, they could be redeemed for quality information, and we love you. So God bless you. So hit that thumbs up, and let's get it. Just make sure you're subscribed. If you have any questions, let me know. Again, we're going to have Powell live up on here. And anything else in the meantime, there shouldn't be any breaking news. So we will see what happens. Coca-Cola private label switching is principally seen firstly in Europe and then coming into the U.S. Snap, Goldman cuts price target to 7 from 8. Check SEMO. Yeah, there's another one. So SEMO is related here. Look at this one. They're the one who's like merging with them. There's like 3 SEMO sympathy plays. So look at MXL. That's the other one. And then where's the other? There's one with SEMO. And then TSEM. So TSEM and then MXL. I'd watch those if you want to look in. And that play's already up 80. Again, China's confirming or allowing them to do a buyout. And then watch some of the China stuff, but we didn't do too crazy. or there wasn't too crazy of news there on it today. So, Chad, get ready. 15 seconds. Like that video. Good morning, Mr. Garcia. And let's go. Would I buy Snap at this price for a flip? Not for a flip, but, if there's a little... Like I was telling you what price I would buy it at after it went up. So, if it did come back there, I'd like that. Round 1. Fight. Ba-da-ba-ba-bop. Yeah, so I think the teledocs, they have not moved yet. So give it a couple seconds there. But like I said, that's kind of what I was expecting. XPEV is up 14% again. Volkswagen's buying in at $15. That's where they started off in the morning. So keep that in mind. Again, Boeing, Coca-Cola, those are your other post earnings here on the day. Damn, Google 52-week high. I forgot. Google is the leader. Yeah, Google already at 130. Again, I have a play on AMD from after hours yesterday, and they're getting squashed right now. I may average, but the idea is we want to hear more about AI chip spend from these companies. So we're going to see. Again, ironically enough, this shouldn't happen, but your yen play is in the green. That's kind of weird. So again, that hedging pressure is coming back. Let's see, AMD, Boeing, 3.92. Google's up 7%. So if Google is going to be the leader today, it's either going to stay in the range, or if it wants to lead, he's going to have to break out. Microsoft down 2.8. So Microsoft was actually below expectations, but they were just the softest one out of all of them. Tesla's up 0.5. Again, Meta, still to report. Meta's up 1.9 again off of the sympathy. NQ switch gears. Teladoc price update. Oh, there you go. They did go up, but I guess they're up almost 100%. Not bad. They went up to 50 cents from 30. And then even the out-of-the-money ones went up a little bit. PacWest jumps 28. I forgot about Bank. Again, Google, Microsoft, watch out for those. You got AMD shares this high for the flip? Yeah, 100%. Because it is high, but it's lower than any of the other flips. So remember, after NVIDIA earnings, I flipped it from 115 to 120. And even a little higher. And then our last flip that we made money on was in the 120s. So coming into it, they're chilling at like their last NVIDIA earnings level. So I think there's a lot of risk with it, but it is the lowest AMD price flip I've had in a couple of weeks. NQ low, Netflix dump. Microsoft shares down 2.3. Bank is still going. It was up a lot more post-market. I think it hit as high as 16. And then Netflix is down. And then SPY's even red. So even NASDAQ down point. Everything's actually green. So if Dow goes up today, that'll be a record. So we'll find out. Zion's on the high. It looks like regionals. Visa's coming up. They were down already like 2% earlier. Yeah, Snap 10. See if he goes back to $9 or $8. But again, I think it was boring. It sucked. Boring. Just Snapchat. Nothing there. Airbnb 0.5. And then where's the value? Google's selling off now. So Google gave up like 1% right there. Where's the other one? MXL. Communication leading, tech loser. XPEV. Yeah, China names. I think XPEV is in its own league there. NEO might move, but again, there was a Volkswagen investment. Volkswagen's investing into XPEV at $15 a share on $700 million. Eli Lilly, UBS raises price target. FedEx is on the high. Bank is at 15. Jerome is at 2:30 p.m. Eastern. FedEx is going up again. You had all the Teamster stuff. China names are moving. Baba's on the high now. So watch if that gives up. Microsoft flushing 3.2. And then they're 2.3 down on AMD. That's getting murdered. Yeah, so tech is it. I mean, again, this is your first tech day besides yesterday, but I think you got a little recovery yesterday. So we'll find out. It started off weak in the morning. Pfizer, UBS cuts price target to 38 from 39. Teledank. They're already coming down again, so the premiums are chilling out from the morning. But like I told you, expect this one to move slow. We'll see where it ends up. SPY just hit a new low of the day. It's very, very small, though. We're still within like half a point range, not even 0.4. MPW vertical. We haven't seen MPW in a while. He's been kind of just chilling. We need him, he needs to get like excited. Well, actually, regional banks are running, right? Yeah, that'll be it. SEMO is China approved to buy MXL. So MXL is down 27. And then again, what was the other one? TSEM? Tower Semi. This is a sympathy. Again, they're only up 10%. But tower plays have been getting murdered. So I don't know if you're into that. Pricing in the FOMC pop. Well, remember, today's FOMC is pricing in the least amount of any of them. So right now we're only pricing in 0.75. Yeah, 3M at 111 is actually kind of big. Even Walgreens is climbing up right now. Disney pop. I haven't heard that in a while. You have to get above 88. Again, AMD at the low, 110. Okay, I added 100 more AMD, 11040. Oh, wait, I was supposed to tell you. Did you like the video? Oh, that was free, bro. That was free. That was free. Teladoc ripping now. We'll see. Again, the contracts are coming down, but that's give it some time. $3M is going crazy. Dude, 111 is fantastic. Microsoft still going lower, though. AVBC vertical. We'll see. Rivian's on the high. Again, I just bought into AMD, and we'll see what happens with that. Rivian, ABVC. Rivian has a nice pop there. ABVC up 57%. There we go. Where's Tesla? Tesla's down 1. Again, Microsoft's going down. Hilton, I forgot. Hilton earnings. I forgot to check up on that. Airbnb back up. Microsoft keeps flushing. And Bradley Frizzle keeps arriving, baby. Oh, man. Bradley Frizzle in the Peach, ladies and gentlemen. Peach Nation, get up. Oh, that's what I'm talking. Oh, Powell Day. Amen. Yes, Boeing is strong. Again, Boeing's off earnings. XPEV's going up here. One more. And then the damn Peach just showed up, baby. Oh, man, and SPY's right at the opening. Bonds have been giving up since the morning. NVIDIA now is on the low. Meta's on the low now, too. Yeah, Meta's giving up about 1%. My goodness. And then Teladoc 11%. Your contracts are the same price, so just I hope you vibe, baby. I hope you vibe. M-Phase popping. Have we sold off leading into Powell Day? A couple of times. I mean, that's not the story of today. The story is just how small it's been priced in. Again, pretty much over the last 7 months, out of all of the Fed meetings, there's only been one like Fed meeting where we moved like more than 1.5%, and that was in February. Other than that, dude, the Fed events have died. That's what I read you this morning, and everyone's just talking about how the SPX is only pricing in 0.75. Now, I will tell you this, Boeing 52-week high. But the thing about that is that maybe this environment is where we get surprised. That's the only thing I could think of. But other than that, you know, we're talking the smallest expected move in a very long time. JD's on the high again. China plays are running it here. XPEV just kept going. 1860. Pack W on the high now. Oh my good. Damn, they're up 30. Where's Bank? Baba again. Bank's still holding 15. Wells Fargo's up 2.5. I forgot about that. The buyback news. Ryan Cohen mentioned connection to Hanesbrand being an activist target. Haha. Yeah, good luck. You could run up on it, but HBI's running. Now you got Mr. Cohen. He's taking our sloppies, bro. That's nuts. But yeah, they're moving on that. 5.5%. Be careful. I'm not going to buy it. But you might be able to flip that. Teladoc play going crazy. Yeah, if y'all like that play, good. I don't like it. I like the contract, but it's doing exactly what I thought it would do. You're up, but then again, Teladoc has moved crazy in the last couple of weeks. But you're just going straight vertical, and the contracts have been the same price for the last like 10 minutes now. Meta shot up because of Google. Again, Google, the ad stabilization was a very big theme. So that's why like Snapchat was just boring. In Snapchat, they missed on their guidance, but even like Snapchat, they were profitability and other things, but nobody saw any bad signs with advertising. So even though Snap sucks, it's not leading people to think that advertising is doing bad. Google came in good. As long as Meta does good, we're fine. TSEM running, that's the one related to SEMO. That's already went up 3%. I was showing you guys that at the bottom. Enphase is chilling up there. Why is Dish halted? It could be related to the news. Teladoc keeps going. So we'll see when those contracts start to juice. Yeah, HBI activist news related to Ryan Cohen. So again, just be careful. I mean, I think didn't we buy it lower than this price with the dividend? So that's why I just be cautious. I'll put it out on a stream alert, but just flips on that. No long term. Peaches, 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 peaches. Hey, man. You talk about FOMC scenarios. No. There's only a couple. It just, nothing should happen today. So if you haven't been watching the watch list, I mean, I'm telling you, most people are just like, most people know what's going to happen today. So maybe we do get a surprise. The only other scenario is that Powell flips the whole entire script. Other than that, it's just literally about 25, what it does to the Fed futures on the next months. Powell is going to defend the SEP, and maybe he leaves room or shoots it down, but nothing should happen today, believe it or not. So like I'm saying, not only are we pricing in a small amount, but also it's just like we have a smaller amount of just volatility that we're expecting, or even scenarios we could go from here. That's why that thing I read in the morning was just explaining, with so much data, so much Powell, and just a lot more certainty on rates moving forward, the scenarios are very, very limited. Graham, bonds coming down, baby. Yeah, so we're going to watch. They're going to move there throughout the day. I'm sure of it. They had a little bit of a bid, but there's not enough cushion. China names are keep going. Teladoc is running through the high. NIO's going. Tesla's even on the high. NIO's actually popping. So NIO's going up. XPEV is the one leading the way. Check Microsoft and Google. Google hasn't popped yet. AMD still down. Okay, now it's moving a little bit. Roblo now green. Adding more Fubo. You're getting a lot of moves. Bonds are selling off. SPY's going up, but I'm seeing like China and hype plays moving good. Again, communications, I believe, are doing great. I don't think energy's too bad, but it's still in the red. Yeah, chips are doing it. HBI. Yeah, so that's Ryan Cohen, activist news. So that's probably going to keep running until it doesn't. JPM on the low. Interesting. Because Wells Fargo even gave up. They had good news. Again, regionals are doing great. XPEV one more time. Yep. Tessie, even Airbnb about to go 150. But Tesla was at the low, down like 1%, then they just woke up. Amazon's now moving up. Was that Micron? Square on the high too. Are Teladoc options break even? No, they're up, but it's not like, they're just not exciting. So the one set of options went from 15 cents to 21 cents. And the other options went from 38 cents to 52 cents. 50 to 52. It just depends, but that's not exciting. That's why we'll give it time and hopefully let it work. Dish Corp resumed trading. Yeah, Boeing is the highest since January. Netflix 420. Dish sold off. Square's going up. Again, Square's barely green. It looks like it made a big move. So even PayPal's red. Visa, Baidu now. China names nonstop, man. Baidu's at 150. NSP, what about UNP? UNP's up 10% after earnings. Google's still holding. Again, that's the good one. SPY's going up. So Dow is back to green. Day number 13 if that holds, but SPY's only down 0.09, and then NASDAQ's down a quarter right here. Seems like a lot of the smaller caps are running. I'm seeing a couple of travel, Caesars, Hilton. They're coming off Hilton earnings. Then any winners like UNP and Boeing, they keep going. And then I think Coca-Cola might be the only one that's not ripping. It's coming up now, but it's still red. And then Amazon got woken up. Teladoc. Yeah, it's cool. They hate us. So how much would we have made on there? So pretty much, I guess if you did shares, you would have made $3 a share, maybe a little bit more. And then the option, you have just under 100%, or not even, under 50. Coin back to 100. MPW might climb up here. Again, watch some of those travel names. Where's Uber? Uber's even coming up. XPEV one more time. Ralph Lauren on the high. Interesting considering LVMH. Even Nordstrom's retailers are actually going up here. And then Boeing, 220. Watch 230. 230 to 235 on Boeing starts to get real. I didn't roll over that Uber yet. When do they report? Uber's not this week, right? I just got to do Redfin and Uber before they report if we want to do that. HBI, second round of highs, 536 now. So 12%. No divvy, but he's running. Roblo, still 39. He was just at 47. 3M, dude, about to hit 112. Uber's next week, so yeah, we'll deal with that then. There you go, 30M, Habibi. So 112, this is good. It opens up the door to like 117, and then back to the lows of 2022 in the beginning of the year. I like Lyft at a low enough price. I like Lyft for parts, but I wouldn't buy Lyft at a premium. However, I think you could supplement Lyft in the portfolio if you get it at a low enough price. U.S. Treasury Shamba says U.S. will not hesitate to take our actions against China to protect national security. Netflix on the low, 418. Again, values are still doing their thing. Dow is going back and forth, though, between positive and negative. Rivian and Amazon still on the high, even though you're getting a red candle back to VWAP in opening. SEMO is China approval to buy MXL. TSEM is the sympathy that would benefit off of it. So just be careful, though. It's moved. Again, they're up. MXL's down 20. SEMO's up 80. And then even TSEM was up 9 to 12. Apple's on the low. Interesting. Let's see, Banks. XLF's holding. Bank is coming up there, too, with even a PAC-W. XPEV's on the high one more time. That's nonstop. ABVC, you guys were calling that one, too. That's making another high. Yeah, and XPEV is nuts. Again, Apple, too. Apple's like right at the bottom. And then AMD popped and locked. They're right back to, I think that's right where I got them. Today's crazy, yeah. I mean, we're getting some action. We'll see by Euro close. This is kind of how yesterday morning felt, but just middle of the day, it'll go into Powell mode, and then before we know it, we're going to be riding with everything else. We're going to be riding with the rest of the earnings after the bell. Tesla is going. That's a red to green by like 1.5%. Yeah, MPW. I mean, again, MPW has held the high prices, but it's been pretty void of like, I guess it kind of looks squeezy. I guess I'm just a greedy bastard, but it's now gotten back up to, I think this was post-earnings or when their drama started happening. And then again, their earnings will be huge. Kohl's, the bonds, yeah, they just flipped. It's fine though, because that could be the cushion. Keep in mind, like just on some of the Fed days, usually they like this, at pre-market level where it opened up, it'll be a threshold. So just watch out for it, but definitely unwinding there from the open. Google just gapped up and then it's holding again. Google is a behemoth. It might continue, but it's up 7%. And it's, again, one of the largest companies in the world. Is MPW earnings tomorrow? Oh, shit. No, I see August 2nd. Oof. I was like, what? That's next Wednesday. I'm pretty sure. Unless they changed it. I wouldn't be surprised. I haven't checked the other calendar. It's possible. But just because, again, TD has been wrong a couple of times here. UMP was good, but I don't know if I'd buy it here up 10%. Las Vegas Sands upgraded to investment grade by S&P. XPEV again. I think if XPEV comes down to like 15 to 17, you go for it, but I think it's too late. We had that from pre-market too, but that's running. PayPal's on the high. New, again, fertilizer plays. There's MPW. Again, watch Airbnb. XPEV's going nuts, and Rivian was popping too. Teladoc final. Teladoc's been moving all day. We're just getting cucked. But it's good though. We're gonna get cucked today, but in the long term, hopefully this pays us off the back end. I mean, the short interest isn't too high on Teladoc. It's like 18%. But you know what I'm saying? If we get the break, just let it do that. What's it called? Let it do the upstart thing, and we'll be good. HBI does not pay a dividend. Do not be fooled. So they cut their dividend, even if it says it pays one. That's why we got out of it. So remember, we bought HBI a while ago. We made a good profit on it, but we sold them out of our long term once they cut their dividend. So today, Ryan Cohen is talking activist investors on HBI. That's why it's up 12%. But if anything, just don't be fooled by a non-existent dividend. The cuck is the price you pay to be. It is, honestly. So again, I wasn't expecting Teladoc to go crazy on the option, but it'll do its thing. So it's working where we want it to, but yeah, it has to go nuts. I'm still in AMD. Yeah, why would I not be holding? So this is a pre-earnings play. I was playing it relating to the news. I hope Amazon comes up with it. Again, Microsoft lowered guidance on cloud, but they said they were going to raise CapEx. So they kind of got a benefit there. But I'm going to play this till earnings as a pre-earnings play. Yeah, Teladoc, another high, 17%. UBS raises price target on Google to 138 from 132. I think Meta is going to be, I kind of want to play Meta right now just because of Google. So I don't want it to stay pinned like Google, but so far, again, Snapchat didn't even scare me in terms of the industry. So I'm not really, I think ads are good. Honestly, I don't, but then my only problem is Meta's up a lot. And then we're going to see what they do. I have a Meta put right now. That's the only one, but I'm liable to get out of that before close. Bro, Teladoc again. I just keep seeing on the high ticker. Meta going crazy. AT&T died. They had good earnings. And then SPY's right at VWAP, bonds off the low, Sava and RTX on the low right now. Mobileye on the high. Oh, yeah, where's Intel? I forgot about Intel. I forgot, actually, you know. Where are we at on that one? Only 63. I had like 200 on it, yes. I'm going to sell that one, though. All right, took profits on one of the chip plays. The Intel play, it depends on the likes, sir. See what I'm saying? Oh, you guys are close, though. You're very close. So that's why. But the like in the video should ease up any confusion. Google insane. It hasn't moved, though, today. I mean, again, it had that first little pop and then chill, unless it breaks out, actually, which it's about to. So if it does, if you get like a 7% move and then keep going crazy, that's where it starts to get nuttier. RTX price targets raised. Yeah, that's off of yesterday. I think they were kind of just in that weird, they were both like cheap and still holding a premium. I was chilling. Am I going to ride out the meta put? I don't know. So I closed out my Google and Microsoft yesterday, but if there's no premium on the meta put and I have enough money to take out and walk away with, like, if I could walk away with $200, I'm going to cut it for a loss. So remember, I put $300 each on all of them. Yesterday, I got back my Google with $200. If I'm only down like $100, I'll close it. If I lose 90%, I'll hold it till the play. There's no point to take the profit. So just depends where I'm at. Tesla bounce. Tilray again. Tilray had earnings, I'm pretty sure. McDonald puts up 7.5. Oh, McDonald's I think is tomorrow. And then Chipotle's today. BA again, that 330 or 230 leading into like 237. It's supposed to go nuts from here. ANET down. ANET is off of Microsoft. So they're cloud. So last night when Microsoft, again, what happened with Microsoft, if you didn't see it, literally it was on the watch list. It was like live. You could see how the chart was moving. But yesterday, Microsoft gave out their guidance right here. And what they said, they were like, yo, we're going to be spending a little bit more money, but we think it's going to, you know, we think cloud is going to expand. And they started sounding good. And then they came out and just said Azure is going to be the same growth. It was like 24 to 26%, which was lower. And then people didn't like that. And then all the cloud companies, Amazon, ANET, anybody who offers cloud, Microsoft just came in with lower cloud guidance. So they all got wrecked. And then the chips went up because they were saying we're going to spend money on CapEx and spending. So people are like, oh, that's to catch up with chips. But then, this is what I was saying yesterday. If you go to Google, do you realize Google's earnings kind of disproved some of the AI hype? I don't know if you guys heard this yet, but essentially Google cut their full year expenses, their CapEx, by like $2 billion. And that led some people to say, well, wait a minute. if there's supposed to be like an AI gold rush right now, how come Google is cutting expenses by 30%? Right? But then Microsoft said they're raising expenses for AI. So that's kind of just that's the issue people are debating today. And that is why ANET is down too. So Google's about to break out here. Pinduoduo, China names on the high. Thoughts on Teladoc? I mean, we have our play. I like that play. I think it has potential. I thought the play would go negative before it went positive, so maybe that needs to happen. But for right now, we're just under 100%, I think. But I think it could do its thing. I like the contract. I don't really care about the play. Bank. Kuti again. We got rid of that one. FedEx killing it. Yeah. Again, UBS raises Alphabet's price target. Teladoc about to go to 27. Datadog, that one's related to Microsoft. See, they're down too. That one's like ANET. Where is it? AMD. AMD is just holding, believe it or not. How's Staples doing? Staples are down. Technology is down by 1%. NASDAQ 0.03. Dow's red 0.09. SPY 0.13. Regionals are the only thing up. Again, or Russell 2000 because of those banks. Enphase clobbered. Don't they have earnings? FedEx moving up again and DoorDash. So Roblo is in the green. DoorDash and FedEx and Mara now. MXL is moving. So MXL, this is the sympathy to SEMO. Isn't Google already AI? That's why they don't need to report any more spending. It could be, but it just compared to, again, like the NVIDIA and expectations and even Microsoft, people are just concerned. And then the issue people had with the AI stuff was, remember, we thought Google was going to fall behind. Now, granted, today's or yesterday's earnings with Google, why they're up so much, it showed no sign of their search business dying. So again, even YouTube stabilized, but YouTube was still at like a lower target, but it all stabilized. So I think that was more kind of the focus. But, you know, some people were scratching their heads over kind of their future into the AI. Remember, everyone thinks Google is the one that's lagging behind it. Oh, yeah, Calhoun. I forgot about that. Is it 8? Or in like 30 minutes or like an hour and 3 minutes? You're going to get Boeing conference call. And then he starts screaming, and then shit starts moving. MP Dubs holding. And then bonds at the low of the day. The Russell is up. The Russell is up, bro. Disney. No, Microsoft ain't doing anything. Microsoft's at least stayed stable. Google is trying to go to 131. If Google breaks out here, it's going to be an 8 to 10% day for them. Airbnb 149. Unity is going up. Remember, Unity and AI were running Party City. Sound on the high. HBI came back down. Mara, again, those crypto plays. SoundHound's finally running up. But again, crypto's starting to wake up. Tesla now too. Another high on Teladoc. Okay, now the Teladocs are creeping. So Teladoc, you got 60 cents off at 38. I still think they're scammers. Let's see. Oh, wow. These got a lot of volume today, too. But 40% from yesterday. But they're still babies, you know? So, again, this contract, I mean, what? At the beginning of the quarter was like 500% higher. And then AMD starting to break a little bit. And then now Baba, too, and Roku. Roku actually printing a couple of times. Lucid Sympathy, again. Watch the XPEV and Rivian. Roku's going straight up. $72. And then XPEF 35%. My goodness. I don't think Google's numbers are worthy of 8%. They remember Google was believe it or not the one struggling the most. I don't know if it was 8%, but granted, if you heard me talking yesterday ahead of it, I was just saying, I was like, YouTube sucks. YouTube is struggling. People were trying to disagree with me on that. Again, their ad revenue and like the stabilization of the ad market was a problem. So that's what I think is the big driver today, is that their earnings it's stabilized. That's it now. Fine. Again, I think they were the last one to stabilize out of all the big tech. So that's the only thing I could chalk it up to. U.S. new home sales, 697,000. Estimate was 725. Not bad. Not bad. Your first, I guess there was a miss on other real estate data earlier, but negative real estate data. So again, new home sales, they just came in below. I don't know. It was supposed to, dude, it was last month came in 12. It was expected to drop 4. I want it low, but it came in just slightly lower. Well, this has nothing to do with prices. So this is just the activities and sales. So yesterday was prices, I believe. Yeah, and house prices went up 0.7 month over month yesterday. So that was the house price index. So U.S. new home sales down 8. Expectation was down 5. So yeah, real estate came in a little worse than expected on new builds. I'd say that's a positive, honestly. Where do you go? Data? You go to tradingeconomics.com for economic data. It's clutch. I don't think you'll be that, like this website. I've been showing it to you on the watch list. Again, I got banned from Bloomberg, so everything I show you here everything's accessible. You don't need any money. You don't need to buy it. It's, again, that data just came out within 10 seconds. You'll get it all up there, and then Josh is always here for you too. Yeah, Forex Factory has a decent calendar too. Why are you banned from Bloomberg? You should ask them. Bloomberg clap me? Oh, yeah, you guys. That's why you guys need to watch the watch list. You got to like the video. This is old news, man. We've been running it without them for a minute now. So I don't know, man. Are you guys there? Y'all do it good. You like the video? Did you like the video? I hope you liked the video. Hey, man. The home builders, they went crazy there. Happy to hear why that I'm still fucked up on, bro. My shit is messed up. Even today, I'm getting messed up every single day. There was a Microsoft update and it fucked my shit up. I've been trying to go back on it. Oh, it's here. Father Edgar had many sons. How many sons have Father Edgar? You guys hear it? I am one of them, and so are you. So let's just praise the Lord. Edgar, rate heist. Father Edgar, how many sons? How many sons have Father Edgar? I am one of them, and so are you. So let's just hit the horn. Let's go, baby. Oh, my goodness. Oh, my goodness. Oh, my goodness. God bless you, Edgar. Hey, man, thank you. Are you on Fed Day? Let's go. Father Edgar. I love it. God bless you. Hey, man, bank is down. Oh, no. Again, Pac W is the one that... Pac W, we saw it at 8, but that 24 is kind of deceptive on there. Bank is down. Again, we're at 14, but now they're red on the day. That's the first time. Watch if KRE goes down, though. So if regional starts slipping up, even ahead of Powell, that could be funny and scary and sad. Pinduoduo, China name still going up there, too. And then SPY's coming down. You're back to the opening candles here. Couple of things are holding. And then Teladoc still at the candle. ARBB on the low. Ramp. XLF is sneaky. It is. Because, again, the regionals, that whole PAC-W thing is skewing everything. So just watch out for it. But it's definitely, not all the banks are doing good. And then, Goldman just keeps dumping here. I think JP Morgan gave up a gain, too. So it's regionals and a couple of the other ones holding us up. You just got done picking peaches. Peaches. What are we doing? Teledoc? It's the same. So I think everything I told you yesterday played out. I think the contract's moving slow. So you do what you want. I mean, that's it. This is why a lot of the time I tell you guys to just don't ask me on it, in the sense that the main mission is done. You got to play. You got it right before it hit. You got it at a low price. You got a minimum 30 to 50% depending on when you bought it. So I'm going to hold mine. I think it's going to have some time, but I've been always telling you guys, look at your accounts. If your account needs a win, if you need that cash, take it. But I'm going to think it's going to take some time here. So overall, it's going to be a slow mover. If Teladoc slips, if it's slow to gain premium, it'll probably lose that premium pretty quickly. So make your decision on there, but it's doing what we expected. Moved in the direction, moved slow, and then that's it. And if it really is going to turn into 1,000% play, it's going to take time. So if you don't want to push it, you don't want to take that risk, you can't afford to take that risk, you could sell out a little bit or sell out all of it and walk away with the bag and then maybe try to double dip. The one thing that didn't happen is that I thought this would go down in value. I thought, so like the upstart, when we played the upstart, it went negative or it went to break even the next day. So that's the only thing that didn't happen with this play that I'm waiting for. Powell Day, XRP Day. Rivian's on the high. I don't know. Maybe he'll talk about it. MXL's going up there too. When should you walk away from bank? If you don't have a plan to kind of push it there, my plan was just really ride it out through the end of the month and hold it for like 30 days, see what they do with it. Or if I get like 30, 40%, I'll take it. But in this case, it's like it's going to be a risky bank gamble. So honestly, this is my first risky bank gamble I've made since FRC. So you got to be a little bit cautious in that sense. So getting in or getting out it's going to be it's going to move 10, 15%. Should I buy more when it dips? That's up to you. I mean, I'm at my 200 shares. Given the confusing nature, I wanted to buy more initially, but I'm just going to keep my 200 share position. But I don't know what risk management you rocking with, bro. It got above 16 yesterday, yeah. I still like that FRC play. I did too. I stopped gambling on it. I got tired of it. I got tired of all of the banks up, down, only to be up, playing the back and forth. It was just, and even the news. I thought bank yesterday, dude, the news, I'm even like I don't know. It's going down and it went up and it went down and it did all that. But like, dude, like the way I was looking at, how did they get away with that? You realize they did everything yesterday? They announced the sale, a merger, and sale of the company, merger, asset sales, and they announced numbers that were lower. They did every single red flag all in one day, all in one event, and then the stock dropped and then went up 30%. And then now it's back to where it all started. But that was kind of crazy. That was the most shocking part about all of it, is that they did everything. Everything we saw in the regional so far, they combined it all in one event. So it's surprisingly stable, though, today, when it's all said and done. This is E-Trade Pro. If you see anything else, this is usually TD Ameritrade. Wait, do I not have lines up here? I was like, yeah, we're just no man's land. 4,580. We hit a new high yesterday. Spotify's going. Remember, they had bad earnings yesterday. Then they got a bunch of upgrades. And then AMD up $1 almost off of that buy, so that's good. But we're still down on the first shares. Lucid, does negative earnings since establishment affect you? I don't believe in Teladoc like it's a long-term play. So it's not. It's a shitty company. Again, there's actually a lot of shitty companies. I mean, to give you an idea, I don't know. Everybody likes to talk about like tech. Again, I'm just saying this in the sense that the Teladoc play, don't try to marry it. It's just, we're just dating, not even dating, I wouldn't even call it that. So just keep that in mind. But what was I saying before that? There was another part to it. I just blanked. Neo rumor, Mercedes. I think that's true. But I don't know if how big it was on them. Again, XPEV was the one with the other guys. Teledoc. No, it wasn't related. That threw me off. You think Teledoc will short squeeze? It could, but it's not. I mean, I want you to learn from the option trade of it, and that's it. The chain had an opportunity. I'm doing what I've done for decades, is trying to find inefficiencies. That was an option that should be inefficient, and let's see what happens. But at the end of the day, I do like where we're at on it. I wasn't expecting a lot, and I think it's going to move very slow and cuck people like it did on any other play that's hit big like that. So I just think it's coming down to, I think now you hit the play, you have an opportunity to reduce your risk and still play it. That you need to make that decision. Otherwise, or you get out. Otherwise, you go from there and put the sales up. Yash reiterates neutral Teledoc target to 28. There's it. Bonds are climbing up. Bank. I want to see something else. You think Snap will fall sub 10? Yeah, it can. But there's certain prices I start to like it that I've learned from last time. I get my peach on Monday, baby. Amen. Deutsche Bank now expects Bank of England to deliver 225 hikes in August versus 50 expected earlier. There's 2 p.m. Powell. Powell, FOMC 2:30 for Powell. And yes, the title is the date of and time of Powell. Yes, that's factual. Again, where's the yen? Dude, the yen plays up. That's fucking weird. So we need to, I already showed you that, but maybe remind me like a little bit, like an hour, we'll talk about the yen. Because the yen, dude, people are tweaking out. You guys realize the yen play, when we went negative on it after they said no tweak, the yen should have died. So now if you like I'm telling you, just the back and forth. I don't want you to be too tinfoil about it, but I think it's a risk reward. That's why the speculators are doing it. But I'm just saying, like, even though you're watching everybody with their opinion on the yen, the yen should be weaker right now if that was the case. But it seems like it's the Frankenstein effect is kind of coming to life. Yeah, Powell on future hikes, that will be the X factor. He shouldn't say anything, but that will be the X factor. Bro, all right, for real, was that stuck in your head yesterday? Because I love that song. Was anybody else out there just like, loading up my F-350, I don't drive a fucking EV? Anybody? Was that just me singing that last night? I don't know about you, man. I was singing it. Yeah, I hope I didn't mess you up, bro. Negative? Okay, Tyree is immune. You think just me? Okay. You know what? It was me and Adrian. Adrian, I think that's just you and me, bro. Honestly. I thought it was more of us, but I just, off of first looks, it seems like we are a minority there. He didn't say data dependent. He might say it a lot, but he's probably not going to say anything. I'm expecting him to use whatever words he uses to say nothing, but then again, it's like I do want to. I love it. I'm a lover of this logic, and the logic is the meetings where nobody expects anything. It kind of raises the event risk in a weird way. But so pretty much the event risk is so low that I think it starts to give it event risk. Does that make sense? So I am not expecting anything. Not anything at all. Today should be very straightforward. It should be clear-cut. Your president or your Fed chair is on a mission to avoid every question that has an answer that you want. So that's what I believe. You know what I'm saying? So I think he's going to, that's exactly what I think is going to be going down there. But other than that, we're going to have to find out. It's like if the fact that nothing should happen in a weird way increases the risk that something should happen. So that's what we're going to be waiting on. Yeah, Teledoc nonstop. Now the spreads are starting to go nuts. Well, what happened? Wait, why did the chat stop working? Are you guys here? Can you guys hear me? Yo, what's happening? Wait, can anybody hear me? You hear me on Twitch? I don't see my YouTube chat isn't working. I don't see anybody typing in the YouTube chat. Yeah, YouTube chat broken. Yeah, that's crazy because you guys can't even complain. Oh, there it is. Whoa, 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 whoa. Yeah, what the fuck, YouTube? Like, you guys don't think it's weird that we do this every day? We get, like, the stupid lag, and they're like, for some reason, this thing that don't not stop working for everybody else stop working for us again at the same exact time today. Every time we reach the certain amount of people, every single time. You know, it's like, All right, I see you guys now. That was weird. I didn't have chat for like 10 minutes. Okay, 2 minutes, but still. Kids table prevailed, yeah. Oh, YouTube will be here for a long term, baby. Tell him, Ryan. Amen. Let's just praise the chat. Edgar. Rate cuts. Jerome Powell hates us. Bloomberg and YouTube are in cahoots. I don't care. I smile no matter what. And shout out the chat and shout out the long term. And I'm happy and I'm excited and I'm going to do what I love to do. And I don't care if they treat me a certain way. You know why? Because I love them. And my God is huge, dog. So amen, amen. Game time. Oh, Chattadonia. So again, welcome, Powell. That's today. Oh, you're getting a little pop. It's 10:15. I don't know if we got some data. Let's see. Wednesday. Is there 10:15 data? Nah. Nope. There should be EIA. They're just popping. No data. Give it a little bit. Hour 15 till Euro close. That looked like a decent pop. Bonds already made that move, but not really seeing anything. And now the teledocs are starting to run a little bit. You're just under 100% now. What phrase will be the next transitory? That's a good one. We're going to have to find out. There's a couple, but as of now, I think it's just that we're committed to keeping rates. I think if anything, it'll just be him saying he's not going to cut rates. That will be the next transitory. See, that's the thing. Transitory, we wanted it to be transitory, right? So we were hoping it was going to be transitory. I think the next, consistent lie Powell is saying that he's going to go on, it's going to be the rate cut. And then he's, because you want the rate cut, he's saying no. And then I think if anything, that will be the random pivot, like transitory. Otherwise, I mean, people were talking stagflation. I don't know if that, again, that's still up there. It was transitory. I don't think so. Again, if that was the case, I don't think I mean, then you could blame the war and you could blame other things, but I mean, have you tried to buy a house lately? Have you tried to buy a car? Have you tried to buy bacon? I guess eggs came down. Again, remember, your CPI is a year-over-year rate of change. So, yeah, you're at 3% inflation, and that's after going up 9 and 7. So now we're at a point where it's stopping going up as much. But remember, most of the probably your life, you had zero inflation. What I mean is that legitimately, like 2019, you were begging to get 1.9, if 1.1 on inflation. If anything, you were getting deflation in 2019. So that's the thing. The rate of change, the where we're at now, 38, 40 months into this, is that the rate of inflation is coming down, but inflation is still up. That's back to original assholes high, or inflation's still high, asshole. Is it 3%? Well, that's just based CPI year over year. It's 3%. Again, you could you could be as political as you want about this or not. And I'm laughing, I'll tell you why, but it's just like, go look at the price of shit, dog. If you tell me if inflation was transitory, go ahead. It's just like, if that's what you believe, amen, then tell me how cheap houses are and tell me why you haven't bought a house yet then, since inflation has disappeared. You know, it's like it's the rate of change, which I try to make clear, because it's like, you know, some people even get mad when you're like, there's no, because again, I've told people inflation is coming down. They would get mad at me for saying that. So keep that in mind. But why I'm laughing, because I said that politician thing. Bro, do you know what I was thinking of all day yesterday? Okay, only for like 30 minutes though. I was like, it's so sad, bro. So sad. All I was thinking of yesterday was fucking Lending Tips calling me the Joe Biden of Snapchat. You know that? Lending Tips called, and then he was saying I'm defending it like I'm Joe Biden. And then I was like, oh my gosh. Because I was like, dude, it wasn't that bad. And even in my head, bro, like seriously, in my head, I'm like, I hear Lending Tips calling me Joe Biden of Snapchat. And then I'm like looking at the report, and I'm like, it wasn't that bad. So now I'm like, I don't know. Do I have sympathy for Jen Psaki in them now? I don't know. I got really confused, dog. I got really confused. It fucked me up. Because I'm like, it wasn't, everybody just hates it. I'm like, 1 billion. And then I'm looking, and then I'm like, oh man, is this how it is? I'm like, what if the politicians believe it or not? I'm like, oh man. But yeah, that fucked me up, man. That fucked me up. LT wasn't right yesterday. He was right on Microsoft. I don't know about Google. But then again, he was just bearish on everything, I think. As soon as you sell out, they'll get bought out. I ain't worried about a dip. I'm never selling. That's what someone say. They're like, is it time that you're going to sell Snapchat? And I'm like, mother effer. What other stock have you seen me sell? Why? So again, HBI was the only one. And that's because they cut a dividend. But I mean, at this point, I do not put money in that I'm not like ready to hold for 10 years. So I got 7 more years of Snapchat. And then we'll talk about it. I ain't worried about it unless it's yelling. Amen, bro. Amen. Didn't you have T? No, I kept AT&T. So believe it or not, AT&T actually changed their dividend, but I kept them. Because we got the spin-off shares. So I figured I could justify it. They gave me free shares of WBD, less dividend. I was already down on it. I just made a commitment to not add to it. No yelling today. Or maybe. She likes to come. Lately, this year, she's been coming up with random press conferences when Powell be speaking. So maybe. But otherwise, we haven't heard from her lately. So what you're saying is buy more Snap shares? No, I'm saying, well, if anything, I said it yesterday. My price on Snap is so low, and I've already collected premium that it doesn't make sense to, like, I don't care about that play as much anymore as we've balanced it. But also, it's not like, you know, I haven't sold anything. So, you know, I'm not. But then again, I'm the Joe Biden of Snapchat. So, like, I feel really self-conscious talking about it now. You know, because he opened my eyes to it. But then I'm like, does Joe Biden really believe what he's saying? Or does Jen Psaki, like, you know what I'm saying? So I don't know, bro. But all I'm saying is I ain't never sold shit. I put in an amount I was comfortable with. I got in at a good price. I ain't trying to hit you with no Joe Biden press conference, man. So fuck it. I don't know, dude. I don't know. But I just haven't sold. I don't sell, man. I don't sell for the long term. Peaches, 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 peaches. MP Dub still climbing. Teladoc against, was that Cheekly on the Spy? Do you reinvest? I reinvest my dividends. So, like, that's the thing. Like, we bought Snap so cheap that I haven't bought Snapchat since, like, 2020. Like, that's the funny part. But we just bought everything else. So, That's it. My average is like there's like 12 and 16, I think, and then not including the covered calls. So if you do the covered calls, I think we got back, like it lowers our cost basis by 30%. Is wheat coming up? Oh, wheat's dropping. Damn, yeah, so down 2. If we do get a drop, I say maybe 2 days of dropping on agriculture, we could get back into it. MPW makes me weak. It's kind of like, it's not aggressive. I thought, dude, this should be a shit show on MPW. So it's only up 50 more cents, which is a decent amount. Again, I'm a greedy bastard when it comes to this thing, but this should have been a epic squeeze, if anything. So again, I think I'm falling victim of what I said with MPW is just everything's going to take longer than we all expect. Bulls and bears, I think it's just going to take a lot longer because you don't even have people panic buying, panic covering, nothing. It's just kind of just been doing this and then borderline following the broader trends. Trying to watch the UFO. Would you be mad if I came back before Powell? Oh, feel free, my friend. I don't think I'm going to listen to the UFO thing. Maybe if I need to go to the bathroom, but I don't know. Just why are they talking UFOs on Powell Day? On New Issue Day? You think shorts are slowly unwinding their MPW position? Well, no. I mean, as somebody who just found out that he is the Joe Biden of Snapchat, I feel like there's a bunch of Joe Biden MPW shorts, if that makes sense. So I don't think they're slowly unwinding. I think the weak hands are, but I think this play is filled with a lot of bias, both long side and downside. Again, I'm biased to the value, but then mine's just a fucking low price, dog, with 10, 15 years of history and like assets backed by real estate. That's my bias. So I don't know. I don't think so. That's why I'm surprised. I don't think people are it's not running it like I would have thought. Much love for Santa Cruz today, baby. Snoke. God bless you, man. Good morning. Hope you're ready for Powell. There's 96,000 people watching this. You guys really are interested in the UFOs, huh? That's amazing.
Fascinated by objects, mysterious and unexplained.
I'm gonna go pee.
And it's long past time.
Follow me on Instagram at the Trading Fraternity. I love you.
The American public has a right to learn about technologies of unknown origins, non-human intelligence, and unexplainable phenomena.
This is such a distraction.
Those are not the words of the UFO Twitter account.
I'm leaving.
Though that is a direct quote from Majority Leader Chuck Schumer, that the American public has a right to learn about technologies of unknown origins, non-human intelligence, and unexplainable phenomena. In an interview with Fox News, recent former Director of National Intelligence John Radcliffe confirmed the U.S. government is aware a lot more sightings of UAPs and that they have not made that information public. I quote, "There are a lot more sightings that have not been made public," Radcliffe said to Fox News. For me, this hearing is about transparency. We unfortunately live in a time in which many people distrust government and our institutions. An overclassification of information away from the American public or even Congress contributes to today's politics. The American people have regular questions. What are UAPs? How come the media doesn't report more on them? Are they foreign adversaries? Are they U.S. technology? Are they something else? They ask themselves, how come when a Russian jet shoots flares at one of our drones, we have perfect pictures and videos to show the American people and the world, but when it comes to UAPs, nothing? Of course, we must always protect our national security to maintain our superiority, like when stealth helicopters were only rumored to exist, but were used in the Osama bin Laden raid in 2011. But we can't allow that to be used as a shield to keep the American people completely in the dark from basic truths. The American people deserve to hear more about special access programs. Congress has a right to know if there's any unsanctioned weapons development. Satellite imagery that has not been provided to Congress. Congress created the All-Domain Resolution Office in the NDAA of 2022. In its initial analysis, there are 171 uncharacterized UAP reports, and this is the words from the report, that appear to have demonstrated unusual flight characteristics or
All right, we'll come back to it. I just had to go to the bathroom. Man, they are talking UFOs and they don't have anything else to talk about. There's not one case in the world to be. Wait, where's Sam Bankman? Hold on. Are we gotten to the bottom of that by any chance? No, I don't think any. There's nothing. They don't care. I guess financial. Who gives a shit? That's it. He's walking free and he's in New York now? Damn, son. He's living life. He's living life. The Boeing call should be like 8, I think, in 30 minutes. Crude inventories, draw of 600,000. Estimate was draw of 2.2 million. Oil might drop. Let's see. Yeah, like, wait, yeah, that's what I'm saying. Hold on. Are they going to do a Congress thing on all the Biden stuff that's dropping? That's what I'm saying. Like, they're doing it on UFOs right now. But, dude, that shit's been growing crazy, actually. Again, didn't Hunter today pleaded guilty for the crimes, or one of them? U.S. distillates, draw of 245, estimate 415. API reported crude build, but gasoline draw. Interesting. Microsoft flushing now. So that's your first one right there. So like post-earnings move, it's very calm. Again, remember, Microsoft was pricing in like 5%. It's only down 4% after kind of underwhelming. So they're not selling off the same way like Tesla or Netflix did. Kramer said, hold it. Bob up. And then bonds are dropping here. Again, you're getting oil data. Oil's kind of moving. Oil's been red all day. And then NASDAQ is down 0.16. Dow's somehow holding on to that. Dow wants the record. Your old Microsoft puts, I don't think they went up. So I'm glad I sold it. I don't know. Let's check. It was a Microsoft like 265 for August 18. I think I sold them for like 28 cents. Yeah, I would have got murdered. So I saved money, actually. So by taking out the Microsofts, and then let me check the Google ones. But I guess you saved half of your money. That would have been worthless versus not. And then what's the other one? Google. I think I was at the... Oh, these all got murdered. Yeah. So Google went up. That's why it didn't even matter. Teladoc move. The contracts are going up now. So now Teladoc's back up to 69. The ones that are a little further out the money, they're not working the same. They went up a little. I guess $100 on a $150 investment. So there's a small. Remember, I went with a big set, and then I went with the small one. The small ones that are further out the money, they're getting a higher percentage gain. Dish Amazon deal. The puts on Airbnb popped this morning. Where's Hilton? I forgot about that. Calhoun on Boeing. Get ready. So Boeing's about to move every single time this happens. Boeing's about to start moving like 1%, or it's going to get a candle up or down in the next like 10, 20 minutes. Just every time during the conference call. Clifford on this buy. DFS on the low. Watch some of the financial ones. Historical, I check it on E-Trade, but you could also do it on TD Ameritrade. So, like, if you ever want to, I want to show you, but, like, it'll slow my computer down on TD. But just, like, if you link it. So, if you ever go link the color and then just go to the option chain and then just, like, send the option. You can either send the option to Quick Chart. If you go more info, go Quick Chart and just click that, and it'll send it to your Quick Chart. And then you could just get the price of the option. So that's on TD Ameritrade. Otherwise, you link your charts on E-Trade and you'll be good to go. The call should be starting now. I'm going to see if I could get it for you. E-Trade, you just link it. Go to your option trade chain, put link on the chart for the option chain, and then just click on an option, and then it'll go right there with the price chart. Overview. Where's the events? Yeah, I'm still in that BA short from the beginning of the year. That's one of the only plays I'm down on. Them and Enphase that I'm still holding. Interest increase is priced in. No, interest rates haven't had zero effect. Where was that? I think it was a Zero Hedge article yesterday. It was kind of crazy. Like apparently, like corporate debt payments have not rose, which is very odd. Like it was, it's a wicked chart. Yeah, so pretty much like over the last like 2 or 3 decades, anytime interest rates have gone up, usually corporate interest payments have to go up and people spend more money on interest. But legitimately over the last like 9 months, even 11 months of rates, there hasn't been corporate payments going higher in terms of interest because they've locked in such low rates. So if anything, I think that could be part of the broader thing going on here. As far as or I guess to say that inflation isn't, or the interest rates haven't been hitting. Yeah, earnings call 10:30. Yeah, so it started now. I have it. Webcast. You guys want it? You remember, Mr. Calhoun likes to yell. So I'll play it like a little bit, but he's going to go crazy, Doc. Okay?
And committed to getting it right. On MQ25,
they turned him down.
Schedule pressure added cost to the program.
Nice.
But we've had some recent successes that give us confidence that we're heading
So again,
in the right
he
direction.
says focusing remains on execution
We're
and stability and supply
25%
chain. They're
of the
making
way
steady
through
progress.
The build of our first MQ25. The static test article fuselage is complete, with preparation underway for the start of static testing this quarter. And on the T-7A, the impact was not due to any performance challenge within the quarter and was more associated with our estimates for higher supply chain and production costs in the future, similar to what many in the industry are facing. Even with the cost growth, we're hitting some key milestones on the program. The Air Force successfully completed its first flight of the T-7. We're heading toward the start of a flight test in earnest. We're looking at the program. If you look at the program from award to this moment, we've had some very important successes. We moved from firm concept to early flight testing in just 36 months on this program. And a combination of model-based engineering, 3D design, and our advanced manufacturing increased first-time quality by 75% and reduced our assembly hours by 80%. We're also making progress on other key BDS programs. On the tanker, for example, we have now completed rework on the production aircraft requiring it, and we have resumed deliveries to the Air Force. As we move through each quarter, we're progressing.
Yeah, this is a Boeing conference. Just watch. We've done this a couple of times. It's going to start going
Despite
crazy.
the challenges, we're hitting some important milestones that increase our confidence. Most importantly, these programs will meet or beat the high-performance standards of the warfighter. Given the fixed-price nature of some of our contracts,
So first, he's talking about issues on third quarter deliveries and supply chains. He's even talking about the Spirit stuff. That's why it went down for the first 5 minutes.
Quarterly charges have declined significantly over the last 18 months. The demand side of BDS is strong. We see solid order activity. In the quarter, we booked orders valued at $6 billion, including key contracts from the U.S. Army for 19 Chinooks, and Germany also shared its plans to purchase 60 Chinooks. We remain confident in our defense business. Demand is strong, and we will continue to improve operational performance to more normalized levels. Boeing Global Services. Another very strong quarter, both on the commercial and government side of BGS. Healthy revenue and expanding earnings.
Microsoft's still at the low. Watch out. PBF on the high.
I'm really proud of this team. They've had solid, steady performance, and they've enabled both commercial and military customers to keep fleets flying through a very dynamic time. Some of our highlights this quarter include the expansion in Poland with a new parts distribution site, Japan Airlines adopting Boeing Insight Accelerator.
MPC is related to PBF. Yeah, Marathon.
For the 787 fleet.
PBF, they're getting decent volume. I don't know if there's
to wrap
news.
Up my comments, we've had no shortage of challenges.
Again, he's saying
to the start of this
work
year,
stoppage could delay a few deliveries in Q3.
We've had conformance items that we've identified or external challenges within the supply chain, even logistic routes, including washed out bridges. This is a complex business. We expect items to come up, and when they do, we're transparent. We take action, and we move forward. This is what progress looks like. We're proud of the team. We are well positioned for the year and for the long term. Relative to the strong demand, we will remain in a supply-constrained world for the foreseeable future. And with that, I'll turn it over to Brian.
Brian.
Thanks, Dave, and good morning, everyone.
So this is Vice President, CFO.
The total company
first comments kind of negative, but nothing crazy.
Second quarter revenue was $19.8 billion. That's up 18% year over year. The growth was primarily driven by higher commercial volume, including increased 787 deliveries. Core operating margin in the quarter was minus 2%, and the core loss per share was 82 cents. Margins and EPS were driven by expected abnormal costs and period expenses, as well as losses on 3 fixed-price development programs in our defense business, which I'll cover later. Free cash flow, as Dave mentioned,
cocoa futures climbed a record high on supply concerns.
Significantly better versus last year and last quarter, driven by higher commercial deliveries and favorable receipt timing. Relative to our expectations shared at the last earnings call,
Palo Alto on the high, and then SPY's about to go through the low, but not everything's dying. That's the weird part. The low ticker's picking up, a couple of travel names too.
To incur in the third quarter. Turn to the next page, I'll cover commercial airplanes. BCA booked 460 net orders in the quarter, including 220 with Air India, 39 with Riyadh Air, and signed a purchase agreement with Ryanair for up to 300 737 MAX-10s. We now have over 4,800 airplanes in backlog, valued at $363 billion. Revenue was $8.8 billion.
You say $363 billion in backlog?
Year over year on 136.
Again, SPY's coming down. Bonds have stayed stable. Boeing is reacting.
Operating margin was minus 4.3%, a sequential improvement versus the first quarter as anticipated, but remains negative as we continue to be impacted by expected abnormal costs and period expenses, including higher R&D
Yeah,
spending.
Apple on the high. Disney's dumping right now. Apple's ripping.
We worked through a number of operational challenges.
Small, just breaking out while the market's going low.
Steady progress, and will continue to focus on stability as we look to increase production on key programs. On the Spirit work stoppage, we were pleased to see a quick resolution, and we will work through any limited impacts to production. Overall, this is not expected to change our production and delivery outlook. Onto the programs. On the 737, we had 103 deliveries in the quarter, including 49 in June. A positive proof point that the production system is stabilizing. In regards to the Spirit fitting issue that we discussed last quarter, in May, we resumed deliveries of reworked airplanes and also began producing newly built airplanes meeting our specifications. In light of this progress, we are now transitioning production to 38 per month and still plan to increase to 50 per month in the 25-26 timeframe. As we move to the higher rate, will continue to prioritize
Boeing's
stability,
still holding
and will
it, so
take some time to
if they break
consistently
220 on any
deliver at
headline, that's where it
38
gets
per month
ugly.
Off the line. We still project full-year 737
Again, Apple's still
deliveries
working its way up.
400 to 450, with sequential improvement in the second half. We ended the quarter with approximately 228 MAX airplanes in inventory. This includes 85 for customers in China and 55 that have now been remarketed as part of the plan we previously discussed. We still expect most MAX inventory airplanes to be delivered by the end of
Microsoft still
2024.
selling? Teladoc another high.
Moving on to the 87 program. We had 20 deliveries in the quarter and still expect between 70 and 80 deliveries this year. We increased production to 4 per month during the quarter and still plan to reach 5 per month by year end. We ended the quarter with 85 airplanes in inventory, and rework is progressing nicely, and we still expect most to be delivered by the end of 2024. We booked $314 million of abnormal costs in the quarter, in line with expectations, and there's no change to the total estimate of $2.8 billion, which is largely done by year end. Finally, on the 777X program, efforts are ongoing and the program timeline is unchanged. Abnormal costs were $136 million as expected, and we've lowered our total estimate from $1.5 billion to $1 billion, which reflects plans to resume production later this year rather than early 2024. Moving on to the next page, and defense and space. BDS booked $6 billion in orders in the quarter, including an award from the U.S. Army for 19 CH-47 Chinooks, and the backlog is now at $58 billion.
All right.
Revenue was flat at
Didn't give him
$6.2
one more
billion.
minute. I think he's already said most of it.
Aircraft in the quarter.
There's going to be some numbers that come out, and then that's it.
Operating margin was minus 8.5%, primarily driven by 3 fixed-price development programs.
This is not Biden. No,
The
this is
first was related to
CFO
commercial crew
and president of Boeing.
tied to scheduled delays that we
This is their
previously
conference
shared
call. It happens
and had
during
a
hours.
$257 million impact. The second on MQ-25 related to a schedule shift that drove a $68 million impact. And lastly, on the T-7A production contract, we revised the
BKI?
long-term production
Yo,
cost
Black Knight,
estimates that will
BKI,
occur
this is
over
transport.
several years,
BKI,
starting in the
Big Pop.
2025 timeframe, which drove an impact of $189 million. These determinations were mostly made over the last few weeks as we closed out the quarter.
The odds of FTC
Similar to
settlement.
last
Man,
quarter,
this is-
roughly 60% of the portfolio
Check
is
BKI.
generating solid levels of performance, in line with historical margins. But we continue to see operational impacts from labor instability and supply chain
There's supposed to be a
disruptions on
settlement.
other programs that contributed
So
to
I don't
lower
think
margins.
that was a couple days ago, but it's
Looking at
probably
BDS in
settlement news
aggregate, it
if you
will
can't
take
find
time to
anything.
return to normalized levels of performance. We're confident and we're focused on the path to high single-digit margins in 2025, 2026. There's strong demand across the customer base, the portfolio is well-positioned, and we're focused on execution. Moving on to the next page, let's cover services. BGS had another very strong quarter. BGS received $4 billion in orders during the quarter, and the backlog is $18 billion. Revenue was $4.7 billion, up 10% year over year, primarily driven by favorable volume and mix in both commercial and government services. Operating margin was 18%, an expansion of 110 basis points versus last year, with both our commercial and government businesses delivering double-digit margins.
Yeah, so watch BKI, though.
Operating
It
margins
might
in
pop,
the
but
quarter
I'm
were
expecting
higher than
FTC
expected
news.
due to
Other than
favorable
that,
mix,
it's nothing.
which we don't expect to continue at these levels. In the quarter, BGS announced an expansion
Meta's on the low?
with a new parts distribution site, a collaboration with CAE, and the Japan Airlines has adopted the Boeing Insight Accelerator for their 787 fleet. Turn to the next page, I'll cover cash and debt.
He says abnormal
We
cost
ended
was
the quarter with
$777.
$13.8 billion of cash
All right.
and marketable securities, and our debt balance.
I want to
increased
exit it, but I feel like he
$52.3
hasn't said the
billion.
numbers yet. He's about to.
In the quarter, we repaid $3.4 billion in maturing debt.
Uber
and
dropping.
provided
Boeing's still going down
$180
off all
million
this.
cash advance
High-low
secured
ticker's
at
kind of
$3
tweaking.
per share.
Microsoft and Meta selling out. Staples,
Year-to-date, we've repaid
Dominion,
$5.1
energy, and
billion
healthcare on the
of debt,
high.
which is essentially
Even Pepsi.
all of our maturities for the year. We also maintained $12 billion revolving credit facilities at the end of the quarter, all of which remain undrawn. Our liquidity position is strong.
Carvana, Microsoft again. Microsoft on another low here.
And we're deploying capital in line with the priorities we've shared. Invest in the business and pay down debt through strong cash flow generation. And flipping to the last page, I'll cover our outlook. The 2023 overall financial outlook is unchanged from what we previously shared, including $3 to $5 billion.
J&J again. Staples are catching a bid. Watch out for the Dow too here.
The operating
Nvidia's on the low now.
Makeup by division will likely be different, with
no guide up.
and BGS better than expected.
I cut out of Intel.
BDS lower than expected due to the lower operating performance. Net, we still have confidence in the $3 to $5 billion of free cash flow for the year.
Oh man, Teladoc's still running.
Market. Commercial demand remains strong across our
Vinda, Procter Gamble, J&J.
Cargo remains healthy. Global passenger traffic was up 39% in May and is at 96% of pre-pandemic levels, 105% domestic and 91% international.
Meta, Netflix, Zillow, all on the low ticker. Even Nvidia now, and then Joby.
Levels, with domestic traffic up more than 300% year on year and above pre-pandemic levels. Defense demand is also robust, and the FY24 budget continues to progress in line with our expectations. Our portfolio and capabilities are well positioned to support the needs of the nation and of our allies. With demand strong, we still find ourselves in a supply-constrained environment, and our focus continues to be on execution, both within our factories and the supply chain, as we steadily increase production. Relative to the first half of 2023, we continue to expect operating and financial performance to improve in the second half. On the third quarter specifically, we expect BCA margins to improve sequentially, but remain negative, and we're not anticipating much in terms of BDS profitability. The 2Q effective tax rate of 63% included cumulative adjustments related to the projected valuation allowance. These adjustments will continue to weigh on the tax rate for the remainder of the year. And given the strong results in 2Q cash flow, 3Q will be lower sequentially, still positive, and likely in the hundreds of millions of dollars. All things considered, we feel good about where we're at on the road to recovery. Right now, we're squarely focused on meaningful operating performance improvement, including deliveries, revenue, margins, and cash flow, all of which will improve as we progress through 2023. And while the challenges remain, we're headed in the right direction. Ultimately, we expect our operational
What's the play? Where the likes at, dog?
To continue to accelerate, align with the plan we laid out at our IR Day last November, and we are confident in $10 billion of free cash flow in 2025, 2026. With that, I'll turn it over to Dave.
All right. I think that's it. Again, they didn't raise guidance or anything. They were talking about some of the supply issues. Nothing too crazy, but just kind of watered it down. But Boeing still holding it there. Yeah, but I made a play. I don't know where the likes are at. I don't know. I'm kind of feeling 1,500 likes here because you already got the first one. So let me know if you want it. But yeah, I need 200 of y'all to wake up a little bit. We need to join together, you know, and just be here, be in the moment. Amen. Amen. Bring them out. Bring them out. You guys remember that song, Bring Them Out? It was a good one. Pre-order, bring them out. Amen. Why is Netflix dropping? I do not know. I think Netflix and Disney, but Netflix started off decent, but then it started like outpacing to the downside. Very, very low. You need likes to say you play? Yeah, I do. I learned that recently. It's very effective. That's it. I'm a child. I learn just by experience. So we're 50 likes away now. You see what I'm saying? So let's go. I want to tell you this play. It's very important, actually. It's very, very important. So I want to get this one out the way. So let's go. Again, last play that we had to hold up on likes. I'm sure you weren't pissed off about it. So amen, amen, amen. Good to see you. Again, Powell in what? A couple hours? Ba-da-ba-ba-ba. CFMOS. All of them are going up. Again, wasn't a marathon and the rest doing their thing. Boeing says wrestling our way through BDS contracts. Beautiful. You liked it. I love it. All right, so here it is. I hope it helps, and I hope you like yesterday's play. None of this is a recommendation. I made the teledocs free. So that's it. I sold half of my 25 contract or my 50 contracts. So we bought them at 38. I sold out at 72 cents, exactly where it is now, just under 100%. So I put in a lot of money. I put almost $2,000. I got most of that money back right now. And then I sold out of the 80 calls that I held, and now I just have 25 of these for free, and I'm going to ride them for a couple of months now. So we are set. Make the play free. You could play this squeeze or whatever happens for the next 6 months for free $99 if you would like to, which is what I am doing. So again, we got a killer earnings play. We found the option. We got it early, got it at a low price. You could push it or make it free. I am choosing to make it free. Good luck. Trade management was good. Either way, I wanted to push it. I was feeling greedy, but at the same time, I saw good gains. I sold the super far out the monies, took the 100%, got 25 contracts for free. It's still worth like $1,000 or $1,700. So that's it. I don't have any risk now. I do have risk in terms of my profit, but now at least I know if I lose on this play, my account goes back to the same value I was at when I started. So that's exactly what I'm looking for. A little bit of risk, but mainly now the downside has been protected for. You don't bite the plays, but maybe I should start. The options suck. I'm just telling you, that one was a lucky one. It was good. I saw it, and I'm glad I went big on it because I saw the opportunity. But at the same time, shares, you're not gonna lose on shares. You know why? Because I haven't. That's all I'm saying, man. Just get the shares and be careful of the options, though. So I'm not talking even long-term. Long-term is one thing, but I'm just saying, like, even for some of the flips, like, you could have played Teladoc with shares, and it could have been, you know, much more contained. The options are nice when they hit. You know what I'm saying? But, like, legitimately, I shoot less than 1 for 5 on these. The shares is literally, we're talking 9 for 10 winning. So I'm just... You could go for plays and you see the opportunity, and I know the small gains get you hyped on the shares, but it's just or on the options. But don't forget the shares are safe, and you could still hit all of these moves with a way higher degree of safety and profitability. You're just going to make less. That's all. Again, shares you'll make way less than not. So, you know, to make $1,700 on an option is way faster, or you would have way less money than not. But you will say you will lose money. Gotcha. I will. And I say that every day. And whether I was required by law to put a disclaimer or not, I try to communicate the best interest for everybody. That's why I said yesterday I didn't want you guys to get hyped on this play. I didn't want you to think it was going to be the next upstart till we could talk about it when the market's closed, you know? And it's just like, even in this case, I think it's a great play. I'm not going to tell you it's going to turn into an epic squeeze and all of it and this and that, but at the end of the day, it's like, you know, just make sure you are really in there, but it's like, be smart. That's why I'm selling half of mine out. I have a lot of belief in it, but you have to be wise and you have to look at your own account and do your thing. Don't worry. I'm not worried. I just want to make sure, though. You know, that's why. Just be smart. And again, I'm glad. I like hitting the plays, but for especially, it's not about the play. It just comes down to now every single one of us is different. You know what I'm saying? Like, I found the play. I'll get into it, but my situation is different. So I really hope all of you, you know, make a good decision. Either take profits or push it. I'm even saying gamble too. Like, some of you can gamble, some of you should, but some of you also should take a bag and walk away and use that money for something good now, or prepare yourself. So just find that balance there and just, you know, it's good. Hard work's done for now. But SPY is flushing. You're still watching the Congress live? Don't forget to cover for taxes. Wow. I haven't heard the tax guy come. That's how you know we haven't hit an option trade in a minute. Even though we did, we hit the upstart. That was like 2-3 months ago, believe it or not. But that's it. The tax guy came out. I forgot. I got to sell one more option for Texas. Dash puts, maybe. Again, bonds are tweaking out right here. I don't think there's any data. It's the clapping. Well, bonds are moving in the opposite direction. If anything, this sell, it's not like it's resulting in people wanting the bonds. Dollar's still low. Again, that Boeing guidance wasn't even upsetting things too much. Energy's even moved. There's been a little flip-flop. It looks like tech gave up more. In the last, 20 minutes, it was like tech selling off and then catching another bid on staples. Yeah. Again, staples and any of the solid that. Look at. So you see this right here? This was tech going down, and then any defensive Dow staple names caught a bid, even though the Dow's at break even. But now the Dow's at break even, and the NASDAQ dropped an additional 0.3. PepsiCo and Walmart aim to support regenerative agriculture. What? They got regenerative AI agriculture? I didn't. Oh, no. Oh, regenerative agriculture, not generative AI agriculture. Okay, I read it wrong. Bronto soaked agriculture. And then you got Boeing executives say we expect commercial margins to improve but remain negative. Where is it? I want to see wheat. I don't know if it's time to double dip. It's still expensive as shit. Yeah. No, you need wheat. Maybe if wheat touches 7 again flat, I would go in. It just depends on the headlines, but I'm glad we got out the other day. It's pretty much right where I exited corn. We're more likely to pump. I don't think we're going to do anything on FOMC. So the latest events have been negative. The old theme used to be buy the press conference and then sell at the end. But again, today's Fed meeting is pricing in the least amount of expected move in a very long time, at least over a year. So I'm not really expecting much, but I think we may get a surprise. I will be listening for language. That's the thing. So at the end of the day, even though I'm telling you, relax and calm down, and we may not get much, I mean, we will be listening for whatever he says. So if he drops something new, then there you go. Hunter Biden says he'll plead guilty to 2 misdemeanor tax charges. Russian board proposes redomiciling to Abu Dhabi global market for Cyprus. 1 rate hike. We're going to get 1 rate hike guaranteed. The question is, does Powell defend the 2nd rate hike with the SCP, or does he give you a dovish read? Most people are expecting him to be hawkish. So that's what we're going to find out. But then again, if any of that changes, that will be our play right there. Hunter. Yeah, that just came across the wire again. 2 hikes easy. I think he's definitely going to back the idea of 2 hikes, but we're going to see how the market takes it, and then we'll see the questions. Utilities now the leader? No way. Yeah, up 1. They look, again, this thing was just tech selling off and then go to defensives. So again, staples and utilities kind of look the same, but utilities are up 1%. Do you invest X amount every month to your trading and long term? I don't put any money in the trading account. I just invest the whatever amount we put to the long term. That's it. Yeah, then my trading account is a game of just back and forth. And honestly, I'm below break even now from where I started on the year, but we were up and then we were down. And then, yeah, the trading account, no additions, but long term, I do add 200 to the small account, 270 or 2,700 to the big one. XLP. Oh, the staples. For some reason I thought you were talking Ripple. What? Why are you bringing Ripple into this? Airbnb. What did I need? I wanted to see Hilton. My deposit for the long term is every month. First of the month. Let's see, where was it? Yeah, because Hilton had results. I wanted to look at that. Diluted EPS was 155. So Hilton was high end of guidance. Net income beat. Adjusted EBITDA was $8 million, exceeding high end. Yeah, Hilton actually killed it. No shit. So again, keep it. I don't know why Airbnb would be going down there, but yeah, Hilton even says travel boom not letting up. Travel boom isn't losing steam. Second quarter sales climbed 19% and adjusted earnings top Wall Street analyst expectations. They raised full year outlook. Key metric, which gauges health of hotels. CEO Chris Nassetta says higher prices and improved occupancy have powered results this quarter. If we get 2 hikes, well, you're not going to get 2 hikes today. I hope you guys are aware of that. There's only going to be 1 rate hike today, but it's all about how he communicates the second rate hike. So that's where the whole 2 hikes comes into play. We said First Solar. Didn't SunPower, I think the solar names like cut their guidance. Sino Ocean City's liquidity pressuring. China post statement on meeting of Turkey president. So I don't see anything active on First Solar now, but again, all of the other ones, all of the other solar plays had big guide downs. Is the question if this is the last one. So that's the thing. That's why that second hike is so important, because a lot of people, I mean, even myself, it's weird. I do believe it. Usually I don't want to fight Powell, and I know he has optionality, but in a weird way, it kind of makes sense. But a lot of people are expecting that this will be the last hike. However, he has to explain that it's not. And then if he does or doesn't and how he says that, that's probably what's going to create the day today. No one's buying real estate. That's why solar's getting hit. Well, I don't know. I got good news for you. I don't know. Maybe we'll talk to lending tips. I'd say in the last like 5 days, I've saw real estate kind of chill out. I saw more price cuts in the last week than I have in the last 2.5 months. So that's good for some of y'all, no? Fed rate expects a 1 cut by the end. Yeah, that's the end. So that's even what the Fed dot plot says. But legitimately, as we opened up this week, the beginning of the week on Monday, we were pricing in a rate cut for December. By today, we're not pricing in any cuts till like the end of January. So that's a big shift already. So low key, like what we've gone through this week has had a hawkish shift. Yeah, I showed it on the watch list. I opened up the Sunday watch list. I have the Fed futures on Sunday's watch list showing you January odds of a cut and December odds of a cut. You go look today, it's all there. Even by the Wednesday watch list, Tuesday, it's gone. Everybody's now looking at. They're even debating what happens at the next meeting still now. So it's very, very wild. How do you feel about where inflation is? I feel like the pace is there, but I mean, deep down, all I believe about inflation is that it's going to return in about a year or two with a vengeance. Have you ever seen the movie Michael Myers? Have you ever seen Halloween? Okay, cool. Now picture Halloween is instead of Michael Myers, it's inflation in the money supply. You know what I'm saying? You just don't understand where he came from. How come he doesn't die? And then he walks hella slow. You know what I'm saying? He don't even have to run to kill you. You see, like inflation right now, you think you got away. It's a Michael Myers movie. You see what I'm saying? Everybody, just because you could run and he walks, you don't get it. But like you see inflation just walking over right now. You know that he's just walking over again, about to just with the knife in hand and the hockey mask and everything. And then we're like, oh, it's fine. So that's truly what I believe deep down. I think it's not going to happen now, not today, but I'm just saying, like, if I compared this to the 1970s, I would not be surprised if that happened. And that's why I do kind of believe it, where inflation comes back around 48 to 57 months since the first round it ever comes out. So, yeah. I'm in vacation in Gaslamp, so when you land the plane, the temperature will be the same. Hey, go to Huntress. You're in downtown right now. It's in Gaslamp. Go to Huntress. Good steakhouse. Go get a katsu sandwich. Thank me later. Okay? Tell them Josh sent you. They won't know who you're talking about, but just tell them I sent them anyways. That's it. Faces of Inflation coming to a theater near you. Are you holding AMD and Intel? Did you like the video? That's a big question, sir. It's a big question. When to buy? I mean, again, I told you guys after the last one and then leading into tomorrow or Friday, those are your times to buy the yen. But I'm very weirded out that the yen is up. So again, if they were going to disprove the rumor, the yen should be down a decent amount, but now it's up. So just in general, the event is Friday and people are worried and the cost to hedge is the highest it's been in a while. Katsu sandwich, It has sauce, but you dip it. They don't put it on. It just gets fire. You guys ain't seen katsu sandwiches? Other places do them. I love them. I love them. It's like one of my favorites. A katsu sandwich, a katsu steak sandwich. Oh man, it's great. You could play YCL as a ETF. Bring Boeing conference call back. I think they're done. I haven't got any headlines. I see they have premature to select engine for X-66. They say everybody is fighting for the next aircraft part. They say 2025-26 BCA margins to hit pre-pandemic levels, low double digits. And then that's it. And then Hunter news back on the wire. It was all old. U.S. Treasury Undersecretary Shambaugh says multilateral development bank leading to China is declining but not fast enough. Needs to go to zero rapidly. UFO disclosure the same day as Powell. You think it's a distraction? Yeah. And then the same day as a lot of things. And then following the day of LeBron James' son. And then the day that apparently Biden... they have documents linking him to a bunch of shady shit. I think I'm gonna just go out on a limb and say it's a distraction. I don't know, but I'll just chalk it up to Powell. New to trading futures, any beginning resources? I do not have any futures videos. I just recommend you go with the MESs or the micros before going into the other ones and have fun. Go get them. Go get him, but for real, just play the micros. They go a long way, and once you're in the land of futures, you get access to a lot of other plays. So think about currencies and agriculture. You could play that with futures, and if you haven't paper traded yet, you're fucked. So just telling you, just from I don't ask some of the other chads and everything else, but. I would give you like 2 weeks, 3 weeks of paper trading them because they move fast. Just get an idea of how much a tick is going to cost you and how it goes about, and you'll be good. Yeah, Boeing says looking for stability at 38 months and readiness in supply chain before approving 42-month rate for 737 investor call. They're still tied. Where's Teladoc? The options came down, but they're holding. And then it's at the same price, though, which sucks. Is Anaheim safe? Generally. Just depends where you go. Documents have filed claims from uncredible sources that Biden did something wrong. Yawn. I feel you, man. And Airbnb is crashing. And a lot of things in the media is always true. You know what I'm saying? So I agree with you. I agree with you, man. All of the what would I do without him? Anaheim's okay and safe. Just be careful. That's why generally safe. Generally. Just depend. I think Disneyland is safe, but most of Anaheim's expensive. It's kind of crazy. When you think about it, Disneyland, safest place on earth. Nah, Las Vegas, casinos, surprisingly. That's my take. 6J on Ameritrade doesn't work. Do you have futures? So you need a futures approval. Otherwise, it won't work. Otherwise, that'd be weird if they don't. Maybe you should message them and ask them. You may need the margin requirement. Because that's the thing. I don't know. That's tinfoil for Disney. I don't want to tell you it, but I'll tell you if you have likes. That's how I operate, you know? I'm a very simple guy. You guys, give me 7 likes. You're almost at 1,600. You don't know the Disneyland tin? I got the Disneyland tin for you, bro. Boeing exec says there is 60-month rate for 737, but it's not a simple thing to do. All right, here it is. Because you're saying Disney is like this. Say, yeah, don't start futures on 6J too, by the way. Yeah, paper trade that. Very good contribution to that conversation. But here it is. Disneyland. Yeah, bro. Do you know how many like people randomly die at Disneyland? So you're like, it's the safest place, but dude, there's so many like random deaths at Disneyland over the last 12 every 12 months. Again, even the amount of suicides, it's actually kind of scary. It's very weird. But Disneyland actually has a surprising amount of deaths. That is the tinfoil. Really? Yeah, dude, I think it was like 3 months ago, some dude, or 6 months ago, some guy jumped off of a parking garage. Yeah, they cover it all up every single time, and then they drown it out in the media. But it's like, dude, a lot of people have passed away at Disneyland. It's not uncommon if you told, as somebody, whether you live in Florida or California, it's not uncommon to hear about people dying at Disneyland. Like, just whether it's natural or, again, other reasons, people take their own lives, but it's wild. Dying, I've heard a lot of suicides. That's the number one that I've heard. And then again, there's been like health accidents too, but mainly suicides. But they're not allowed to die or be declared dead on the property. Really? Oh no, it's tin though. It's definitely more than you would expect. Disneyland has metal detectors. Vegas casinos don't. Yeah, but in Vegas, they know your heart rate when you walk in. You know what I'm saying? Have you ever carried a gun? Your heart rate goes up. Dude, Vegas has been using AI before everybody. You guys know that, right? So, like, if we're talking generative AI and AI security, just crazy what they be doing in Vegas, man. Yeah, bro, Vegas is nuts. Yeah, they have facial recognition, heart. Yeah, dude, it's thermal, everything. So it's like, if you're like, they could pick up on people's behaviors from a camera just by off of like whatever vitals could be picked up through temperature, how you're behaving, all of it, dude. It's wicked. Teladoc was just the earnings. So that's it. And then the contracts, I'm surprised the contracts went up. I thought we were only going to get like 20% today. We got 100. I made them free. So I sold half of the contracts that we bought, and then I sold out of all of the 80s. And then now we're just chilling. And then I'm going to hold the rest now. Citadel ramming the D-Gens gambling and Snap. They did on the options, honestly. That was a shame. But we saw it. Again, I hope if you ever see an option that looks like Snap ahead of earnings, please don't play it. I'm just telling you. Because I don't even think anybody won. So, like, if we go to the August 18th, like, dude, everybody lost. So, like, even your in the money, I guess in the money puts hit barely. But like if you were buying, again, you made 10 cents a contract on a 1050 put. You caught a 30% or 20% drop, and you literally got 20% on your contract. These went up 50%. So if you took an 1150, if you put down $100, you got 50 cents of insurance back. So just be careful there. It's like if you see, remember what I was showing you yesterday on Snap. If both calls and puts are high like that, it's going to be a shit show. Again, I think even the weeklies got murdered. So remember I was telling you we were like the 850s, and I was telling you what the stock had to go to. So like take a look. You lost on these too, even if you're in the money. So this one too, weekly, you lost. This one you actually hit. You got a better return on that one. You got 100% on the 11s, which makes sense. 64 to 68, and you have a little bit of time. I strangled on Snap and got clapped. As I was saying, if you did, so who sold it? That's why I was asking. I was asking you guys if anybody sold them, but just now, at least we got good evidence of that. But just look at the other ones. Just if you see anything that move like Snap and calls are up 100% premium, do the 2 standard deviation test. If it's up there, then I don't think you're gonna. I would sell them, then buy. New SEC rules require disclosure of cyber intrusions within 4 days of determining if they're material to investors. And then L3 Harris readies to close Aerojet deal, expected to close as early as this week. Yeah, Meta's weird though. Meta, the puts are cheap. So again, let me actually double check. Actually, no, I'm break even. That's fucked up. The Google ones didn't even go break even. That's insane. Wow. So we have breaks. So yeah, the puts have just held value. They did not go down in value, but these puts have been the same price for a week now coming into earnings. I'm break even on them. I've held them the whole time. I'm down $10. So that is down. And then what date is that? That's August. Let's see the calls. Calls are kind of neutral. Calls are down, but they stayed the same price. Meta's not as bad as Snap. I don't know. It's still pretty much, instead of having premium, you're just holding the same price with less time. Does that make sense? So now these contracts, they haven't gone down in value, but they've gone down in time. So the calls and the puts have all lost time, but the values are the same. So that's where I'd say it's a little bit better than Snapchat, but it still kind of has its own little risk there. Amazon, we are up on those, believe it or not. Amazon's green, but only by $10. So again, same situation. I believe it might be exactly the same. No, calls are actually kind of dying on Amazon. See, Amazon, you're getting death on the contracts, but then, yeah, it's a little lower than last week. So calls are actually going down, and then puts are the same price. Puts same price, less time. Calls, you get more time, less price. So not bad. But yeah, it's still, I don't know. The earnings plays for options haven't really hit. Again, Microsoft, Google already bad. But the Amazon and Metas are kind of like, MPW and Powell, nothing, unless whatever Powell says related to rates, stability, even regional banks, that could affect it. Other than that, though, I don't think it'll be too crazy. So again, watch V and Q. eBay reporting. MPW keeps getting these volume bars. Have I sold AMD? No, I'm in AMD, down on that. I sold out of Intel for a small gain, but that's because I averaged on the AMD. So I bought AMD after hours yesterday, averaged down on it today. I'm a little bit down. I'm down 40 cents on my average from today. But then since I'm building up AMD now for kind of a pre-running play, I decided to cut out the Intel. Do debit spreads benefit of the IV drops? Kind of. Up until your strike price. So if you have an IV drop and then you get in the money on the first contract, it benefits you. But then again, it's like if everything just dies, I mean, you'll still take the loss. Amazon Bedrock users include Ryanair and Bridgewater Associates. What's that? What's Amazon Bedrock? They've been bad last. I think so. I think last earnings, the pre-run ups, they hit like few and far between. I made money on shares. That's it. But so far now, I mean, 0 for 2 on pre-earnings. That we could have taken profits, but I didn't think they would. I thought after they got their premium, I didn't think they would go back down to a loss after we had the move. Boeing exec says getting a lot of good signs that deliveries will resume in China. So Boeing's talking China right now. Again, the conference call is still going up. The lawsuit in Amazon, and then not we sold last year. But Amazon, FTC, I mean, some people are worried about it. I think it's good. That's it. I mean, just like I've told you guys in the past, you know, keep believing your media and all that because they're always true. But, I mean, historically, anytime the government has forced a breakup of a company, they've ended up bigger in the long run. Again, just look at Microsoft was forced to break up back in the day. So shout out to Billy. Again, that's how guys like Steve Ballmer and shit came to be about. So if anything, I think it sucks in the short term. But overall, I think a breakup of Amazon will be ultimately long-term bullish. So as someone who's owned Amazon for a long time, I think it'll be very exciting in the future. So all my MPW got a nice 25 in 6 months. Can't complain. GG, my friend. GG. Bezos would not go for that. They don't trust me. They don't care. It's not. If they split up, it's not gonna like. It sounds bad because it's FTC and all of that, but like, I mean, if history is a guide, a big company getting broken up usually because of how big they are, it's just that's usually a good sign, and they usually end up better. Yeah, imagine if you could invest in just AWS, or now your one set of shares turns into a bunch of things. You know what I'm saying? AWS expands Amazon Bedrock with additional foundation models. New model providing an advanced capability to help customers build generative AI. And then Boeing making, so Amazon's saying something with AI right now. That's what Bedrock is. So hold up, Amazon AI stuff here kind of correlates with some of the other bounces. And then Boeing saying next airplane, in my view, with the respect to development, has to be meaningful change, 25-30% better than what flies today. Gold is running. It's weird. Bonds, I think, watch any of those moves, gold, bonds, dollar. Watch that after Powell, because I think they're kind of just tweaking in the run up to it. Tesla. Boeing's running up there, and Goldman, we approaching 7. That could be a good one. Goldman was down in the morning. Hold up. Did these banks come back up? JP Morgan came up here. Bank is even climbing back up here once again. I forgot. Remember, PAC W and all that. SPHR. Check SPR too. So again, SPR, remember, they dropped on some of the Boeing stuff earlier. I cut out of the Intel already. Let me learn Forex, short USD, JPY has been decent. So just watch out till Friday. That's it. Friday is going to cause volatility on the yen. But pretty much, if you are going to be in that play, just Fridays are Powell day for any Japanese place. AMD to sell? I mean, I would like 115 to like 120. I mean, it just depends. I'm looking for the pre-earnings run-up, but that could be kind of finicky. You never know. Like I was saying earlier, someone was asking why I bought AMD this high. Because remember, we traded the earnings the day after, and I got part of that flip. I remember I made a decent bag off of it, but I made a couple of AMD flips over the last quarter, and this thing is just, there it is. It just hasn't, it's came lower. Yield curve control 100% on Friday, yes. So that's, even though people don't believe there's going to be a change, there's just something going on in the yen where underneath the surface, people are believing something, though. So YCC should not change this Friday. Some people are still thinking October, but for Friday, people are expecting an inflation target run-up. And for some reason, literally, you have more people paying to hedge the yen for upside than any other time since the beginning of the year when Governor Kuroda left. So even Ueda's first meeting, people didn't even hedge it this much. And again, when Kuroda was leaving, even the December meetings when nobody was really aware of it, again, this is all comparing to last year. For some reason, you have more volatility priced into this Friday, even though everybody has said the YCC is dead. So I agree. I don't think the rumor had some legs in the beginning of the week. It's dying down, but something's happening on the yen because the yen should have died. I'm just telling you now as someone who's played it a lot, and I thought I was going to lose a lot more, but now, the defense is coming back. So get ready. Friday is going to be exciting. So yen up or down on Monday? We don't know. Again, it just, like I told you, on the last time with the inflation, inflation came in hotter, and then the yen went down, but then it didn't go down for too long, and then it shot back up again, and it only went down on the comments of the governors, but then people quickly bought it up again, and even to today, all of a sudden, it's like people are hedging it. So the last 48 hours of the yen was supposed to be everybody flattening out this rumor, saying, "Okay, idiots, YCC is not going to happen. Go back home." It's what I'm saying. That was supposed to be the last 48 hours, and then underneath the surface, everybody and their mother is buying swaps on the yen to hedge a move just in case it pops. So although nothing should happen on Friday, there's this underlying notion that just people are buying protection now coming into Friday, and then we're debating on the 2.5% inflation target, which is expected to rise. So just quite interesting, if anything. But that's where we're at, and it should have died, but some people are still keeping it alive until Friday. Japan Friday is Thursday night, I think. Is it? Yeah, I think it is. It's going to be our Friday morning. Yen weaken the dollar anytime soon. It has, but then they're going back and forth. And don't forget, you have the ECB tomorrow, and there's other currencies at play. So the yen, that's why this case we're playing the Fed meeting of Japan essentially. But as far as like the broader trends, I mean, we do got to see where the euro goes as far as the dollar. The euro and pound have been quite interesting. 4-month bills drop 5.3, allotted at high 98%. My prediction, I just think it's good to have upside plays between now and the end of the year with the yen. I think it could go lower, but I think it might be capped. But then I'm kind of feeling October-ish now, but I just need to see the data in the sense that I'm very fascinated by what's happening in Japan, in the sense that a trend is emerging in Japan that we haven't really been able to spot over the last decade or longer. So that is what has me in the sense of, I'm long on the yen, and honestly, I see it as a parachute. I see it as insurance related to the bonds, just in case anything happens as well. And then it has its own little play too. I am long on the yen. I am in futures right now, and I have YCL. I've been long on it. Tesla. Remember, Tesla, Netflix, those are the guys that reported 2 weeks ago. So we're getting the Meta and all that today, and then you have the other guys, but that already reported, like Microsoft and Google. So they're going to have their post-earnings a little bit more separate. Oh, shit. It was Euro close 3 minutes ago. So this is Euro close right here. I missed that. Keep that one in mind. Powell did not speak already yet, no. The New York City crane fall? No, that was always my biggest fear. I used to have a crane where they were doing construction in front of my building, and like I would tweak out every day because I was like, that thing's going to fall. Japan's inflation is like 2.5. Very low. Or no. I think it's 3.5. It's higher than America, which was that hasn't happened in 8 years. But it's still very low. And that's like the first sign. And then their PPI came down today. So that wasn't a good sign. AI announces AI customer service agent capabilities for Bedrock service. Hunter Biden plea deal with DOJ falls apart. So Amazon, again, this Bedrock stuff, Amazon's been dropping all these headlines related to it. Hunter Biden plea deal falls with DOJ, falls apart. ARGX, wheat below 7. Yeah, corn's down 2 now. You have wheat. I have 7.10. I'm looking at the futures. Yeah, wheat's getting murdered. Oof, 7. Again, I like 7. I think below 7 though, that's better for a double dip. 680 if you really want to get crazy. I'm talking about ZW futures. What you missed from the morning: Boeing earnings, Coca-Cola, Staples were good. Everybody was reacting to the Microsoft and Google. You got a couple of bids and they sold off. We made Teladoc options free. Real estate data came in a little softer. Didn't have too much of an effect. And then we talked a little bit about the yen just now. And then we're waiting for Powell. Otherwise, just post-earnings reactions, the ones in the morning, the ones yesterday. No other real big data. And then we have way more stuff tomorrow. Again, ECB and everybody else. RHI on the high. Robert Half. The dollar chart looks like the crash before 01 and 08. The dollar will be key. All of it. I mean, the currency, you know, what I would tell you is just you saw problems last. Oh, not the dollar. I don't know what DYC is then. I thought you were talking about a different dollar index. But it's just that I would say, though, last time you saw it in 2022. When there was currency volatility, shit was getting crazy. Oh, the dynamic yield curve. I've never heard that abbreviated in my life. The yield curve, baby. Yeah, well, that's just. I mean, we're waiting. I think he's already done enough. I don't even care about how much more it goes, but I just know it's the uninversion. That's it. And then that was, again, I think that was maybe the last pump fake, but. Maybe the final uninversion is there. Maybe there's one more pump fake, but for the most part, I think the next real run up or uninversion of the curve might be it. So that's 1, 2, 3. It's 3 pump fakes. And then if currency volatility comes back, that's it. One on stock charts looks. I mean, the one on even that's the one we show, right? That's stock charts. That one, it looks hideous. Let's see. Yeah, it looks like the 2008 levels where it just you have the tilt. If anything, we're tilted more than 2008. So you didn't even get that like uninversion there. Like 2001 though, you had it. But we were cutting by the time we looked like this. So by the time you did the like Cobra, that's kind of what I call it. By the time you started doing the Cobra on the rate, like we were already cutting. So you see how like we have the inversion heavy. By the time that happened in 2001, bro, by the time that hit once, we were already cutting. So in then 2008, it barely got like that. And then again, you were cutting within 6 months. So it does look wild. That's why I've been saying I'm waiting for it. Snap, Goldman cut to 7 from 8. Was that Goldman and JPM this morning? SPY's back to VWAP. I mean, remember, it's still a pre-earnings day, and you have Jerome Powell. So don't forget about that. It's already like 8:40. It's still pretty early, but give it a little bit, and we are going to have, 2:30 Eastern, Powell, 2 p.m. for the statement. Enphase. Like I said, I think Enphase, I don't know how they are as a company, but I mean, just given, I think that one prices in like 15% for earnings. So I'm just expecting volatility. I still have an old earnings play on it. Meta should be right after the bell, either instantly or like within 15 minutes. I need to find that Zero Hedge article. Because that was probably one of the best articles I've read all year. And just like, what was the take on it? But it was just talking about, like, again, with interest rates, we're talking 01, and even looking at the yield curve, it just like, I didn't think about it. That it's actually nuts to think about that corporate interest payments have not gone up. So pretty much all of these companies in the world, all the big money, they're not paying interest. And I guess it makes sense. Like I tell you all the time, the mortgages that are locked in at lower rates, but all across the board, it's like it's a pretty wicked chart. Are you talking about BA? No, we're talking, this is just in general. So I could probably get you the data here. This is from Zero Hedge. They're quoting, who is it? I forgot. It's Albert Edwards. I think he's Societe General. SocGen, yeah. Society General analyst. He's a pretty big bear. So he's a very bearish guy. But this was his note that he put out recently. And he was showing this. And what it is that in red, this is like your corporate interest, like the percent of interest cost that you're paying, right? And it's just showing how over time, like in history, when interest rates go up, the amount companies are spending as part of their profits to cover interest, it usually goes up with it. That's where interest crushes people, where they have to pay, right? So take a look. Since 2021 or 2022, although we've been watching interest rates rise up now, this is like the first time you're not watching the interest rate. I guess in 2005 that kind of happened, and then it hit in 2007. But you're watching it again here today. So this is what he's showing, is that this just highlights exactly why rate hikes have had zero effect. So pretty much, even though interest rates are going up, with how these companies and corporations are structured, the maturities, all of that, they haven't had to they're not spending more money on interest. They're making money on the inflation. This is supposed to get rid of the whole greedy narrative. Like, are corporations greedy? No. Well, yeah, but no. But or are they more likely all of this money is just the fact they're still alive is because nobody's paying interest? So it's a very wicked concept. But that's what all of these are showing. So again, net interest payments have dropped by corporations as inflation or as rates have gone up. So again, last time that happened there, even on the other chart, interest rates are going up. You're spending more on interest. That has just not occurred so far. It is the lag effect, but that's very, very lagged. Or again, you're just nobody is getting affected by it, or we're gonna watch that strike maybe 6 months, a year from now. So I thought that was a really cool take. That was definitely, I think, one of the best ones I've gotten so far. Michelin, they're releasing earnings. Again, Amazon going up. They were just announcing a bunch of that AI stuff. Yeah, it's because they haven't had to roll over their debt. Some have had to, but a lot haven't had to. And then maybe they won't. But it says a lot, because that's where, if that's usually where you would watch things slow down, even from a top-down effect. If corporations, that's what kills their profits and everything. They're spending money to service interest. But if you got loans in 2020 and 2021, you don't have to service that for a very long time. So even though the rates are high, just the loans people are, it's not hitting these big companies the same way it has in the past. I guess is for Meta. So all I see is just it looks like stabilization in the ad market. That's about it. Other than that, it's it's going to rely on young Zuckerberg spending and CapEx, and then we'll see. Again, they had a lot of charge-offs last time, so maybe they'll be able to get more profits out of it off of the firing and all that, but we'll see. And big companies jack up their prices. Yeah, they did for inflation, but nobody's paying interest. There's just and someone said it's like, why wouldn't you just take the risk-free rate? You're exactly right. Imagine if you were Apple, or if you're a big company and could pull out billions of dollars in 2020 or 2021. Dude, just go take that money and put it in a bill. And then go pay whatever 1% or 0 you're at, and then go collect 5 from the government. If you're a bank, put it in your excess reserves and double dip on that shit. Like, it's just, so it makes sense, but it's like, wow, I didn't really think that, 1 year into this, interest payments are not really reacting to any of the interest rates. BA new high, so they recovered there. That's it. Again, it was the China orders last update. Oh, Airbus is reporting numbers now. Whoa. Oh, that was a year ago. I don't know expectations, but Airbus numbers lower than a year ago. BA got that dough. BA flying. How many deposits will I have with the one coming? Only 2. So, after, do I have my long term? So we'll get a deposit on next week or whatever. But besides that, I only have one. I have less than one deposit in here. I have $2,000 in bill, and that's my only cash. So then after that, I'll have this. How many long terms? I only have my long terms for the YouTube channel. So these 2 right here, and then I have my big boy. It could get ugly when they have to refinance, if they do though. But if they don't, if they could, how long is the duration? Then they'll be chill. Boeing, 52-week high. That's it. They went from sell-off to conference call bounce. Again, it kind of reminds me of the bank stuff. Just that's it. Anything bad got sold. But they were coming off of good earnings. But now that's 6.5. Dude, that's like the second or third play that has had good earnings and ran 6%. Google's catching a bid right now, too. There's AM Diesel. Where's 3M? Are they still up? 2025 when real estate expires. But I'm talking like corporations. So it's just like we're talking some places if you have 2024, 2025, but we're talking corporations that took out, major amounts of money at, again, longer duration. So I doubt anybody took, we're not talking 2-year loans in 2020. We're talking 10, 15, and even then, even if you're talking a mortgage, that's 30 years out. So it's just, we're talking corporations, but I think some people have maturities in 2024 and 2025, but that's just whatever the breakdown is. I don't know if it's specifically real estate or not. Yeah, Airbus maintains 2023 guidance. HCM. Boeing 240 and we good. Lots of big swings today, you're right. It's kind of like yesterday too, and then it's just weird because it's a mix of pre-earnings as well as pre-Powell. Boeing's killing it now, 228. Home Depot is on the high. Value Dow is still green. NASDAQ recovered about 0.3 from the bottom, and then SPY is down 0.15 now. You think Snap goes to 9? Anything is possible. I think Snap is just boring, dude. So, again, I think Snap, listen, guys, hey, I think it's going to be fine. I'm Josh. I work for the Biden administration. I'm Joe. Fuck. Listen, why are you gonna ask Josh questions on Snapchat? The guy sounds like my press secretary. So come on, what are you gonna just fucking make up your mind, control the balance, and keep it small? That's all you gotta do. Wait till the fucking earnings turn around, huh? Yeah, no, otherwise I'm gonna tell you it's sound and resilient. Yeah, let's go. Come on. What do I think about Robinhood? I think they will be a good buyout candidate in the future for Schwab or anybody else that Elizabeth Warren will allow to have antitrust. Yeah, I've been very clear, simple. Snap to the moon, but don't buy it expensive and get scammed on the options. Hey, listen, I'm fine. Hey, listen, it's okay to make money on options. I'm fine with that. It's fine. Everybody get a little play. I'm fine if you make a play. But stop buying the premium. These guys are scamming you, huh? Come on. I want a little dignity in the premium. You should be able to buy an option and go home at the kitchen table and say, I got a deal. There should be dignity. There's no dignity in the premiums now. It's fucked up. Oh, who the fuck? How are you spending $100 on a $10 stock for a call? Is there no dignity there? We need dignity back in the premiums. That's all. Come on. I'm fine if you make a little play. Go ahead, play a weekly. I'm okay with that. But we need dignity in the premiums. Seriously. I'm saying he's spitting facts, though. I can't lie on that one. I'm just saying, all jokes aside, I don't think Mr. Biden was lying about I feel him on that. That was the best dignity conversation I've had. I'm not saying, bro. I'm just saying. HBI, he's running. He's running. Got my dividend stars keep running. Too bad they don't pay the divvy. Hood for trading and TD for long term. You can. I don't have a problem with Hood. They've just been weird and then it died down. But I didn't. Did I put in the request to get my money out? I think I did last time. They're just hella weird. That's all. I see them as weirdos. I sold most of the shares. Yeah, I just have the Airbnb leaps and then my Abivi, just because I had it on drip. So, and then I think Ford shares are still in there. CrowdStrike close to acquiring Bionic AI? Whoa. That's not BBAI, is it? No, that's big. Which one is Bionic? Isn't that a company? I feel like I've seen that one. There's no AI, or it's not IonQ, then maybe it's not publicly traded. Different. Teladoc 25 is pretty good. Yeah, that's what happened. Remember, Upstart wasn't even a good earnings. It was just better than the worst one. So now Teladoc's hitting a high, but our premiums are actually lower than where we made them free. But then again, it's free. I made mine free, and I'm going to hold those now. But the rest is on you, but we've already made them free. So it's up to you on that. But the play was good. It worked. That's all. But I want to make sure we don't lose on it. Book a little bit, and then let's ride. CrowdStrike is AI. Hunter's Biden's attorney tells court that the plea agreement is null and void. September call debit spread. Could be good. Again, I'm just 420 though. I don't know about another 100. So I think Meta could be decent, and only because there's no negative advertising trends. That's all. But Meta is up a ton. I mean, we are up like 250% since we bought it, and I think it's up 30% in the quarter. So another $100 is another 30%. I don't know how I feel about 420, 430 strike price. That's the only problem. How will banks react to the outcomes? FOMC, I have 20K in weeklies and WFC puts. So why didn't you take your profits on the Wells Fargo puts after the dividend news? So I don't know. Banks could get affected, but I feel like you're trolling me, because otherwise, if you have 20K on Wells Fargo, you should be taking that right now. You hit the catalyst today. So that's why you should have sold that in the morning. Again, they might be able to bounce back up, but that's the catalyst, not the Fed. So I would say rates going up could benefit them, but then last time we've seen them sell off. I got 5 on it. Playing with profits anyway. I'll push it a bit. Good. Again, I've said it so many times, and I hope it has a connection, man, where there's no such thing as a one size fits all. And I really hope with any plays, you are really looking at your account when making these decisions. Because like I said, some of you should let these ride. But then some of you guys, it's like you don't want to let the plays ride after you get a nice hit, and it's like you need the cash, or you know, at least trim it or something. But use your account and use your situation to get an idea, because we could all be running these plays 8 different ways. I just can't. Well, everybody has their own thing. There's just no one size fits all. So like I'm saying, it's just, I made mine free. I think some of you should push it. If you have the room in your account, if you've hit all of the runners and you know what I'm saying, and you have that room, you should push something that's doing good. Even then, even if you've been doing bad, you should leave yourself maybe one to give you an opportunity to outperform. But it's also too, if you have another play you're thinking about, you want other earnings, or now your account is just going this back and forth, you know what I'm saying? Then that's what you got to do. You're not trolling, went from 10 to 34, held overnight, and they announced buyback. You're not clapped though. So if you bought those yesterday, I think you already had the catalyst. So at the end of the day, this was your gain on the weekly. Everything else is just it's going to be a toss up. And the Fed, I've seen them go back and forth. I think the last 2, the banks have moved opposite of the market, and then they catch up the next day. So just even on a weekly though, I think the play's done. But that's my opinion. So not a recommendation. No cookie cutting. Yeah, and just like the long term, even with trading, kind of let your situation do what you got to. Oh, he said he bought puts? I thought he bought calls. Oh, if you bought puts, then I don't know. I think that's just even a broader put play. I thought he said he bought calls. Oh, puts, that I don't know. Puts, that's just the general risk on whatever happens. So again, maybe they do the inverse. I think puts are a little harder to say. I thought calls, I was like, that's an easy play. If you have calls, take your damn profits. You bought the 350 and the 2. That's 350 is a little better. I don't know about 420. That one kind of got me a little bit. I was like, that's kind of high, man. It's already ran up a lot. Nvidia reject. Oh yeah, where's AMD? That one sucked. I was coming back. It's really right where I bought it for the second one. BA's killing it. Airbus just had an earnings too, so that's also in the background. That's kind of fueling it. Why don't you do contracts? I'll just go with the future if I was going to pay the index. Again, the options are not your friend. I've been playing a couple. I've been dabbling with them. I'm using my bill money to play for any options gambling, but I'm keeping them small. I have zero expectations with them. And then, like I'm saying, it's just I only use them when I want to protect myself against the downside. So I don't want to get trapped on an index play here. But if I was going to go with the index, I'd play a MES or an ES. JD sell. I don't know. I think JD balance it with other exposure. So it's one thing about how much it's at. That one could move, but I view JD as kind of like a step into holding or getting rid of my BABA. Your light bill money. So I have an account. I have another trading account. Well, it's literally this E-Trade because I just use E-Trade here, right? So what I did was I put a shit ton of money in the bill on this account so that it pays me every month interest. And then I will use that interest to justify any of these $50, $100 options, and then I won't spend more on options unless I make money, unless I get interest or a gain. But even then, like I've just been saying, so far for 7 months, my share plays have hit, but the options are 50, not even 50-50. It's less than 20%. So I'm there, chilling. But I'm just saying the options aren't your friend in that sense. I think you could hit a couple. We just hit Teladoc. We've hit a 3,000%er this year, you know. But that's about it. I still have the Meta put. Yeah, that one we went over that. That and the Amazon, surprisingly, they're still up. Valuation with Meta and the broader index at 20 times, NASDAQ at 30. Do you think it could close the gap? No, I don't think the gap should be there. So the NASDAQ's at 34 times. The S&P and everything unweighted, equal weighted is at 19. So I think Meta's at the perfect spot. So that's it. The NQ, I bought it on short on a non-farm play. I was only going to do it for a flip, and I was like, man, this is going to come back down. And then I tied it into my broader thesis, and then I just kept holding. And then it kept going, and then it kept going, and then it dropped once, and I had some profits after the rollover, and then it shot right back up. And then I was buying shares too in between all of it. But so I pretty much made the loss back with shares, but then it cost me. That was my big bad play of the year so far. So, but other than that, I mean, that's why I'm thankful for the shares. I just, without the shares, that would have sucked, dude. It would have sucked. And I'm not talking long-term shares. That was the extra bonus. But I'm talking about, holding the NQ. I used it as pseudo insurance to go into the AMDs and other stuff, and that's it. The net loss was like 55,000 on the NQ. So, and then I think I'm going to make it back by either end of the year or another time, and then I was able to make back most of that from the shares. MPW as you foaming at the mouth? Wow. MPW just pisses me off. How did you decide? I cut it because of the season. I don't think the market should be here, but then again, I've sat through my life many times getting murdered, like thinking it wasn't supposed to be there. You know what I'm saying? So I just didn't. I thought July was going to be very bullish. The Fed is cooling down and everything. So I decided to cut it for July, and I said I'll reassess at the end of July in the Fed meetings and earnings, and then I'll go back into it. Or I could keep my life simple and see where I'm at. But that's why it was the timing, because I was waiting for 460 for the beginning of the year. I told you that in the beginning, and then now I was like, dude, it's just July seemed very bullish. Everything was going there, whether I agreed with it or not. So it saved me. I saved me an extra couple grand. But then now we're gonna come back to it. So I'm not done with it, but I'm also ready to walk away. But in the sense, I just wanted to keep it limited. But that's why I'm also thinking yen and bonds will just be 10 times easier than shorting any equities. That's it. NQ Heart, I went pretty big on Upstart, so that helped. Yeah, we're going to get it back. I mean, I'm not worried about it, but it's also like, it was just, I think the real question is, do we chase the NQ or do we just go for the yen and the bonds? And I think the yen and the bonds, no matter what losses we get on those, they would, you know, in the next 12 months, if we get our event, there you get all your money back. How do you get more bookings at Airbnb? Lower your cleaning fee, and then offer some cool shit. Make it look very hipster. Just remember who you're renting to. You know, people want events and stuff. Like I got mad board games. Like my Airbnb's fun. I have I threw in an arcade machine. I took shit from my house. I used to have like a NBA Jam arcade machine in my house. I fucking put that in my cabin. I said, fuck it. I haven't played that shit in 3 years. So I said, you know, put games, put all the streaming platforms, make it a home for them. You know what I'm saying? Make it like dope for them. I got a popcorn machine in there. And it's just like little shit like that. Get good pictures. Hot tub. Just, I have firewood for people. We have marshmallow kits and s'mores, you know? Just like shit where they come up there. And that cabin is hand over fist, man. I love it. It's fun. I don't really do that much work on it. But, you know, that's from the people we have managing. And it's just so, it's nice. People do it. Where can I book it? You tell me. I give Najee. It's on the house. You tell me. You get. Let me look at the schedule. I'll find you a week, or you tell me whenever Najee's. I'll give. If you want to go up there, it's better in winter. That's my hot season. But I got a weekend for you, Najee. Any day. Yeah, video games, Roku sticks, exactly. That's what people want. I mean, that's the shit that goes a long way. And then where it's like it's cheaper than a hotel, and then you get that stuff, people are going to feel good about it. And then if you don't charge an arm and a leg on the cleaning fee, you'll get promoted on the bookings, and then that's it. I like it coming down. I mean, this is why we got out of it and all the other ones. I like it below 700 on ZW, but I don't know. You could try to buy the dip here. Down 6 is a big one, but I do think you get more safety if we buy it lower. Yeah, home good signs, live, laugh, love. I have one of those. I do. I'm not gonna lie to you, bro. You know, I have a guest book too. So, like, we leave people a guest book, and they're able to, like, sign it and tell what they did on the trip, and then you leave it for all the other people. So, like, if you go to my Airbnb, you could, like, read everybody's stay. Not like a review. Like, they write it in hands, and they'll put stuff in it. We let people autograph it or tell a story, and then they just do their thing. Good is lit. Mm-hmm. I'm going to stay in your cabin too. Run it, baby. Run it. Would you agree that money is made in the buying price? Yeah, that's my age-old phrase. I've always said it. I learned that. I forgot who told me. It was one of the... Who was it who told me that? Someone told me that when I was young, and it stuck with me forever. And, like, it really, like, that changed my life, understanding that. You make the money on the buy, life-changing. For real. I hope you get it. Like, you only get your money back when you sell, but the act of making money, it occurs on the buy. You know, you get something with a good enough price, a good enough value, that's what's making you the money. It's not necessarily selling. You know, you could sell certain things, get your money back. You could buy something any day today and sell it and make money on it, but it's like the real big gains and the real solid positions, those happen on the buy. $50. Is Teladoc? No, that came down. Very good. Yes, it's very. That's why I say with like real estate, because everyone always asks. That's why I tell you all, you make your money on the buy on real estate. So sometimes it's about what's going on, but that's why I tell you, I'll buy a house anywhere in America. Because if I run the numbers and I get a price, I know the buy price. I'm like, that's where we're going to make money. So it was nice speaking with you yesterday, baby. I'm interested in renting out your cabin. Shout out to everybody. Oh, man. So we'll see. I got occupancy on there. That's why. And then I might have to give you guys the slow months then. But my slow months are pretty good. I'll look at it, though. I'll look at the calendar and see. Because sometimes I'll have like 1 or 2 nights that like are in between and not booked. I would gladly give that to some of the OGs out there. It's about like a 2-hour drive from San Diego. Or like even like 2 hours, hour and a half from LA. How do you run numbers? You look at the comps, you look at the property, you factor in repairs, what it would need, the size of the property, and then that's it. Run it. It's a good one. It's a good one. Oh, Hanny, yes. I'll be only if I like know you though. Like some of you I haven't met you, but I feel like I know you. So I can't offer this to everybody because I haven't even told people where it's at. But I mean, some of y'all I love y'all, bro. So you guys could take my dead days. So like, you know what I'm talking about? Like, so what happens is like somebody will book a weekend and then Monday will be free. And then the next guy won't come until Wednesday. So there's like a 1-2 day gap. Those always happen. So that's where I'm like, you guys could just take it. That's what I do. I let a bunch of people use that property. So like I have another mortgage guy who like he helped us with the deal. I gave it to him for like middle of the week. I said, run it, bro. That's all you, man. Let's do cabin cult nights. Okay, I think this is where it turns into a weird murder show or something. He invited me to camp cult nights. I thought I was gonna be down. Take a day or two. That's what I'm saying though. We gotta be. Look at that. It started with Najee. Now we got Dago. They got Hanny pulling up. I'm already at 10 days there. That's a third of my month there. So we're gonna have to see how this spaces out. Again, that's usually the problem we have with scalability. This is why I'm not allowed to choose any favorites, as you guys see. I don't have enough. We're waiting on BSGM news, but also the play's not as safe as you think. Both BSGM and ENZ, any of those small plays, we're waiting until news or the pump, but the risk is that they get what's it called? The risk is that they end up having like a share offering. So other than that, we are just waiting. Yeah, I think we've gotten scammed on it before. I have a customized Chad log. Leave secret messages. The ENZ is actually still working, though. But again, BSGM just died right off the bat. So this thing's still in play. That was the play from yesterday. This one is literally, they're trading half of the market value of the deal they just received. So, but no real hype or reaction on that. Apple's coming up. And then SPY's ripping now. That's a second, like, random Apple pop. Yeah, well, instant Chad. They had shares to sell before the partnership, and they've been doing it for a while. We've got dumped on them before. Bank play, I got it. I think that one's gonna be interesting to hold. I think we're up small gains on it now. We were up way more. I was up a lot post market, but I'm gonna hold that there and let this ride itself out. Apple's going crazy. Rolling in my F350. It's a good one, man. It's a good one. Minro. We're China. China's still holding up. And then JD at 40. That would be nice. And Microsoft. Microsoft 4% is not that bad. Prius wouldn't let me mark. Bro, it got good though. I'll share. Would you like to see the progress that we made on the song? I can show you later today before that. I have the first verse done. It's almost done actually. It's crazy. I don't know. I feel I should share my journey with you. Let's get Amazon is not done share offering. No, just splits. But again, that's the thing. If you're a legit company, you don't sell shares unless you really need to, unless there's really a problem. If you are a legit company, instead of selling shares, what do? And then Hunter Biden prosecutors agree to a more limited plea deal. Preferreds? No, believe it or not. There you go. You sell bonds. You just do corporate debt. So it's like, if you're legit and you need money, you're not going to dump shares on people and be like, I need to sell. I'm going to dilute everybody who's invested with us for the last 10 years. No, you sell a corporate bond. You say, hey, I'll give you 4% back on a 5-year note, and here you go. And then it could convert to this or that if you'd like. NVIDIA, they did do an offering, but that's why, I mean, you could argue kind of sketch. Again, people are still even doubting the NVIDIA guidance. We're gonna see how that plays out. But for the most part, the more legit way to raise money is sell a bond. If you're in a good capital position and if you want to raise money without it being dilutive or hurting people, a bond is usually the best way. And a bond is how you could raise money below the current interest rates. So most people, you'll probably offer a little bit more safety than a government bond or a different type of risk. SNDL, Futu Charters on the low. Wabino, what's his name? XPEV. Came back down to 19, but the deal was at 15 in the morning. Running on my F350. I don't drive a fucking EV. Gas tank still on empty, but I'm gonna keep on driving all week. 3M. Bonds up, market down within 6 months. Oh, we'll see. Again, if anything, I think that's the surprise now at this point. The only way Powell pivots is if he just ends up cutting. That's the only consistent thing that Powell has said he would not do is cut rates. And that would be the only flip-flop, it seems like, is left in here. Am I in them? I'm in shares on bank. I just bought 200 shares. I was going to do more, and then in a weird way, I don't like the deal. I was just, of course, the market was going to buy it up like 30%. You know what I'm saying? So that's why I was like, I'll chill a little bit. I'll chill a little bit, if anything, but I just went with shares. Yeah, you could use Uncle Music. Feel free to. You should. It will do a copyright, but it won't like take your channel down. It just gives the revenue to whatever, and then that's it. I love all of you too, but just don't promote shit in here as well. I love all of you, but if you guys make a trading channel or something, do not use this as your promotion. Again, I love you all, but the way you found me was through me making 2,000 videos on YouTube. I never went into anybody's chat. I didn't pretend to be somebody's friend to use their audience or network to try to promote something, And at the same time, too, if you want me to respect you, I hope you have a long term. Because if you're doing anything, that's it. No, I'm not even talking just moo-moo. There's like, it's a very common thing. And if just some people get mad if I ban them for it, but I'm just like, listen, dog, it's very simple. You ain't never seen me do that. I get it. Do whatever you want. Get a long term. I hope you teach good stuff to people. Awesome. But if you're gonna promote in here, that's just not how I got down with it all. No, and then no NFT promotions either. I'm not a fan of that. Just because other chads have gotten scammed on shit. So there's just been a lot of long history. You found me on Twitch? No way. Really? You found me on Twitch and you've been like OG Twitch this whole time? Would you hire someone to take clips and make shorts? Yeah, but they'd have to be really good. A lot of people have offered me it, but like, I legitimately need somebody here 7 hours a day listening to everything and knowing what the fucking gem is and then like cutting it, chopping it up, and making it good. But yeah, it's a potential job. Took you through the vidlock there. Hey, let's go. I hope you got the long term. Amen. Is it unwise to invest in SPY and VTI? No. You're just getting your diversification on OD. I took a fat haircut on NFTs. Well, not that. Just like, you guys don't realize. Like, I get it. I'm an asshole. And like, you know, I mean, I put in a lot of work every single day. And I love it. And I genuinely, whatever you were going to judge me on, you can make assumptions about me. It's like, I care about people in here. And it just sucks because, like, yo, like, bro, people is shady as hell, man. And like, what happened is, like, you had Chads reaching out to people, bro. They watch for a couple of months. They know some of the lingo, and then they just start hitting you up, bro. And then that's what happened. And then they dumped a bunch of NFTs. I had like 7 people like, hey, Josh, do you know this guy? It was like, he said, he was like, no, man. Like, why the fuck would I know this guy? Just because he said, oh, I watched the channel too. And you know what I'm saying? Or just because you talked to him on the thing. And then like, dude, then they just dumped ICOs on him, or not, or like NFT things on him, and just random ass shit. And it's like, it's happened at other times, and you got other people, then they get you to join like a trading Discord, and they're like, oh yeah, I love Josh, but yo, check this, and then now you're down 99 to a whatever, and you're just getting clapped. And then this whole time I'm like, wait a minute. And then they're like, oh, I thought this was Colt. I thought this was, no. It's like, dude, you got scammed. Like, you know what I'm saying? Like, my thing is very simple. Give it for free. If people want to pay for premium, feel free, but everything is going to be free. I will never ask you anything. If it even goes against my best interest, I don't care. I'm not playing with enough money like all these Wall Street dudes to give a shit. You have to recognize that. I have my long term. I have trading accounts that I built from fucking hitting 2020 plays, and we're going throughout all of it, but it's like my big money, dude, is in real estate. In my old long term, I just sit and it does its thing, but like my incentive is a lot more skewed. So just be careful. That's why I say that. Just that's why no promotion, and just watch out though. It's just like, even then, motherfuckers, like, dude, everybody out there for a buck, and like people, you'd be surprised. They could act a certain way just because they know the things you know, and you see them in a certain thing. It's not like, you know, just hopefully, what do they say? Judge the fruit, judge the tree by its fruit. So, you know, you have a lot of free and good resources out there. Amen. I'm too cheap to be scammed. Amen. Amen. An NFT of your height is still a scam. Because I'm short. I found the stream. I was apocalypsing in the Colorado mountains. I needed a plug for financial news. Then it became the gateway to talk radio boomerism. I like that. Talk radio boomerism. Yep, you keep up with the link. Amen. That's a good investment. It'll pay off. It always pays up. I'm still in Baba. Teledoc has potential. It does. I made it free though. So I sold out half. I bought 50 of them. I sold off 25 for just under 100%. I sold out the 80 calls that were further out the money, and I'm just riding those. But I do think, be wise. It could be slow and move faster than I even expected. So we'll see what happens. My first source of income for the first properties, I worked a job. I was working jobs, saving up money, and then I started flipping shit on the internet. So I was able to save money, and then I partnered with somebody and did a hard money loan. And that was it. And then that was enough. And getting a job, working, or even doing any sort of flipping stuff I realized that very, very early, and then I got into everything else. I don't have BABA in the long term. I want it, but it's up based on my trade shares. GE's coming down. Are we getting our first sell-off? Didn't we sell off around here last time? Or was that 10 o'clock? So Euro close, all we did was rally. We're about an hour and 10 off of Euro close. FOMC's in about an hour and a half till the statement. 2 hours till Powell. Mm. 15-year teacher. He found the conference 4 years ago. Let's go, baby. God bless you. Yeah, you could humor people and still be polite without trusting them all. Just protect yourself. Gracefully assume people are trying to scam you on the internet. Amen. Amen. UN Secretary General condemns strongest terms any effort to seize power by force in Nigeria. I didn't sell Baba. I like it. I'm still in the JD as well. GE's dropping. Only thing I sold today was Intel, and then I made the Teladoc free. So again, Teladoc's higher. So right now the option's at the same price I paid for it, but like straight up, is that a 30? Damn. But now the stock is like 10, 20 cents higher, and it's chilling. Can you buy real estate that isn't cash flowing but will cash flow if your DTI is maxed? No. Not unless, like, they won't qualify the future rent. You need a signed lease. So if you get somebody to sign a lease for 6 months, starting in 6 months, maybe. So again, we sold out here. They went up as high as like 72. But what I'm showing you, the contracts are the same price, but now, I mean, we sold out here. The stock is 60 cents higher. Intel was a good day yesterday. I had 150 on the Intel. I only walked away with like $50, but because I bought AMD, so I don't want to hold too many chip plays. So I figured I'd cut Intel and then hold the AMD. Jay Powell is going to raise a quarter today. That's it. And then now the real issue is going to be how he communicates the next rate hike, because a lot of people are under the impression that this will be the last rate hike. So that's why the September odds will be key, and then that even leads into December and all that. Disney's kind of flushing here at the low. Hold on. Yeah, Disney is one of the ones that has not ran in this bull market. That's why I'm buying it. Exactly. Amen. Again, comes with risk, but that's my attitude in this world. I mean, we already have stuff that ran, but yeah, the one that didn't get involved in the bull market is the one I am looking for. PayPal. Yeah, well, PayPal's already went up a lot. Don't get it twisted. PayPal, it looked like it haven't had the rally when you look at it on the daily and whatnot, but I guess it was kind of like Snapchat. That bottom feed was good. So, yeah, they haven't really done anything. I mean, they were up as high as like 88, but, dude, we're up like 15% on PayPal. So, from the bottom and last earnings, it's moved a lot. I like Walgreens, but I think Walgreens still kind of struggling. You need it to do what 3M did. So, like, even then, if 3M could continue, it's good. But, like, I wouldn't feel good about this until it gets to $33, probably. So, I think it's still kind of in the sell-off, kind of like shock mode from earnings. What does that remind me of? Walgreens. Oh, 3M. So, like I'm saying, like, remember 3M did that? 3M has been dying for a minute now. So it's like this earnings here, if it starts to break up, that's what I'm saying. If you could get back up here to 117, then that will be kind of get out of the gulag. Actually, really 120 is what 3M needs. 3M looks nice. I mean, I'm not mad at it. I hope, again, that was our only other play. That was our only other play that was down besides Disney for the year. But now, I mean, we got a nice gain and we got 2 dividends on it. So I can't really complain about it. Yeah, we added that to again, we went over it every time because There's a lot of FOMO. Things kept going up. I've been just saying here, don't buy the things that have ran. We went over what we bought this year. I saying it. Everything I've bought this year has been a value play. That's it. All I've bought in is things that are trading below the market that I believe can be here for 10 years. Stuff with higher quality. 70s, otherwise wait. If you bought in the 80s, yeah, I would wait. But again, so don't put words in my mouth and try to say I said this and that in that sense where it's like I'm hoping there's no price for it. Just be smart in the sense of you're buying Disney for the long term if you want to underperformer, or you don't buy it if you stay away. So everybody wants a fucking price because it's going up and down, but you can watch what I'm doing. I don't care about the price in the short term. I'm just saying this is at that bargain bin level. It's 2015 prices. I mean, we could get caught up about a couple of dollars, $10, $5, whatever it may be, but it's kind of more the overall decision in riding it through. Again, 3M, that's all. It's just, you guys sweat me about the prices on 3M the whole time, but it's just like the general idea, follow through with that, and that's what we're going for. It doesn't fucking matter when or where you get it. It's just all, are you in it or not, and are you balancing in that frame too? So there's support levels we could go to, but don't ever be committed to a price in that sense. So that's why I'm saying, it's like, I'm not saying only buy 70, only buy 80, only this. No, it's just, it's an underperformer. You know, we're talking about it now because somebody just said the most accurate thing. They said Disney is the only one that has not participated in the rally. And that's why I'm like, exactly. That's exactly what we want. So, and when I go through this whole year, everything we bought was an underperformer. That's all we wanted. So it's still underperforming at 70, at 80, maybe at 90 as well too. But the idea is until it catches up, I like it. And if it does catch up and do its thing, then it's going to be over. That's kind of why I like PayPal. We did the same thing with PayPal. It's up 15%. So where is it? So like this year, again, drip, first play, covered calls. So yeah, first play of the year was 3M. Then we did MPW, 3M, MPW, then PayPal, then Walgreens average. I'm still down on that, actually. So Walgreens is the only one negative on the year for that. And then drip, then 3M, then Disney. So that was in June, the first Disney. And then we got the recent Disney in July. And then that's it. So Disney and Walgreens are the only ones down. MPW, the best pick of the year. I guess for 2023. I mean, 2 months before that, we hit Redfin, and then Meta, and then Netflix, and then Airbnb, and then Uber, and then JP Morgan. But yeah. Come on, Disney. If Disney gets bought, cool. We have a good price. And then Meta still has earnings today. Only like MPW. Yeah, the other ones, I think this year was all those. No Netflix this year. So Netflix was old. Surprisingly, Netflix was the oldest one. But PayPal, I like already up. I'm not buying more. 3M, I like it. And then Disney. I like Disney. I think it's, the more people don't like Disney, the more I'm liking it. It's doing exactly the same thing we've done every single time with all of the plays mentioned. But Disney, it's not going anywhere, guys. So I'll just keep thinking the world is ending. Like it's not. That has been the narrative the last year and a half, and any challenging company, again, like we've been saying, it's like everybody is expecting death and destruction. Where it's like, I don't like taking these bets that these behemoths are going to fail versus maybe they'll just have a struggle and then come back. Seems like you like it. I do. That's what we're talking about. And that's, again, I'm talking about value plays and the long term. And then, anytime Disney comes up, it just brings up the conversation. Why do you like Disney? You know what I'm saying? I was not trolling you. That's okay. I didn't ban you. I didn't think you were trolling. Again, you may have not noticed or not. If you troll, hit me with some bullshit. I'm just kidding. I've already banned you without even saying anything. So if I think it's genuine, you're in there. But I gave you my advice. Again, it's not a recommendation, but for a put, I think you gotta make a gamble. I don't think my opinion would help you. But if it was a call, I would be taking the profits on that. I think it's an easy play to the upside. So the downside, I think you're just relying on everything else, which is going to be a hit or miss on Powell Day. But yeah, every single time, 122 on Teledoc. Let's go, baby. Amen. Mr. Hanlander. Disney is contrarian for the sake of being contrarian. It's not. Disney, it's simple. You could be as dense as you want about it. The stock market has went up 46% on the NASDAQ in 7 months in a 5.5% interest rate environment. If you want to buy a stock, don't buy a stock that's up. Buy a stock with longevity that is not up. And not that many names meet that criteria. So Disney is one of them. Everything else, we'll see what happens. And then if it ends up being awful, we pivot out of it in 2.5 years by never buying it, and then we go to the next thing. Amen? Amen. Bonnie, you're amazing. Well, thank you, my friend. God bless. I hope it helps, though, man. I wish I had something better for you, but, if you want to listen, man, I'll just tell you now, I could change your life forever right now. If you're the type to throw $20,000 on a weekly, just fucking get into bonds, dude, and sit, okay? Because if you don't give a shit about $20K in a week and you want money, go buy bond plays that you could hold for the next 12 months, okay? That's all you have to do. Go buy YCL, or that's the yen. Go buy IEF. Maybe I'll get you a future on the 10-year or maybe even the 2-year, and just buy it and hold that for the next 12 months. That's all. Seriously, if you're going to gamble $20K on a weekly put. Otherwise, because it's like I can't give you any. That's the best advice I could give you, because I can't advise on a daily play with any real accuracy, especially on Powell Day. You went for the January 30? Hell yeah. Nice. We got just under 100%, but that's dope. Even close. You're almost in the money. Holy shit. Yeah. No dailies. You can if you're into it, but I'm just saying, like, if you're taking a $20,000 daily, weekly play on a bank stock, and like you're trying to make big money and you're willing to take that risk, you could just slow it down and go with a big play on a bond, and that has more likelihood of just like over the next 6 months, you're going to get at least one opportunity in that, most likely. If they bring it back, they technically didn't lie. That could. Disney's dividend is going to be semi-annual, though. So it may not. It's going to be higher than 1 cent, but their dividend only pays out twice a year. Or at least that's how they used to do it. What return? I don't know. I mean, I don't have a return. I'm just saying, if you are going to gamble on a weekly bank play, you are better off gambling on a 6-month bond play. I don't know how much I know you'll make better than losing. That's all I'm saying, is that if you go for a 1-week bank play, you have 3 days to make money. Whereas given the environment we're in right now, if going on a bond for the 6 months, you're way better off getting a move than not. Can it go up? I don't know. That's not what I'm saying, but it just depends on. The one is a very low quality, high money bet, where I'm saying take a high money bet and put it on something with more of a chance of surprising you. Why not play future? That's what I'm saying. He should do that. But the only difference is that, my man, you can't just put 20,000 down on futures. You see what I'm saying? Remember, futures is a commitment. So if he might think he's putting down 20,000 and open up 20,000 buying power, but then he might lose 20,000 in a day. So he could open one contract and hold it till a 20,000 loss or two, but theoretically that's where it gets a little more challenging, especially if there's no experience in there. But even then, I would feel much better about a bond one. I do trade futures, yeah. I'm actually very, very decent with them. Again, besides the NQ so far, I mean, we've got some profitability since trading futures, a decent amount. Shares are great too, man. Shares is just lack of leverage. Again, futures are crack. Shares are just, futures are shares on crack. That's it. Open face owes you an apology. No, he doesn't. Nobody owes you an apology. If you think that, then that's the case. Then otherwise, you know, we may have just lost our moment. We don't have access to stock trading, huh? I'm learning futures, options for, I think I could move to futures. Paper trade them for 3 months or a month at least. That's it. If you cannot paper trade futures for 30 days, you're going to get clapped. That's all. I know it. Is this the difference between the, you know, type beat who's like, I could do it. No, it's fine. Why would I paper trade, son? I'm like, okay. You know, just so paper trade 30 days is the test. If you could paper trade for 30 days on futures, get used to it, fucking move to real money, start with the micros. I got your back. I think you'll be good, you know, but otherwise just that's the only thing. But that's a really good test. I'm telling you, 30 days paper trading, it's just such great experience. That's how I started. So again, I didn't trade a real future till I paper traded them. And I made sure I got familiar with it, and I tried a couple plays out to have an idea of how it's going to work. So you do that, it's very, very good. The micros, they're good. Keep them small, then work your way into like 2 or 3 when you want more size. But the MESs are manageable, dog. They're very, very good play. I like them for the size and how you could go back and forth. It is trading on crack. It's just better because there's no premium. That's all. It gives you leverage of options without premium, but then it's still riskier than shares. That's all. Because shares is the real answer. That's it. No matter anything I explain to you, you have to understand it. Shares is the answer. That's all. Everything else is it's just dancing with the devil. Everybody else offers something. You see what I'm saying? They start offering leverage, or it's offering low amounts. You know what I'm saying? Minimal gain or minimal risk. It's like, but the shares are the one that are just like that. It's in the center of everything. It has it all right there. It's giving you enough leverage, not too much. You could still do a little leverage with margin, but not too crazy. And it gives you everything in the middle. And it's like, that's a good place to start. So, but that's why I hope you do take the wisdom. I appreciate that, Killer, because it is like, all I'm saying, if you haven't noticed, I don't tell you guys not to do drugs. If anything, I'm showing you all of the tools. But it's on you to know. I'm just saying, if you want to go this way, you use the futures. You use the leverage, right? If you want to leverage and limit downside but lower chance of making money, go with those options, bro. Go with the earnings on the options. But I'm like, the middle is in the shares. So I'm telling you, there's other way. You could go hit the other shit if you want. But just understand what everything is offering. Everything is a rationale of I get this, I lose this. I get this, I lose that. So just make sure it works for you. That's the whole thing I've been trying to say today about when to push these plays or not, is like I hope you're applying them to yourself in that sense to be able to say, okay, this makes sense or this doesn't. Wisdom, 3 weeks, help me. Don't necessarily focus on oil. Try the companies that produce it. Amen. Amen. Except for earnings, yeah. Even afterwards, shares are a little better. Earnings, even shares, it's scary. That's just what happens when 5, 6, 7% moves, you know? The Swedish rebuttal movement? No, wait, what? No. Oh, shit. Yo, yeah, let me get that one, bro. That's funny. Yo, bro, where are you getting these? Bro, Charlie just be getting these rare-ass G-Shocks, bro. What the fuck? If you're an option seller, that's fine. Just all you got to do is just stay away from the... Just stay away from the ones that are prone to surprise. Like, stay away from Teladoc. You see what I'm saying? That's it. If you're selling options, just stay away from the squeezers and stay away from the ones that are prone to surprise and that their premiums aren't really that crazy. You know, that's the best advice I could give in that sense. BSGM. Or just talking shit about him. Well, that's good. Airbus reiterates plan for hydrogen plane. Homie's got me. That's dope. I'm down. I like that one. That one's really cool. He said that Switzerland is the greatest country shirt got you. Have I showed you the I love my hot girlfriend shirt? I didn't. Did I ever wear that in a video? I forgot where I went. This was a while ago, but the first time I had to ditch my girlfriend to do something questionable, she bought me a shirt and made me wear it. I have to wear this. I don't anymore. I had to the first time. I think it was when I went to Vegas the first time by myself without her. I have a baby blue shirt that she bought me and she made me wear it that one time, and it says, I love my hot girlfriend. So I wore that in public once, and then that was it. And then she allowed me my freedom. It was a good trade. That's why I told her. I was like, that just sounds like a challenge to the hood rats. That's exactly what I told her. I said, okay. But it's just stupid. I like it, though. Like, I love entertaining this idea. Like, my girlfriend, like, she just has this idea that girls come up and talk to me. So, like, honestly, I just entertain it because that's never happened in my life. Like, you know what I'm saying? Ain't no girls walk up to me and are like, what's up, man? Like, anything that happens in a movie, nothing. I'm like, so it's kind of fun talking to her about it because I'm like, oh, I guess I get to fantasize about it, but I'm like, dude, that doesn't happen, girl. Like, I don't think she understands. So I'm like, whatever. Yeah, these hypothetical girls just like they just doesn't exist in reality. Sadly. It happened to you and you got nervous? That's crazy. That's crazy that it happened to you. Sadly, you're in the doghouse now? No, I don't know. I don't know where. I'm in my house. Airbus CEO doesn't see disruption from RTX issue this year. No girls came up to you when you had a Lambo. Just do. Nobody. No. I don't. You haven't seen me, but it doesn't work like that. I'm just saying. This sounds like a conversation with my girlfriend where you're bringing up these wild caveats where if this was a rap video or a movie, you're totally correct. It would work. But in real life, that just is not what happens. So again, if any of my young guys out there, if you're like, yo, I need to work hard so I can make this money so I can go get a nice car and then maybe girls will talk to me, you're fucked. Okay? I'm just sorry. I hate to break it to you. You're better off going to the gym than making money if that was the case. And even then, in both instances, more men will talk to you in every situation. Okay? So I'm just saying, it's just not what you think. The cars don't hit the same way. Pfizer ex-dividend, thoughts on long-term. They got a little bit more downside, but, I mean, they're still kind of low. Best way to get women to talk to you is by wearing the wedding ring. Damn. Or ask them a question. What's the interest rates right now? I'm just kidding. No, never mind. See, I don't know. I'm not good advice for this. Would you buy Bill now? I'd wait to the 1st, just for anybody. Again, the month is already over, so you might as well wait. I don't think it's going to hurt you. Zyme up 1. Aren't they biotech? I did see the Barbie movie, huh? I tried talking interest rates. Terrible idea. Yeah. I think interest rates only works in here, man. I even tried to tell some of my homies about like the rate hikes and stuff. They weren't really feeling me the same way. They're like, what are you talking about, bro? I was like, it's not. Okay. What time is it? 12:51. 1 hour, 9 minutes till the FOMC, Chad. Analysts are saying Fed pause again. They are. So it should. I mean, that's everybody is under the impression that this will be the last one. I'll have stuff for you, though. I'll have the live analyst stuff. We're going to have all of that still good to go. Yeah, still 2 hikes. Well, that's the... Oh, whoa. You mean pause for today? No. I'm under the impression everyone's saying quarter point today and then pause after this. And then they're saying this is going to be the pause, but... We'll find out. Again, we have a little preview to go over, but I'll have all the analyst stuff. Again, this is supposed to be the smallest priced-in Fed meeting in like 14 months. So not much is expected. We're going to find out. But you should get a rate hike, and then the real debate is the language for the next hike, and how does Powell feel, or how can the market extrapolate his feelings from that. MasterCard demands shutdown of cannabis buys on their debit cards. Check weed stocks. Spotify is coming up. Again, they got to upgrade after dying yesterday. Again, MasterCard is demanding shutdown of cannabis buys on their debit cards. Hot dog. Airbus says not withdrawing interim production target because of any loss of confidence in the ability to reach it. No change in plan. TUP. Isn't there some activist shit or buyout stuff they've been running here? They're up a lot. $2, that's probably where it goes crazy, but I don't know if I'll play that. That's up a shit ton. And then SPY's coming down. I don't know if you realize that. We hit that high about 15 or 45 minutes after Euro close, and now we're selling off right back to the low. But yeah, TUP, no, that's big. That's what I'm saying. I'm not going to play it because this shit was just at 60 cents. You're up 400% in like a week. So that's it, Tupperware, and now it's magnet up to 250 support. So just be careful with that, but it could get a little crazy there. R.I.P. Disney. Holy Spirit, come down. Where's NVIDIA and the boys? I think, watch out, Tech is back down to 0.5, 0.6. That's where it was earlier. The Dow is still up, man. We are about to do 13 days of the Dow now. And then Boeing's climbing back up. Teladoc's still holding. Where else was it on? SPY makes a W. I mean, you have Powell. That's the craziest part. This feels like a weird earnings move, but it's like, dude, we have Powell in an hour. Yeah, yen is coming down too. I went negative now on that. Not very much. Yeah, it's still up though. I'm tripping on the Dow because if the Dow goes up today, it is tied for the all-time record of consecutive up days. So the Dow Jones is not the last time the Dow Jones went up 13 days in a row, it was 1987. Then the other time was in 2007, but it only went up like 10 or 11 days, I think. So if the Dow closes green today, we tie the all-time record, and then if the Dow goes up tomorrow, that's it, a new all-time record for consecutive days of the Dow going up. And then bonds just went negative, man. So a lot of stuff slipping around here. Again, you guys are calling out the yen and all of that stuff, but you're literally watching the bonds now unwind just right after Euro close. You're getting that move. It's kind of a little wicked. The Tupperware again. Be careful. What's that other one? A BSGM. That's still up, but they have a long way to go. FOMC. Spotify. And then Zim is on the high. ENVB was going. 1 hour left till, what's his name? 1 hour left till the statement. We're going statement. And then we have the conference 30 minutes after. Spotify keeps going. Apple now, again, Apple did the same thing. Apple was running. Last time we hit a low, it started off the bounce with the Apple candle, even bond. So we'll see how this happens. Yeah, the last 3 days has been wicked. Bonds, every correlation, currencies, a lot's going on, whether we realize it or not. I know we've been distracted. That's what happens. Everybody in America just focuses on the earnings. But again, what we were calling out with how the rate hike odds have shifted on the week, the bonds and everything. It's just there's been a lot of back and forth, and the correlations aren't hitting the same. You're getting a lot of movement, and it's like we're waiting for an event for things to either match up or pull away. And then Timmerhouse's last tweet kind of sounded bearish 30 minutes ago. Yeah, the YouTube thing just tweaked out. You might have to refresh. I don't know why YouTube's done that today. It's the second time. So instead of today having your random kick you out, you just had random blocks of not being able to chat. So remember, we have a backup on Twitch or ever. Just constantly refresh, and you'll be good to go. Ukraine's Air Force spokes says Russia attacked Kyiv, Chmelnytsky, and Khodorkovka region with missiles 9 minutes ago. If he says hike by 50, we die. Oh, yeah. Because that would just be a surprise. I think we would end up bouncing, but you would have an immediate shock. But, yeah, that wouldn't be good. It's not going to happen, though. That's all. What do you think? I think Powell ideally is going to do nothing. I hope so. I expect Powell is going to do 25 basis points. He's going to sound the same. He's going to try to defend another hike, but then he's going to give a caveat that maybe we could stop here, but he's still going to double down 3 more times that they have 1 more hike priced in, and then that's it. And I don't think he's going to say anything new. And then I think the market is going to react a little bit. Then we're going to react to Meta, then close out the week, react to Apple and Amazon next week, and then do one little follow through. And then by middle of August, we're going to get ready for Powell and the events. And then if no other data by then is turned around, then we either continue or maybe Powell flips at Jackson Hole. Oh, yeah. And that's not even including ECB or Bank of Japan, because that could also just add to everything. If you were Powell, what would you do? I'll call in sick. That's it. I'd be like, there's no point in talking to you guys. I would have got rid of forward guidance a long time ago. Said you guys are schmucks. You guys don't even listen. And when I tell you it, you don't listen. And then even after I tell you, you call me a liar. That's it. We're playing this game. I don't want to confuse you anymore. It'll be the best for all of us if I just wasn't here right now. That's all. That's exactly what I would do. I think he got 2 more hikes. So that's, I don't know. I believe that we pause after this. But it's like, I don't doubt Powell. I don't doubt Powell's effort to go for 2 more. I think they want to. But I just think something is going to pop up before then, and or I think they're good enough here. So I don't know. I really don't know. But Powell has followed through on every commitment to offer those hikes. So anytime we thought it was going to stop, and he said 2 more, he did do 2 more. But I do think that it is a little volatile. But that's the only issue. I'm a little concerned with the last 2-week rally in commodities to say there's only 1 rate hike left. Well, yeah, because that's what should happen, though. I think the commodities and people, I don't think they're reacting to rates. I think they're reacting to what's up, because by that same logic, commodities shouldn't be here. You know what I'm saying? Like, if you're telling me if it's 5% interest in all of this, and these, again, we even got oil running back up to 80 already, it's still like, well, why are we even doing that? So I agree, though. I think that you're definitely onto something there, where it's like they're not going to want to. But if anything emerges in the meantime, then we go. But Powell has been consistent. He stuck to it. And then, I mean, prices are high. Never underestimate the stupidity of the Fed. Earnings have been good. 80% of earnings have beat so far. And that's including a couple of big dogs now, which makes it much more crazier. So we got Apple and Amazon left, but still. And then Meta. Prices are high as long as they're not using MasterCard. Microsoft to provide ChatGPT software to Japanese government. Okay. There you go. Some post-earnings pump news. Some AI. That's interesting. See if they get a move off that. Again, Microsoft, I think Apple leading your bounce off the bottom. Bonds are still at the low, at least on the 10-year. Teledokian. Yeah, XPEV, we had that pre-market. So XPEV news in the morning was Volkswagen made a $700 million investment at $15 a share. So that was it. But we had it in the morning. like even pre-market, and then it went crazy. I said I'll buy it if it goes back near 15, but I don't even think it will go there, or at least some chads have said that. How would an undeniable and forced pause, beginning of the end of Ukraine war by third affect crude prices and interest rates? Oh, I don't know, Doc. What you brought up though is really cool. You know, like if there was like an undeniable forced pause or cut, and then a third party ending Ukraine, I don't know, because that would be bad and good at the same time. So it'd be, I don't know. That's a hard question. But my initial logic is a forced cut is negative. And then I do think ending of Ukraine would be a tailwind. That would be positive. Yeah, watch Microsoft, though. That news is hitting again, too. It's just coming out now. They're providing ChatGPT software for the government of Japan. Whoa, what just happened? Why did that happen? That was weird. When we're talking inflation 2.0 and higher rates in 2024, that's where our recession comes. Yeah, I guess. That is. Honestly, I think the commodity situation, that was confusing before the recession was confusing, if you think about it. So I think that will, that's why I don't want to look at it in the same way. So I don't know. It's hard. Because again, the whole idea, remember, as the commodities started dropping before everything, and then they died, and then nothing else died. And then now they're coming back up, but they led before anything happened. So tying all of this, I don't know. Maybe they ask Powell a question. Airbnb off the bottom. Yeah, ChatGPT to be adopted by Japan government for administrative tasks. That's crazy. Bro, if the yield curve control ends as a result of ChatGPT, I'm going to be dying. That's hilarious. Mr. Ueda, why did you decide to change YCC after all these years? We did ChatGPT, and ChatGPT said no other country has done it this long, and it said that is an outlier, but it wouldn't tell me the median or the mean. So, using AI, we thought it'd be a good time now to change our course of action and policy. Okay. Thank you. They will supply the technology underpinning generative AI use for clerical work and analysis. Okay. 30M. Microsoft invading other countries. Bullish. Yeah, we're just going to let ChatGPT decide everything from now on. Okay? We feel like you could think faster. And better. Okay? Thank you. NVIDIA. VOD mixed security shelf. Oh, Abivai earnings today. Woo! Fiverr. That's another one that could be like the Teladoc play, but because that one moved a lot. Even OpenFace, he commented it on the watch list yesterday. Great comment. That January chain runs deep too. Or no, January 24 runs deep. The other ones. But then these are expensive. I think they heard me yesterday, guys. You don't notice any difference? What's the difference between this option chain and the other one? I'm telling you, yesterday I found it. It only lasted, but it's kind of here, but it's not. But do you see it? So remember, I was showing you. Look at their chain. None of the chains go deep, right? But there's a very clear difference between this one and not. It's not even the volume. Maybe if volume came in, that could help it, but you should see it right off the bat. No. All they did was widen the spreads. There's no penny options. So, dude, Teladoc had penny. I bet you the Teladocs, I don't even know if they exist anymore. But you were able to play earnings on these cheap-ass stocks for a penny. So Teladoc still has them. But these are just dirt cheap still. But then again, now, like, you could have bought options, I think, for a penny yesterday, or 2 cents was the cheapest. Japan's digital agency initially plans to spend $2 million to use technology for 1 year, making it available to other ministries. Hold on, that's related to Microsoft. So Japan is going to pay them $2 million a year just to use it. Check a firm. So that's it. If there's more volume that comes into Fiverr and these spreads tighten, then maybe, but let me know what you find. But the only downside to Fiverr, you could still try to pull it off, but the chain is much just like it goes deep, but they're still kind of up there. These are the cheapest ones, I'd say, with like a solid bid. So it's not too bad. And again, they have the dollars. Because again, Fiverr was 100% higher at the beginning of the year. But then, like, you know, beginning of 2022, they were 200% higher. They could go a lot more, but I don't know, in a weird way, I feel like between 90 and like 100. But we needed big moves if you want a big leap. Remember, it's all about the dollars. Yeah, we're talking Fiverr. I was going over your comment yesterday because somebody asked about it, and I was just saying the only difference, this chain. So look, now you got 5 cents here, but these are so far at the money, it's a scam. I was just saying that the spreads are very, very wide. So this is like your best contract with like a solid third, the cheapest one, but it's still kind of hard. And then I do think the upside is a little bit more limited. Airbus CEO says suppliers facing inflation problems and finding employees. 10:35. When is it? So again, at what, 1:45? So in like 30 minutes, we'll start getting analyst comments and shit. So we're going to have everything here. Again, for Powell and all of it, it should be simple. But we're going to find out now. I'm not the brightest. I'm not clear how you identify inefficiencies. Well, that one was just one yesterday. It used to happen a lot more. It's just, again, there's been a lot of people in the market now with options, and then the demand, how they've raised the prices, and now they've learned. I've put in all of my tricks out there on the internet, so they've learned to patch them. But the very simple logic is that a option is prone to mispricing if it has a lot of time and is out of the money. That is Black-Scholes 101. Well, call me an idiot, call me whatever you want. That's a fact. So that's where it starts. That's the whole basis of yesterday's play. And then just the fact of looking at how deep the options were. The market maker wouldn't even offer you the opportunity to buy time and out of the money because it was harder to price. So that's why I went for it. And that just, I don't see those opportunities all the time on stocks that have, you know, dollar movement potential. So in this case, if you really want to learn something, is that longer dated options, with the more time, max time, and out of the money are almost impossible to price. So that's why the computers have a problem with it. Even the model of pricing options, the Black-Scholes model, that's where it runs into errors because you can't tell me about a year, 2 years realistically. And then we're talking big numbers out of the money. It's supposed to be low probability, but it's kind of hard to put your finger on it. So those are more prone to inefficiencies. It doesn't guarantee you money, but again, it makes you prone to having something at least better or in your advantage than not. They haven't nerfed it completely. It's just you have to know, like, few and far between, and that's all. That's why I've been saying. I'm like, certain tools, and I've been making these option trades, but I only do it when the market's now, when these plays are too high, and you're worried about the downside. Go with the options, but you're not. It's going to be harder to make money. That's okay, but you have to know it's because we're giving up the money we're putting up, so that's why. So just find your balance with it. Pre-written statements come at right at this. It's like at the statement at 11. He's gonna pretty much reread that when the speech starts, and then that's it. 85 or cheaper. Can you speak to that? I think the chain is just fucked up. That's why there's no real like solid bidding on here, and that's why I'm saying like compare Teladoc. It was like tight spread. I bought mine with a 1 cent spread, and it was just like you had penny options. This one, like, look it's either they know what happened or not, but like every option is showing 0 and 75. They're widening the spread on you so they could scam the shit out of you and discover value. So that's the only problem. Otherwise, like I would start looking here. These are the only ones that are legit, and they still have 10, 20% spreads. So that's it. This one is not, it doesn't scream the same way, but maybe it does if there's more volume or as the stock moves, but you might be able to pull it off. And again, none of these are guarantees. These are just, if you do see it, don't listen to me, but like, you know what I'm saying? Where it's like, maybe you disagree, throw a small one out there, but even if I see it, it doesn't mean it's going to hit. Long dated in the money. I'm just saying, every Airbnb contract that's in the money is still down. That's the whole logic of you remember that whole like, you guys remember the wave of everybody saying buy leaps and go with the leaps, and there was the leap era. I think it just took us a year and a half to see it, but most leaps. You could have bought leaps even last year, middle of last year, or if you bought them anytime in the beginning, the break-evens fucked you, even if it was in the money. What banks would sell? Oh, I feel like did Western Alliance do good? I think they did bad, but I said it as a mistake yesterday, but I feel like if we get one more rate hike after today, maybe Western Alliance is next. That's my 10. I think, do you guys want 10? Can we get 2,000 likes before Powell? I could give you 10. I gave it on the watch list yesterday, but I don't know if you understood it. So you tell me. I got banking 10. I don't know if you want regional banking 10. You tell me. You tell me. You can communicate with that like button, baby. It's a great, great form of communication. Carissa, she had 2-2. 2-2. This is how the bidding war started. This is how the bidding war started. Backwards here. Let's go. All right, we're almost at 2,000. Yalla. Yalla. The statement is expected to be hawkish. No one's expecting him to not be hawkish, but no one's expecting him to go too much off a script. Does that make sense? Everything's going to be hawkish. He's going to sound hawkish. But look at the bonds. The market don't believe him. They only halfway believe him. So it's really about, like, after he says this statement, does he say anything new that could give a different guide? That's the real key. So there it is. 2 likes shy. I need 2 more likes, Chad. 2 more likes. Yalla. 1, 2, 2, 3, 4. I don't know what I'm counting. I was counting down, but I counted up. Oh, never mind. Someone disliked the video. Sorry, now I need 50 more. I took that one personally. I'm sorry. No, I was waiting for it. Somebody's a funny man. They forgot Josh is a sensitive individual who possesses this information on the economics and is thinking this and is willing to put it out there to get. Yeah, okay, I got 250 now. Thank you. Hopefully, nobody. Let me see if anyone Oh, okay, no, we got more. Thank you. All right, here it is. So, tinfoil. I truly believe this. I believe somewhere right now there is a list of every single regional bank, and it's like a T-chart, or it's like a tree in tranches, like a pyramid, right? And pretty much every quarter point rate hike we go, there's a set of banks in that tranche that gets clapped. Hence why PAC-W and the other one had to merge yesterday. So I think now in the next month or 2 months, if we do another quarter, you're going to have another bank merge or fail. It'll go to the next set. And then if we do another quarter after that, it opens up the next door. I'm literally, I believe this. So I think if you didn't raise from here, no other problems. You go one more quarter, one more bank goes gone. Another quarter, next one's gone. Another quarter, the next set's gone. I truly believe it. Because otherwise, I don't know what the fuck yesterday was with that timing. That's it. That's my tinfoil. I believe it. That's what I was saying. I'm like, I put it on the watch list because I'm like, listen, man, at this point, that's literally what's happened. After the first rate hike, SVB. Before the next one, FRC and Signature. And then now this one, consolidation. It's like, dude, it's correlating with interest rates moving up. So I feel like based on their balance sheets and where they're at, there's a list. And the Fed knows it. I think they know it. I think the Fed or the Treasury, they know exactly who is next to go at a quarter basis point. And you could rise all the way up until you hit JP Morgan. I don't think it's intentional, but I definitely think some people will benefit more than others and they would like it. But I don't think the Fed wants it intentionally. I think the Fed is going slow because if they could navigate out of it before clapping the next guy or having to raise, that's it. Ideally, if Powell can truly pause without commodities or anything going crazy or needing to raise rates, right, then he's good. But if he has to raise rates, he might have to sacrifice another bank. It's just pretty much, it feels like we're watching Survivor, and even though your stock market hasn't paid for it, every rate hike has came with the sacrifice of a bank. Literally, they've sacrificed SVB to Jerome Powell, then they sacrifice Signature, then another rate hike, then they sacrifice FRC, then another rate hike, and then now they sacrifice PAC-W and Wall as we get the next one today. So, I don't know. That's how I'm viewing it. I think Wall would be next, but then again, I need to double check their earnings. But either way, it's just, I think you also need another hike too. They did it because the Fed was going to, yeah, 100%, I would say. There's no, dude, you do not wait the day before your earnings to announce a merger, especially if it's the day before Powell. It's like, come on. It's just exactly, I think they were one more hike, they would have been gone, so they merged. And then that's it. There's another set of banks out there preparing for the next hike if it happens. So, and then I think that's it. You go one step at a time. But then if they stop raising rates, nobody gets clapped, which, again, that's, as we got to relax, there was that one month of pausing. Tipping the teacher, appreciated the commentary. Well, get ready, baby. It's about to turn up. We're just getting started. Again, no Fed yet. I got a lot of stuff to share with you. We're going to be here live going over it. So, no, if they stop raising rates, the banks will stop getting clapped. But then if they stop raising rates, they need inflation and everything else to calm down. So that's all I'm saying is that I feel like every quarter rate point from here comes with a casualty, and it's a bank, whether it's a big one or a small one. But at this point, that kind of seems to be an undeniable trend of this year. Rates go up, a bank gets in trouble. Whether it's a quarter point or 5%, that's what's happened. Call Real Estate loves you, baby. Amen. Call Real Estate. 6 p.m. tonight. Boom. They're sitting on the losses, the deposits, everything else. It gets crazy, bro. It honestly gets crazy. This is supposedly the last hike according to market participants, but according to the Fed and what Powell will most likely confirm, this does not mean it's the last hike. So that's where we're at right now. That's if there's anything in the air, anything up to discussion for today, it's going to be the argument between the market and what the Fed is communicating. So the market, even myself, we've discussed it. I'm leaning towards this will be the final hike of the cycle. However, Powell has gotten many people on the wrong foot, but Powell is communicating this isn't the last one, and he wants to leave that optionality up there. All right, I need to go to the bathroom. Follow me on Instagram. I love you at the Trading Fraternity. That's not my Instagram's at the Trading Fraternity. Not I love you, but I do love you. All right, I'll be right back.
Thank you for joining us. When we're thinking about kind of the direction of travel here, how much risk is there baked into the prediction that this might be the end? What would cause that to change in the coming months?
Yeah, I think one of the things we're looking for is to see today at Powell's press conference, how much has he taken into account the softening in labor market? We have seen non-farm payroll data surprised for the first time in over a year to the downside. In the previous month, the Fed staff has a way of parsing the ADP number to extract the real signal underlying the labor market. And, in the minutes, we saw that the Fed officials are considering the possibility that, in fact, the labor market is softer than the non-farm payroll looks. And also, the Fed officials will have the SLOOS survey in hand as they consider the policy this week. And I also think that may show credit conditions are indeed tightening tightening more as we head into the second half of this year. So both reasons led us to think that by the time September rolls around and the Fed can write down a new SEP projection, that may cause them to indicate that, in fact, today's hike is the last one.
Now, how much concern is there that inflation will be riding above 2% into the 3% range for a longer period of time?
Yeah, I think that's a real possibility, and it depends on a lot of things that you cannot observe yet. For example, it depends on what is the trend productivity growth. So if trend productivity growth indeed is only 1%, it means that nominal wage growth has to slow all the way to 3% before being consistent with 2% target. It's very likely that, trend nominal wage growth is 4%, productivity is 1%. In that case, the trend underlying inflation is actually stuck at 3%. But even in that situation, our note indicated that the Fed will be cutting in the next year and next 2 years because real interest rate will be rising as inflation even falls to 3%. So even with inflation being stuck at 3%, the Fed will be set to cut in the next 2 years.
Now, how do you categorize the dispute inside the Federal Reserve when you think about the hawks versus the doves on the direction forward? Because the reality of the situation, it's going to be into next year that the market is looking into, this idea of how many more hikes and when they can actually cut. Yet inflation is still a big concern to many of the committee members.
Yeah, I think there probably are three camps in there. And the one camp represented by Bostic, for example, is that rates are sufficiently restrictive. You don't need to do more. You just need to wait for lags of monetary policy to go through. For example, we're already seeing delinquency rate on consumer loans ticking up. So those people think that we're one and done. On the other hand, there are those who think that there won't be a recession. Things are picking up. Lags are super short. No more monetary restraint going forward. They would be in favor of going back, hiking one more time or even more. And finally,
anyways, she said something very fire. I don't know if you guys picked up on it. What she said was that's the most accurate thing I've heard. She said the next meeting is in September. So everybody believes this will be the last one. Why Powell will not make it the last one is because they don't update the SEP till September. Does that make sense? So even if Powell truly wanted to pause today after this hike, he wouldn't do it. The only way he would do it is like he knows it deep down to hike today and then at the SEP communicate that you are pausing. Does that make sense? Because then by the next SEP in September, then he could actually move down the terminal rate and then boom, update it post hoc or ad hoc, and then you're good to go. Because now they're like, oh, this is where we think terminal will be after they reached it, and then they lower it. So they overshoot, hit it, and then lower it on the SEP. That's how he could confirm a pause. That's actually very, very good take on that. I think that's the best take I've heard. I believe it's true. I think that's an amazing take. So keep that in mind now for today, when all that being said and done. So that, I don't know. It even leads. You guys want one more? You guys want bullish tinfoil? Where my bulls at? Let me know if you a bull. Come on. Seriously, don't troll me. I need to know who's a bull. Like, I need somebody who's like, fuck it, I'm buying all the highs. I bought NVIDIA at 470. I can't wait to buy more. I need my bulls right now. Where are you at right now, bulls? I got something for you. I need a bull. I want a real bull, not perma bull, because I'm a perma bull. I own long term. That gets misconstrued. I'm telling you, you buy a NVIDIA today, right here, right now, $20 higher. That's the type of bull I need right now. You know what I'm saying? I'm telling you, where you like, Josh, the S&P is undervalued right now, Josh. I need to buy it. That's the type of bull I'm looking for right now. I need generational rally, pump it up bull is what I'm looking for. Anybody else, just please remain quiet, because this tin is not for you, okay? So here it is. The other tinfoil for today is that Jerome Powell comes out with the same F-it attitude that he had in January, and instead of playing this game of raise and wait till the SCP to pause, he just says, what if he comes out and says pause? That's it. If he just pauses and just communicates, we're most likely done, and just says, that's it, we're over it, no, nothing more, and communicates that, the market's going to, even the bonds are going to rally. So that's it, because that would be the scenario where the bonds would rally and the market would be like, fuck yeah, he just comes out uber dove. That would be a total surprise. I'm just telling you now. Like we're saying, everybody's expecting him to be hawkish. So if he came in uber dove and was just like, nah, like we're raising, but like that's it, y'all. Like, nah, don't even worry. The SCP, we gonna update it in September. Like we think it's over. And then Powell's just banking on a random event to happen to cut rates. And then that's it. So, yeah, that's your bull. That's your bull tin. But are you guys ready? We got 30 minutes, man. Do you want me to play like an uncle song? Because, like, listen, while I was listening to that Bloomberg, when I was going to the bathroom, I got a carbo. And, like, I was walking around like it was a pregame. Like, I was jumping up and down. And you know what I'm saying? So, like, do you guys, like, can we all just, like, take a couple of seconds and, like, I want to play some, like, pregame music, and I just want you to stand up. You know what I'm saying? I want you to imagine like you about to walk through an arena, okay? Because I just have my moment. I just have my moment. You know what I'm saying? So that's it. Like, it just, if you can, I'm just saying, just try it. Just try it for a little bit. You know what I'm saying? Just try it for a little bit. Just stand up. Do a push-up too, baby. Come on. The market might go down. Just stand up. Just get into it. Move your hands around.
Baby. Yeah, Boston Chris, they said it crash. I kept the band so limber cash. I kept it cool, was moving fast. I came with nothing left with the bag. You should do the math. I ain't pulling back. I'm pulling up. You pulling that. I double down, then double day. I changed the plan. I'm fuck with that. Nah. This should be your motivation. Balance growth and values. I ain't talking about it. Stop rotation. Price is going up. But daddy go up, so got inflation. Told you it was tough, but it's different when you finally face it.
That's it. Okay, that's it. Balance growth and values. I ain't talking about a stock rotation. Santander is planning to hire another 150 bankers in the next 12 months, mainly in the U.S. They are reshuffling investment banking unit in the United States as part of a hiring spree, and they appoint former Credit Suisse banker David Hermer to lead the U.S. investment banking. Didn't they already have earnings yesterday? Banco Santander. That's it, man. So I just get into it. That's all. I had my moment. I don't know if you're going to get a bathroom break before the event. Maybe I get nervous, but we'll see. Again, I'll have analyst comments for you in about 10, 15 minutes. We're just going to recap everything, and we'll be good to go. Oh, welcome, Strategic. I love you, Josh. Roll it. Roll it. Oh, you like it? Loaning on my F-350. I don't drive up in EV. Gas tank still on empty. But I'm gonna keep on driving all week. I think I just missed my exit. A Prius wouldn't let me merge. I'm telling it's bro, just wait. There's a lot more. It gets good, bro. It gets good. MPW Ryder popping. They're up 7%. RTX Where are we at? 33 minutes. 27 minutes till Jerome Powell. So, Chattadonia, I'll give you another market check even before the release, but even then, we're near the low of the day. NASDAQ's not near its low, but it's close, 0.45 down. SPY 0.3 down. Even the Dow is down now, 0.07. Oh, my goodness. And then the Russell's up because of all the banking stuff. Would have been a different day if you didn't have the PAC-W bank stuff. My goodness. Again, Microsoft earnings were not exciting to the market. Google was. They're holding up 5.8. Didn't get much here today. I guess the staple earnings, again, Coca-Cola, Boeing, they were good. Well, that's it. The Fiverr chain, just said it was a little limited. Like, again, it didn't have the same, all the spreads are wild. It only tightens up here, and they're just big there. So I think even the upside's like, I don't think it will move back up to like the 200s, and we need those dollar moves, but I think it just needs either a little bit more volume or not. But I'm going to keep watching it, but I don't like the fact it doesn't have the cheaper options. TQQ. Make off Snap. Nothing. Most people didn't make money on Snap puts. So that's what we were talking about yesterday. We just lost on our long-term shares. You held NEO for 2 years and I went positive. Should I sell out? It's up to you. Do you believe, my friend? I don't know. Did you buy it as a long-term play when you made the play? Why do you believe that now? Or what do you believe about it now? Why are you changing your mind? Was it a trade? I don't know. That song's not out, again, because like everybody thinks I'm Uncle Answers, and I keep telling you guys I do country. So I figured it's time I start sharing my country music with you just to avoid any confusion in the future. Because Uncle has a lot of stuff coming out, and I want to make sure he doesn't get all the shine because I have, I do my country music. So I've learned a lot from him, and I'm glad. That's my country song I'm working on. Yeah, the F-350 song, that's my song. Me, Josh Answers, I'm working on that. I'm working on my country album right now. That's the single. It's called F-350. Loading up my F-350. I don't drive a fucking EV. Gas tank still on empty. But I'm gonna keep on driving all week. I think I just missed my exit. A Prius wouldn't let me merge. So it's good, man. I got a lot to it. You got multiple personalities and trading accounts and bank accounts. Can I get an amen? Can I? So you'll get that song. You might get that song sooner than I think, man. It's gonna be great. Perigo, finally. I think we're break even on that. I record and mix it for myself, and then I edit all of Uncle's stuff. I'm not really good at it, but gets the job done. That Prius line goes stupid hard, right? Nah, man, wait till you hear the full song, bro. It's so realistic. Like, honestly, it's like the truest song. I mean, I haven't written too many songs in my life, but it's like the truest song ever, except I don't have an F-350. Besides that, it's just like, oh my gosh. You have no idea. Like, they don't know, bro. For real, they don't know. Like, you ever try to exit in a Prius when it let you merge? You don't understand, bro. You don't understand. I do. Yeah, Perigo, we're break even on that now. That's an old play. Again, we played it on the abortion news stuff here, and then they dropped, and now they're coming back up. I think they have earnings coming up. When you have a big truck, people move. Just the Priuses and Teslas and Kias and Nissans in California, they're not afraid of you. Okay? Some of you should learn from them. Some of you should take on the attitude and morale of a Prius in California. They're not scared. They don't back down. You think they're scared of your truck? You think they care? I have a fucking brush guard on my car. You think they're No. They say, hit me. Go ahead. Hit me. Go. I did do it. I dare you. They're not terrified, sir. So unfortunately, it's a different world out here. Okay. Is it game time? Almost 5 more minutes. 5 more minutes, and then all of the reviews start. The song hits way hard. The song is like a country song. I tell a story, you know? It's like a real life story that I've been through. So wait till you hear it. You're going to like it. It's very realistic. I think we've all shared the same experience. But, you know, that's something to look forward to in the short term. You only have to wait 30 more minutes till Powell. 20 more minutes. Actually, about just under an hour till Powell. 20 minutes for the report. KOF. Had that up here. That's is that Coca-Cola bottling? So be careful with that one. And then again, Coca-Cola already had their earnings today. Millionaire Joe Louis pleads not guilty to U.S. insider trading charges. Did you guys hear about that? So you know what he would do? That it's like this British billionaire. He was kind of the homie. It's kind of fucked up, but like he definitely was breaking the law. But like this guy was on the board of directors for like several companies. And like, dog, he just had like a bunch of like sugar babies. And he would just tell them the plays. And then he would have like a private pilot. And then like on it, like he just like, you know, just chopping it up with the pilot and was like, yeah, man, just go buy this stock. You're going to make bank. Right? And like he just did this for like decades. And then come to find out, like he actually hooked them up. These guys were all making millions. So like his pilot was making millions. His little hoes were making millions. And they were just going for years. And now they're like, yeah, man, we're going to have to charge you for that. Remember I told you, like, usually when like people do insider traders, like they suck, bro. They usually like, I've seen the SEC charge people for insider trading and they made like $3,000. I'm like, you fucking idiot. They're like, he had the information and never bought calls ever in his life and purchased $50,000 of call options for a net profit of $3,000. We are charging him with 17 years. However, we need more time to determine the crimes of Sam Bankman-Fried. I know. I'm sorry. Just take a picture. Thank you. So, yeah. Isn't that crazy? That's the guy. So he pleads not guilty. But he's like the only dude I've ever heard of who like actually hooked everybody up. Like nobody ever wins. Like I've never heard that in my life where someone was like, yeah, this guy gave us a bunch of insider tips and we all won for decades and made millions. They usually make a small amount. Usually it's not anything. He's like, no, this guy took care of all of them. The pilot was running it up, dude. I was like, wow, that's amazing. But now, and he's like, not guilty. I'm like, oh no, man. You're the only one who pulled this off. I think you're guilty. Gotta do the push out. We just had our little pregame moment, but maybe we could do more. But that's it though. It's I got 2 minutes, and then we're about to analysts are start to come out. That's it, and then it's game time, baby. And then it's game time. FOMC. Email. I'll check emails after Powell. Yeah, get there. Did they take the money back from the pilots and hoes? I think they might try to, and then take the credit. You hooked everybody up. I mean, I've hooked up a lot of people, but I did it all legally, Like, I didn't have, like, you know what I'm saying? Like, when I hit 30,000% bond plays, nobody told me. You know what I'm saying? Like, that was just, you know, I came to that conclusion and I let you know on there. But other than that, though, like, imagine if I had locks, bro. Like, imagine if I was in the board meeting, bro, of all of these earnings. Oh, my goodness. Oh, whoa, Andrew Zilla, shout out to you, brother. Enjoy lunch for the rest of the, man, I'll go to Costco and I'll eat every day for like a year, dog. Hell yeah, bro. That's a hundo. Oh, no, I'm hella down, though. I saw some girl on TikTok. Hear me out. My girlfriend showed me this one. So before I get all serious with Powell, let me enter seriousness with this story. Because I saw this girl, and she was like, I'm living on $50 a month. Not because she has to, but it's like a challenge she's doing. And she's trying to live off of $50 a month. And, like, I saw her doing, like, the food stuff. And then, like, me and my girl, we went to the grocery store the other day, and we walked away. Like, I got, like, a sandwich and a drink, and it was somehow, like, $30. And I was like, fuck, if I was that chick, I just burned half of the budget. And then we were talking. We were like, all right, what if we ate Costco every day? Do you think we could do it? And I'm like low-key tempted to see how many days in a row I could go just living off of a Costco hot dog at $1.50. So I don't know, Chad. Andrew just fed me for a month if I approach that. So I don't know. It sounds very unhealthy. Yeah. But I mean, you know, I got to run. No. Diabetes. You get diabetes from that? I don't know how that works per se, but I didn't think it just immediately led to diabetes. I thought it would be something else. 4 days max. Oh, yeah? Well, shit, if y'all want to put money on it, I mean, I'm more incentivized. Kidney stones? No, that's fucked. Kidney stones terrify me. You know, when I was a kid, I didn't know what a kidney stone was, and somebody brought up a kidney stone, and I asked this guy, I was like, what does that mean? What's a kidney stone? I said, why is it painful? And he said, imagine a coffee straw and then trying to push a marble through it. And then that scarred me for life. Okay, so please don't bring that up in here. Thank you. Okay, well, anyways, I hope you have enjoyed those for now. But we are going to now slowly roll out all of the recaps, baby. Are you ready? So we'll get a market check up here. So right now, 15 minutes before release, NASDAQ is down 0.47. S&P is down 0.27. And the Dow Jones is down 0.01. That's the thing that's doing the best. So here are a couple of things right now. After holding rates steady last month, Fed officials are expected to raise rates by 1/4 point this afternoon, bringing the target on their benchmark rate to 5.25 to 5.5. It's going to be important to watch the signal that Fed Chair Jerome Powell sends concerning what it would take for officials to feel comfortable again, keeping rates steady versus raising them again. Powell may be asked during the press conference whether another rate hike this year is still the base case. Investors are skeptical. As of Wednesday morning, markets were pricing in about a 50% chance that the Fed hikes one more time after this, according to pricing in the future contracts. So Powell will want to avoid a, quote, mission accomplished moment today by declaring an end to the rate hiking cycle, as that would only hand the narrative back to the markets. Instead, he will probably repeat the Fed is data dependent, inflation remains too high, and they could tighten yet again. If the inflation data continues to cool, few will expect the Fed to keep hiking. If prices do an about turn, then all bets are off. Prices do a U-turn. Okay, first update so far. Let's see what else. Chad hyped on. Dude, Jay Powell Day. Don't forget you got earnings after the bell too. That's the craziest part about all this. Let me see. Okay. Oh, hold on. I'm trying to get you another one. I got a couple more updates coming through. Give me a second. NIJ. No, they don't have one. Shorting all 50 base. Well, here, if the Fed futures go crazy after this, short the extremes. That's always a good one. So here are the expectations for today. A unanimous decision to hike the federal funds rate range by 25 basis points. Most FOMC participants probably still think one or more quarter basis point hikes is needed after that to reach a sufficiently restrictive stance, but they may feel less strongly about that projection than they did in June. The policy statement may hint at a dovish tilt by changing the characterizations of job gains from have been robust to have moderated. So that's actually crazy. So right now, people are talking about what's it called? People are talking about the change in the statement. I was not expecting that. So that's kind of new to me. So be on the lookout there. Some people are expecting change in statement related to jobs from have been robust to have moderated. So that will be a dovish tilt. If they do change the statement, then there you go. That's kind of new info I would like to add here. So policymakers are meeting 2 weeks after a promising inflation report showed that consumer prices rose by 3% in the 12 months through June. That was the third of a level seen a year earlier when the inflation rate soared to a 40-year high. Fed officials, however, are more focused on so-called core inflation, which strips out volatile food and energy prices and remains persistently higher. Powell could use his press conference to shed light on how officials will be interpreting incoming data. He is likely to face questions about how officials expect inflation to evolve and whether he is more optimistic that they may be able to cool prices without sparking a recession. So recent data from US and UK of other advanced economies have bolstered the idea that inflation fever has broken. Headline prices have halved over the past 9 months. That's feeding a narrative that central banks, including the Fed, are nearing the end of their rate hikes. The problem with that is that it takes core inflation remain sticky, very sticky, and well outside of the Fed's comfort zone. This is why the inflation debate will be so nuanced over the coming months. The easy yards are done. Now comes the hard part. What else? So despite the progress in fighting overall inflation, officials likely noted that some troubling price trends this week. U.S. home prices climbed for a fourth month as buyers competed for limited inventory, according to data released on Tuesday. Economists and Fed officials say that rebounding home values could affect inflation fight if they lead to stickier inflation down the line. That could require policymakers to eventually take rate hikes higher than anticipated or hold them at a restrictive stance for longer. Gasoline prices have also showed up over the last 2 days as futures spiked last week following Exxon's unexpected shutdown of a unit at one of the largest refineries in the United States. This could lead to a stronger inflation reading in August. The development is not likely to change this week's policy decision, but it could make officials more nervous about holding off from rate increases after this month. So if you're not following so far, there's only one big change here that we haven't talked about this morning. There may be a potential shift in the statement, and if it is, that will be a dovish shift. Other than that, though, if you're not getting an idea, not only are we waiting for the action today, but everybody's talking about CPI. So just don't forget, it was 2 weeks ago. Remember 3% CPI. Remember the PPI coming down, and everybody talking about all of that. That is feeding into this meeting. So do not forget about that. So Wall Street largely expects that the Fed is going to hike 25 basis points, and if policymakers in fact do so, as well as signal that they hold off their next meeting in September, the S&P can jump as much as 0.75, according to the trading desk at JP Morgan. The team Andrew Tyler assigns a 65% probability that the Fed will raise rates this time and then stop, they wrote in a note. He thinks hike and pause scenario is more likely with potential upside risk that the Fed may confirm the end of the cycle earlier at Jackson Hole. See their game plan at handy, made by my colleague Lou Wang. So here it is. I didn't know. You guys want this one? JP Morgan to buy $2 billion of mortgages from PacWest. Jamie want bank. So here's the JP Morgan Fed Day stuff. So these are their scenarios. So they say hike and pause. That's what we're talking about today. 65% probability. They think the market goes up a quarter to not. Hike and continue. 33 to 34% chance. Down 0.5 to 1. Hawkish skip. Fed completed in May. Just up. Nice. Jamie want bank. Jamie take mortgage appetizer. Yeah. Let's see. To Peter Van de Watt, head of multi-asset solutions at Man Group, what the Fed does Wednesday is pretty much baked in. Hike by 25. He is keen on gleaning insight about the road ahead, about inflation that has since cooled, particularly given the so-called lack of the dot plot. The market's gotten past the Fed unless they do something really shocking, which seems unlikely, he said by phone. The general thing is that the economy is holding up really, really well. Anna Wong, chief economist at Bloomberg, she says, we believe many FOMC members still expect one more rate hike this year, but recent soft inflation data may have weakened their conviction. Powell likely to telegraph that the FOMC will skip They will skip a hike at the following meeting in September. Oh, wow. A little volatility there. So some people are saying he's going to communicate this skip even today. And then Bloomberg expects to have more subdued inflation data and gathering signs of a weakening economy by then. Ultimately will convince the Fed to keep rates on an extended pause after July. To end his observation about Powell being likely to emphasize the Fed's decision, it will be dependent on how the data evolves. Stephen Stanley, chief economist at Santander, predicts we will hear the term data dependent at least a dozen times today. My goodness. And then right now, we got about 5 minutes. Chattadonia, 5 minutes till the release. The biggest update I'd say is watch for a dovish shift to the statement. But the S&P is edging lower from the highest level since April 2022. The tech-heavy NASDAQ is underperforming. 2-year yields are up about 4.9, and the dollar is wavering. Ba-da-ba-ba-ba. So market down or up? It depends. Again, I think these are JP Morgan's expectations. So do as you wish with that. All right, Chad. 5 minutes. The next thing that's going to come in is going to be all, what's it called? It's going to be all like quotes now, finally. You're going to get quotes from everybody here. Go to the Fed website if you want. Again, I'm going to be doing this. We're going to be going back and forth with it all. And then just go through here. That's all you're going to need. So Federal Reserve Chair is likely to avoid declaring an end to the rate hiking cycle today. If inflation cools, the expectation for further rates may decrease, but if prices surge again, the situation becomes uncertain. Most analysts expect the Federal Reserve will only raise by 25 today. There might be a change in tone, but that is very unlikely. That's another update. And then further ahead, Leslie Falcano, head of taxable fixed income at UBS, expects the 10-year yields to fall once the Fed signals a pause. They're close to being to the end, and because of that, we think yields will decline, but we don't think there'll be a material decline until it comes out in the economic data, which would be a large headwind to the consumer, and particularly Treasury yields can quickly fall, or particularly large softening in labor and payroll. In terms of policy outlook language in the statement, there was very small tweak from May to June. In May, the FOMC said in determining the extent of additional policy firming may be appropriate, language that was perceived accurately, as it turns out, as the opening of the way to a June pause. But in June, it was determining the extent of additional policy firming that may be appropriate, which suggested a greater chance of more to come, which will also prove accurate if we get a hike today. So let's see if there's any switch back to the May framing, extent to which further tightening may be needed. Dude, I think the statement's going to have a lot, bro. I think the statement might be where the money's at. And then low-key Powell just hits you with nothing. It's getting interesting. So Ira Jersey, he says the hike today may be the last, but they don't expect the yield curve to bull steepen until it's clear the Fed is done, which may come with the September meeting. We don't think the Fed will start cutting out until this time next year, and the market is priced too optimistic outcome. When the central bank does cut, they'll go more quickly than the market is pricing, and once the market comes around to that, 2-year Treasury yields can fall fast. Ba-da-ba-ba-ba. All right, Chad. 2 minutes. I think we're going to wrap it up there with analyst comments now. Whatever happens, happens. Get that statement ready, and that's going to be the money. So that's it. Again, I look for the changes. If they go back to the extent to which, I think that's a good one. And then Boeing is saying they're testing MAX certification in 2024 with deliveries in 2025. So hold on. Boeing's giving updates now on even 737 MAX certification. Let's go. Minute and a half. Intel earnings preview. Let's go, Chad. Like the video. Drop your thumbs up. Let's have some fun. And remember, the press conference starts 30 minutes after. So we're going to be here. Watch the clock every 15 minutes. The algos like to change up here, so keep that in mind. But then 30 minutes when the conference starts, we will have Powell live, okay? So let's go. Game time. 1 minute, Chad. All right. Let's get this ready to go. I know. God bless you, Mr. Andrew. And so again, have the website up. I'm going to go through it. So there's going to be statements. If any of you guys want to post the quick readouts, feel free. I'm going to go straight to the statement today because there's like 3 potential changes that might happen. Otherwise, it should still be simple. I wouldn't really freak out. We're going to find out, but it should get juicy there. So 20 seconds, Chad. Get ready for it. 20 seconds. Good luck. Good luck. We got Apple up. I got Microsoft. You got the bonds. Check the dollar. Actually, I'm going to switch Microsoft for the dollar in the bottom right. Bottom left is 10-year. Top left is S&P. 3, 2, 1. Doot. All righty. Interest rate hike by 25. Estimate there. So, okay. Nothing crazy. Come on. Low, 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 low. It's not low. There it is. Statement, statement, statement. Okay, so recent indicators, U.S. banking system is sound and resilient, tighter credit conditions. The extent remains, the committee remains attentive. I'm looking for labor first. Additional information as the implications for monitoring and determining the extent of policy firming that may be appropriate to... That's what they did when they paused last time. They'll take into account cumulative tightening. So they went back to the May language. That's a little bullish. They're going to continue to assess information and implications for policy. Inflation remains elevated. Hold on, I'm getting more headlines. I'm stopping the statement right now. Inflation remains elevated. Policy setting committee remains highly attentive. Yeah, it's nothing. Don't worry. In addition, where's labor? Continue to monitor implications. Interesting. Labor don't show up till there. Marber inflation pressures and expectations. So far, the labor, I only see one mention of it. They say they'll continue to assess additional information. Fed to consider the extent of additional firming to curb inflation. Again, that's going back to the May statement. So let's see, where is it? In other words, it's data dependent. You still got it. It's slight. Again, the labor market stuff, they didn't change that though. So tighter credit conditions are likely to weigh on economic activity higher, and the extent of these remains uncertain. Determining the lags. We'd be prepared to adjust the stance of monetary policy if risk emergence and anything go. The system will take into account a wide range, including labor market condition. They didn't really say anything crazy on it. So that labor change wasn't, I think let me check the last meeting there, but there's some alteration there of labor, which again, that's a little bit bullish. The only good thing I see off that right off the top is that they went back to the May language, which kind of hints at the pause, but otherwise data dependent is very there. And then everybody was unanimous. So not one dissent on there at all, which is kind of crazy. Yeah, very limited changes. All the market actions will be at the press conference. That's it. So only changing. They went back to May. And then the labor stuff, I'm comparing it to the last one, though, now. I think they said the same thing with labor. Yeah, it's the same exact thing on labor. Yeah. So that's it. It's coming down to the press conference. Again, more data dependent. You got like a slight hint in writing of a pause, but not solid enough to move you more than this. Bonds are reacting to it a little bit, but you got to wait till the press conference. Is it no good? No, you got a little bit. Just a little bit. The only thing you got was, again, they went back to the language in May, says additional policy firming instead of may require more firming. That's how they changed in the last 2 meetings. It's very small, very subtle, but again, besides that, there's nothing else concrete about it that doesn't, it's going to rely on the press conference, and Powell said he's probably going to say the same thing. But there was changes. Again, we were just talking about it. There was a chance for changes on that statement, and you got a baby one, but it's not there. But that was a slight dovish tilt there, I would say, on it. But you need Powell. You need Powell to drive home the pause. Again, bonds are seeing what I'm seeing. Again, whatever I'm telling you, the bonds see it until they come down. But that's kind of the play right now. But it's not confirmed yet. Yeah, statement shows minimal changes. All eyes on the comment. So same language as June with regard to potential further hikes. Oh, wait, they didn't go back to it? Hold on. The extent of those effects remains uncertain. They said in determining the extent of additional policy firming that may be appropriate, they didn't go back to the May language, the extent to which, but they took out the phrase of May. Interesting. So that one's even questionable. What I'm telling you is even questionable right now. Some people are debating it. They went from describing economic growth as modest in June to moderate today. There was no dissenters. Let me see. This one is May. May be appropriate. Oh, yeah, they didn't go back to May. May they put in determining the extent. They kept half of it, but they didn't say in determining the extent. So hold on, you might be neutral, but the bonds are eating it up, though. That's weird. But I think there's some minor change there. I think it's questionable. But just watch the 2-year, watch the 10-year. And then we got to wait for Powell, though. That was, again, you had more of a nothing burger than not, but the statement is where it's at. You got one more rate hike, and now we're just watch the Fed futures, but we're still in the game now of, again, we're waiting for Powell to tell us about the next one. So remember, everybody's talking about if this is the final pause or now, if you want anything bullish or not, it's Powell communicating the skip. So there's a warning that tighter credit conditions are going to hurt businesses and households, but they added it's not clear exactly how it'll play out. Perhaps a hint of caution here. Yeah, even the dollar's kind of tripping out. Yen's back up, but it's still same prices all day. Yield curve inverted more. Again, what you should be watching for is a bid on bonds if people believe the pause. If anything during the statement can confirm a pause, the bonds are going to catch a little bit of a rally. Otherwise, anything to the contrary might make them sell. Nah, the bill ends when they cut it. So it's decent for now. Again, Chief Economist KPMG, she says the recent good news inflation further emboldens the Fed. That means tighter for longer. Again, latest update was the tighter credit. The statement, it does mimic last month's with like a very, very minor change. Other than that, though, we're sitting in the same spot, got a hike, still questioning whether or not this is the last one, and hopefully Powell confirms that for us in 10 minutes or 15 minutes. Actually, 23 minutes. But wait here, 7 more minutes. It'll be the first 15 minutes, and then we'll go from there. Numbers don't matter. It's bullish. All that matters is Powell's attitude. Again, so the statement was hawkish. You could try to spin it for a dovish read, but again, even like I'm saying, even if they change the language, this is all hawkish. They sound how they did for the most part, but now it's just if Powell, if he wants to hint at pause, and if he wants to cement the idea of pause or skip, then we get bullish. If not, I think we might even just hold. Who knows? The dots don't matter. There's no dot plots on this one. The dot plots next time. Next in September. Yeah. So let's see. So policy-oriented sentence that precedes the language about potential further hikes is different, of course, than June when they paused, but they didn't go back to the exact May language. So there you go. They're talking about what I'm talking about. So here it is. Today, they said the committee will continue to assess additional information and its implication for monetary policy. Quote, that's today. In June, they said holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy. And then in May, they said the committee will closely monitor incoming information and assess the implications for monetary policy. So that's the shift I'm talking about. Do you guys get what I'm saying? So right off the bat, I said it's a change. Then people were saying, no, it's not a change. But like legitimately, if you compare all three, so pretty much today they said committee will continue to assess. In June, they said they will continue to assess, but they mentioned holding the target range. Today, they did not say that. In May, they did not say that. And then in May, they said instead of assess, they said they will closely monitor and then assess the implications of monetary policy. So it's very similar to May, but today they said continue to assess. In May, they said they will closely monitor incoming info and there. So let me hear. I'll show you the two. I'll give you all of them. So very subtle. That's what I was telling you. It was a weird comment. It was weird. If you read it quickly, I read it quickly, and to me it looked like a change. And then the analysts started going crazy, and they're like, "It's not a change." But now it's like if you legitimately compare all three of them, it's a very subtle change. Of it looks like May, but then it has and doesn't have stuff of June. But then it has the overall just assess additional info. That's it. The other one was monitor info and then assess implications. That's it. That's all it was. So very, very small changes. That's why I'm like, it's subtle, but if anything, it should lead to something there that could be a slight bullish tilt, but you need Powell to confirm it. So this is the only thing. That's the only thing that changed today. And it's very subtle and very confusing. I don't know. It's tiny. It's very tiny, and you would have missed it if you saw it quickly. Or if you don't care, you don't see it. But that's like the only change. AI, are they going out again? I think some of the hype plays are moving. So look, this is what I'm telling you. Here's the May statement, and this is what got everybody freaking out, getting ready for a pause. Remember, that was the first time they said the committee will closely monitor incoming information and assess implications of monetary policy, right? And then in June, when you got your pause, they changed that to holding the range steady allows the committee to assess additional information and implications. So instead of closely monitoring, they said assess additional info and implications, right? And then today, this is where they're at in the middle. Now they said the committee will continue to assess additional info that looks like May, but instead of saying we'll closely monitor, they will continue to assess, and instead of they're saying assess additional info, whereas here they were saying assess the implications and monitor the info. And then again, compare that to the last meeting where you got your pause. So that's the tiniest change that we got out of today. And that's why I'm like, maybe slight tilt kind of communicates the pause, but you need more Powell to sprinkle on that. But that's the only change. Slight tilt, but everything else is just everything we were expecting. I think it's a slight move towards pause announcement or skip announcement, whatever you want to call it, but it's just very, very tiny. Assess, monitor, all sound the same. I know they do. So, but if you watched when we talked about this in May, the minute they went from what was the phrase, and they switched it to assess additional information, it has big implications. Again, when the Fed says many, fewer, some, it seems like a small word. They sound like synonyms. Oh, but they're very, very specific, and algos and market watchers, they read it very, very deep. So believe it or not, one little change in the word, that's how we got to the conclusion that they were skipping last meeting, was just 2 word changes. So it sounds dumb, but you would be surprised how much money is trading on this. Bill, you're doing nothing. Keep riding. Bill is not affected by this. That's all. Your bill, your rates just went up. You're going to get paid more on bill next month. Yallah. So very interesting. So in case there are any doubts, the committee remains highly attentive on inflation risk. Winthin of Brown Brothers says the statement was about as hawkish as the Fed could be without pre-committing to another hike. So here's the immediate takeaways. FOMC raises benchmark rates by 25 basis points, highest since 2001, leaves the door open to further increases. Fed says they'll continue to assess additional information and its implications for monetary policy, suggesting next meeting could either be a hike or it could be a pause or skip again. Also repeats language referencing to the consideration of the extent of policy firming that may be appropriate. Slight upgrade of economic assessment, saying that the economy has expanded at a moderate pace, a change from a moderate pace in June statement, and then officials maintain balance sheet reduction at $60 billion a month. The decision was unanimous. So Powell could use the press conference to send a signal on what's going to happen in September. He'll likely choose to keep his options open, potentially using Jackson Hole to send a stronger message if needed. Officials will have more data by then. And remember, this is one of the longer intermeeting periods, which will be 8 weeks versus the typical 6. So following the observation on no dissents, it's worth taking note that some Republican fears that at least one of President Joe Biden's Fed board picks could be squeamish about hiking rates were unfounded. None has dissented, and one has been the most aggressive campaign in the Fed of decades. The statement is really treading water, which puts even more focus on the messaging of Powell. It's to be expected he will repeat his warnings on the willingness to hike again. Ira Jersey says the statement, not including any meaningful changes, could provide more fodder for markets to move. Although he may leave the door open to September and November, there's a chance he gives details on the Fed's reaction function, not only when it will pause, but almost more importantly, under the conditions that the bank may start to cut rates. Oh, yeah. Again, I think I agree, though, the confusingness of it all. I think it kind of just, puts the ball back in Powell's court, which I wasn't expecting. But again, very, very subtle changes, but there was changes. So usually when we get the changes on the statement, they're big enough where it has an effect. But today, you're getting small changes, but it was a baby. It wasn't enough, and now it's kind of leaving you questioning more into Powell. All right, not bad. How much time we got? This is 15 minutes, so you're at the top end of the first candle. Watch for the market shift here or not. Everyone's calling cuts. Yeah. Honestly, I mean, that's the thing. The changes Powell made, it could be a slight hint towards skipping or not, but realistically, Powell kept his optionality again. So even though I'm telling you it's a minor change, and again, the bonds kind of like it, Powell kept his full optionality today. It really says that's why how he communicates this will be so key, because based on the writing, Powell could say one more or he could say no more. And now it's kind of how he wants to, but I think this is exactly what he wants. So again, and a lot of people are banking on Jackson Hole for him to say whatever today and then solidify or reverse it at Jackson Hole. 15 minutes till Powell, yes. New information. No, Bullard just stepping down. That's it. Keep the party going a little bit. I like ZT. I mean, again, there's some people are saying, like, if you want to be, if you don't want to fight the Fed right now, where the market's at is they believe that by September we get a rate cut. So if you want to follow all of the bond money or the guys who really stand by their models and you don't want to fight the Fed or try to do anything, September. They're saying September rate cuts is when it's going to happen. That's when you buy the bonds. I think we might have something in the meantime. I still think we're finicky, and even then, I just think the bonds maybe don't go up from here. That's it. We just keep zoning in. Every I made a bond play last Fed meeting, but it's just like every Fed meeting we get into here, all that's happening is that, yeah, even if we do cut by September, we're now 3 months closer, so the bonds might hold. It might look like 2006. So we'll see what happens after this press conference. That could change a lot. Most of it, yeah, I mean, the market's not moving. Again, bonds, they're going up and down. People are reading the signals, but we need Powell's thing. Yeah, you've never had a rate cut with the VIX below 40. So rate cuts have only occurred with the VIX above 40. 2006 was good for bonds. Yeah, but pretty much the bonds, even though the Fed paused and the market went up, the bonds kind of got the message that the Fed was close to ending this campaign. So they held. That's why I was saying what we're really trying to determine here, the real, especially if you want, even beyond just trying to play a cut or not, if you want to play the bonds, if you could figure out this 2001, 2006 scenario, it's money. But in 2006, after they paused in June, the rates went up a little bit, but then it balanced out and then they never went up. That's why I'm like, that's why I'm not really too scared of buying them, because the yield just held. In 2001, though, it ripped up and you got blown out if you try to buy a bond too early. So that's why it kind of looks like 2006. If you take a look, this is around our pause and we're doing that little stagnating. So maybe rates go up a little bit, but we might be towards the end of it. But we'll find out. If Powell wants to be an asshole, he can. If Powell wants to be a bull, he can today. But it seems like after that statement, though, Powell kind of heightened up the importance after nobody was expecting much. U.S. prosecutors are seeking to have FTX founder Sam Bankman-Fried detained. Why? Why? He's such a productive member of society. That's crazy. I think you should like get some of those like other people who like never. Analysts, any signs of renewed inflation, key data, employment could potentially lead to further rate hikes. And then there's AMD. Let me see. Mike Loengart, head of portfolio at Morgan Stanley, says whether Fed hikes rates again is besides the point. The important takeaway are that interest rates are likely to remain elevated for quite a while, and these levels aren't necessarily an impediment to continued economic growth or stock performance. It's easy to forget that low interest rate investors became accustomed to recent years were the expectation, not the rule. The Fed funds rate is now just a little bit above its 7-decade average. In case you missed it, there's a short sentence right up in the high of the statement that says banks are in good order despite the shock that rattled the sector in March. Nothing to see here. Fed statement says U.S. banking system is sound and resilient. Gurpreet Gill, global fixed income at Goldman, says investors are divided on what this marks the last increase or not. We think recent data is consistent with policy peaking in July as core inflation has slowed sharply in June, but any renewed signs of inflation in the data and employment on Friday and upcoming PCE have the potential to extend the hiking path. All right, Powell in 10 minutes. Matt Candle down, I don't know. AMD bounced up. You're saying Microsoft's going low. Again, bonds are kind of going lower off this. They're just a little bit. Stocks are doing a little bit better, but again, small changes. Nothing much, but there's still a little bit more potential here in Powell's meeting, but we do not know how this is going to play out. I'm getting everything loaded up. Yeah, JP Morgan's buying their loans. Remember the low interest? Yeah, we already got that one. Interesting. So not too bad. Again, I think Powell, I was telling Powell wouldn't be that big, but maybe he has a little bit. But then again, if Powell falls back into saying the same shit, if it starts to sound like every meeting, nothing's going to happen. But if you start to hear good questions, I'll probably chime in if I hear one. But overall, we need something. You need him to signal the pause or no pause too. It doesn't have to be just bullish. So just keep in mind, if he wants to take a Jackson Hole attitude, if he wants to come out there and kind of, if he really fights against the rate hikes or the rate pause, then there you go. But we also are going to look for him to try to say something specific. They are going to ask him that, and you'll see how he responds to it. That could help you out there. Oh, yeah, I need to use the bathroom too. Do I got time? I might have to. A couple minutes. Yeah, we got about 7. All right, I'll be right back. Follow me on Instagram at the Trading Fraternity. Like that video. I hope you guys are having a great day. And if you don't know, we have free long-term alerts. Shout out to free long-term. God bless you. All right, I'll be right back.
That the residential real estate market, existing homes don't move, and we've been trying to fill the gap with because we've got a multi-year low in the volume of existing homes. So they've been biting there as well. Where they're not biting, by the way, seems to be in the cost of capital in the stock market. That doesn't seem to be bothered by it at all. So it's unclear as to where it is, and that might be leading to an idea that maybe all we've done with a 500 basis point plus rise in rates is just pretty much track neutral, and we're not really that restrictive, which is why we're not seeing these high rates hurt the economy as much as we thought.
Bob Michael, what would you say back to that?
I think it's biting in a lot of places. I think it is biting in the corporate world. You look at bank loans, defaults are rising pretty sharply. You look at the private credit markets, talk to people in there are real tremors there about what's happening in terms of exchanges and extensions. You start looking at, we didn't talk about central business district office space. That's still out there, unoccupied. That's owned in places. We saw that in Goldman's earnings. That has yet to be reconciled. So it's biting hard. We talked a lot about the consumer. They are really struggling.
Would you like to talk more about Goldman earnings? No, take a pass on that. I thought you might. Andrew Hollenhorst. Bob went there. Bob went there. Come on. Bob went there. I said Goldman. No. Andrew, I think we need to spend a bit more time talking about this. Just how much of the disinflation that we've seen recently is a consequence of the tightening cycle?
That's going to be a question. So again, before we got into it, remember we were telling you that everybody was coming off the CPI. I feel like we kind of forgot about that because that was the real driver here. So like we were just saying, I'm back from the bathroom. We are waiting now for the set of questions. Powell has a little bit more importance than I thought in the morning. And after that statement in the reaction, Powell, he has a little bit more power here. So again, just to make it clear, if he sounds the same as every time, we shouldn't see any fireworks. We might stay within whatever range we're at. However, if my guy comes in with some new info, if he is any more specific, especially, here's a simple rule of thumb. Are you ready, Chad? If he answers a specific question specifically, then there you go. That's it. So if somebody asks him a very specific question and he answers it without running around and not answering it, then there you go. That's a different Powell. That is what I'm talking about. Because someone's going to ask, when are you going to pause? So someone's going to say, it's going to be Michael McKee or it's going to be one of those other guys. They're going to say, does this mean it's a pause or skip? If he goes back to the data-dependent answer, nothing changed. If he changes that answer any little bit and is more specific, then we have something. But other than that, it shouldn't happen. But let's see what happens here. We got 3 minutes. And now SPY's down. So where is that? First 15 minutes, we were up back at the top candle, borderline top neutral. Second 15 minutes to the low end of the candle. Bonds fell before everything on the 10-year, so just keep that in mind. Rachel Siegel. Rachel Siegel, she's going to ask him real estate or like other inflation questions. She's not going to be that specific. I think the Politico guy, Michael McKee or Steve Leisman, maybe even Nick Timmerhouse are more likely to ask him directly that question. I would not doubt that, but we'll see. Someone is. Even if I don't know their name, someone is going to ask him that, but he shouldn't answer it. But if he does, that right there is the only signal you need. The question has to be specific as it pertains to one of the issues we're looking at, whether it's about inflation coming down, maybe even the banking crisis, but specifically him being specific about are you going to pause? Does this statement mean we are skipping? Somebody will ask that question specifically. That's the answer we're looking for today. We could try to interpret all we want, but someone's going to say it specifically. He just never answers it. So if we do get that, then boom, we're good to go. But that's what I mean in terms of specifics. Goldman, the banks, they were down and then they came up. So right now, too, reaction, we're still kind of holding all of it. Yeah, 3M above 112 again. That's what made me tell you guys about the long term. That free long term alerts. Because now, dude, 3M, it's running. I love it. But we got a little bit bigger on 3M. We have more PayPal than 3M. Do your thing, 30M, do your thing. Tupperware squeezing. That one, just be careful, but yeah, if it was above 2. Mm-hmm. Let's see. The hike was pricing in 100%, where no one cares about the hike, as weird as it sounds. We're looking for the path, because again, if this is the final hike or not, it could change a lot of the bonds, and then it leads us into the schedule for the rest of the year, the rest of the next 9 weeks, pretty much until Powell, or 8 weeks. So, because then there'll be more PCE, CPI, all of that. Then we still got the follow-up earnings. No one cares about the rate hike. We're looking at the path, because then all of the bonds will change. Oh, shit. 20 seconds. All right, Chad, get ready. This is their music they play before it. I'm going to see. I got a couple feeds. Let's see which one comes on first. All right, I got one. All right, we're live. Why are they playing the music still? I got a live feed, but they're still playing the weird-ass music in the background. I see Timmer Rouse's big-ass head, too. God bless you, Timmy. I got a big head, too, man. We're brothers. All right, so remember, count it down for the timer. Powell is not gone live yet. It's been about 23 seconds. Powell is late. Made it. There he is. So quiet. 50 seconds.
Good afternoon.
Yallah.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point.
The dollar looks to be the first thing moving.
And we are continuing to reduce our
but again, this is all
at a brisk pace.
All pre-written. None of this should move us as much.
A lot of ground, and the full effects of our tightening have yet
and
to be
again,
felt.
people get bullish right when he starts
Looking
speaking.
Ahead,
That's just algo shit.
Take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace.
See if he comments on labor market.
The unemployment rate remains low at 3.6%.
Because the state, he's just reading the statement,
continuing
but
signs
he
that
may add
supply
something.
and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy
Bonds are catching a bid, so is the market.
Inflation, and economic and financial developments. We will continue to make our decisions meeting by
anytime
meeting,
he says lags and talking about the ending of it all, that bonds are catching a bid.
Implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored.
Yeah, it is.
Reducing inflation is likely to require
anytime he wraps it up, talks cumulative lags, they start running.
And some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
Again, everything moved. Dollar died, bonds bid, stocks up.
Our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Steve.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate.
Thank you, Steve.
Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings in September and November are live, or are you in a every other meeting mode?
Asked him if he's going to raise instead of pause.
We haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language to return inflation to 2% over time.
He's answering it the same, but the market likes it.
I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change.
But he's not. Remember, that was the specific question.
The June CPI report,
he wasn't
of course,
specific,
was welcome, but it's only one report.
The market likes
the
lack
data.
of specifics.
We hope that inflation will follow a lower path, as was, but it will be consistent with the CPI reading. But we don't know that, and we're just going to need to see more data. So
I bought 100 more shares of Disney
it will be the broader,
for my earnings
picture.
flip
and
trade.
Starting with. We're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. And we'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting. And how we're thinking about meetings going forward potentially, but we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week.
He's putting it on the
data. Which is Employment Compensation Index. and lots of data on economic activity.
But
all of that information is going to
ask if it's
inform
good.
our
Will you
decision
pause
as we go into that meeting.
There's going to be a follow-up to that.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that
There
meeting.
it is. Yeah.
We're going to be making careful assessments.
He's giving you an olive branch. No, that's it. He's saying it's on the data. No follow-up question required. You got it from the horse's mouth.
25 basis points
that's
since
it.
March 2022.
He's saying you got 2 more CPI, 2 more this. If it's high, we raise. If it's not, I'm pausing.
Pressure on economic activity and inflation.
There
if I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
Oof.
I'm just going to go back to what
You're
I said.
great, Steve. Great question.
That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then.
The bonds aren't eating it up yet.
We did have one good reading.
This is equities getting too excited, but I see why. But you need the bonds to really believe.
We've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Okay. That was the first. It was good. It was a good answer. I could see it. But again, the
Thanks for taking my
bonds,
questions,
you
Chair
need
Powell.
more belief out of the bonds.
Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any
again, that last answer was good, but
on the labor market.
He also said he'll raise rates too.
Overall,
so remember that last statement was good enough for this. That's the first positive thing.
It's also
but
you see consumer
there's a little bit
confidence
a
coming
little
up and
negative
things like
to it. Don't get too crazy, but
going forward.
Understand why people are buying that.
At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS look good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
There it is. Bonds are doing it now. That's what I was telling you.
If you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating?
Again, he's saying the Fed already priced inflation too high. It's a loaded question.
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything, and we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is,
people are buying it up because everybody wanted to hear pause today, but it's just Powell saying data dependent. He's saying I'll raise or I won't, and we have 2 more CPIs and jobs.
If we don't,
so that's why I take this all with as you please, but it's the same shit.
It's really dependent so much on the data.
He's saying he'll stop raising rates, but he's also saying he will raise rates. It's just every meeting from here is live. That's all,
Chris
and he's willing to do anything.
So
we got 2 data.
Consumer confidence in the
sets.
economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. We
watch bonds and dollar here.
I'd say it this way. It's really a question of how do you balance the 2 risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually
keep watching the yen, Chad,
of where
because if
Powell's
going live with every meeting,
is affected
maybe that means the Japanese do too.
Energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is.
I'm watching to see if yields could go lower.
Actually,
so
the
it looks like,
unemployment rate is the
again,
same as
he's
it
saying
was
everything
when we
the
left it
same.
off in March
Market's chilling out, but
3.6%.
there might be a little resistance there, and the dollar's bouncing too.
To achieve some disinflation.
So just see if the yields could go lower, because that could allow the market to go up.
It's not that we're aiming to raise unemployment, but I would just say the historical record. We have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
Michael. He usually asks good
ones. At this
one.
point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market.
But
and
how
all of
are we
that should
growing
lead
and
to
slowing at the
declining
same
inflationary
time?
Pressures. Now, what we see is we see those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Yeah, that would be the one that would take it.
Well, I think we think
anytime
today's rate hike was
more
appropriate,
restrictive.
and I think we're going to be looking at the incoming data to inform
But he still
our
sounds
decision
soft.
at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
Yeah, that was bearish. Honest, I'm waiting. He said it nicely, but he just said policy has been restrictive enough for long enough. But he still said a long way to go. It's the same thing, but it just sounded. It sounded like his old
explaining the rationale for holding
hawkish, or it sounded like a Jackson
steady,
Hole, but
at the June meeting.
It didn't come off the same
more
way.
Gradual pace doesn't
So don't trip
go
too
immediately
much.
to every
Watch
other
the
meeting.
bonds
It could
and
be
the dollar, too.
2 out of 3 meetings, right? It just means if you're slowing down. The point really was
He
to
says, do
slow
not
down the
believe
decision
policy has
cycle
been
as
restrictive enough.
we get closer and closer to, we think, our destination. And I wouldn't want to go
But again,
automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
Again, he's being
So we shouldn't
he's
assume
giving you
that
what you
every
want,
other
but
meeting
it's
is the
the
lowest
same
tightening
shit, dude.
frequency, let's
Honestly,
say.
it's
It
the
could
same
be,
exact power.
longer intervals in between.
It's a little bit more live, but he's fucking with us.
We're going to make a decision about the
It's
next
not-
meeting, and then we're going to make a decision about the one after that.
Again,
And,
the market likes hearing
it'll
it,
sort
but
itself
it's
out.
not like this is that new. It's almost exactly the same. Everything.
Thanks.
Everything.
Howard
Every
Schneider with
bearish,
Reuters.
bullish, it's all the same.
So among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between
He
changes
just
in financial
confirmed
conditions
he's down
and the
to pause
response
if
to
the
those
data is
changes from
good,
economic
but he's
activity and
also
inflation,
willing to
right?
go psycho
So
if it's
we
bad.
know
We already
that
knew
in the
that,
modern era,
but now
financial
we're just
conditions
entering
move in
in
anticipation
the crucial
of our
period, and then he has
decisions,
Jackson Hole and then all the
That has clearly
data.
been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we
No,
will use our
Disney was
tools to
flip
do that.
shares, not
no one should
long-term.
doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream
Positive
estimate
territory.
of near-term inflation expectations,
That
you get a
should be
real federal funds
restrictive.
rate that is well above
Habibi.
most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after
Yes.
today's decision.
That's okay, yalla.
Meaning that it is putting downward pressure on economic activity and inflation.
So you want a
We'll
higher
keep
real rate, Habibi,
monetary
or what?
policy restrictive until we think it's not appropriate to do so.
But
So
the-
that's
no,
how
no,
I
no.
think about it. I mean, if I
This
sum
guy
it
is
up, I
not-
would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data. And given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions.
There's your
Could
girl.
you break down the reasons why inflation has fallen and what share of that credit you would give to factors
core?
that don't stem directly from rate hikes or that might be within your control at
You
all,
gonna
like
talk some
easing
real
supply
estate.
chains and
Come
a
on.
drop in energy
Come
prices
on,
over
give
the
us
past
some real
year?
estate,
Yeah.
core real estate. Nobody's talked about it. It doesn't go down.
So,
Doesn't matter.
Interesting
Again, this
question.
is St.
So,
Powell, guys. You're going to
let me
get
start
moved.
by saying
You
that
might get
the
follow-ups,
inflation surge
but
that we saw.
you got a
in the
little bit of
pandemic
good and
resulted
bad,
from
but
a
everything
collision
is.
of elevated demand.
We got 2 months of
and
just
constrained
following the data
supply,
now.
both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would
Now, this
stem
is
from
interesting. The
both
10 years
from the
breaking out
normalization
now.
of those broad
So hold on.
pandemic-related supply
That's
and demand
moving
conditions
before anything, even the
and
dollar
from
now.
restrictive
Watch if it
monetary
comes
policy,
back or not, but
which would help
hold
return
on.
the balance between supply
Yeah,
and
hold
demand by
on.
restraining demand.
Don't, if that
And we think
moves, that's
broadly what we're-
yields
what
going
we're seeing.
lower. But
So
like
to
I'm saying,
break it down a
that's
little
people
further,
believing the
of course,
pause. That's a
headline
real
inflation has
solid
come down
belief.
sharply from
They're
elevated
going to
levels
buy that
as
shit
energy
up.
and food prices have come
No, it's
down,
not bearish if
mostly
this is
due to
going up. It's
reversal
more
of the effects
bullish,
from the war
but
in
it'd be
Ukraine.
bearish in the longer
And
run.
that's
But
a good thing, and the
in
public
sense, I'm
experiences
just,
that, as
just
I
focus
mentioned
on the
earlier.
bonds and how
For core
people
inflation,
interpret
I'd say there
policy.
also- there has
Don't
been
even
a
think
role
bearish or
for
bullish. You know what I'm
most-
saying?
for
Just
both
literally,
factors,
we're talking
both
pause or
that I
not.
mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the reversal, the beginning of the reversal of spending back into services and away from goods. Take autos as an example. The combination of an increase in sales and inventories.
See, so market's coming down, but watch, this might give it up.
While vehicle
So that's
inflation
an
has
interesting
decelerated,
move there.
points to
That
a
moved before
substantial
anything.
role for supply. But there's also a role for demand, as the loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market.
Bonds going up means
I would
yields
say
down.
monetary
This
policy is
chart right
working
here,
about as
IEF
we
going
expect,
up.
and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources of disinflation are playing an important role.
I see. And just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Edward.
camera.
Thank you, Chair Powell. First, let me compliment your tie, the choice of tie. So thanks for taking our question. So the beige book, it said input cost pressures remain elevated for services
he's wearing
firms,
the same tie.
but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation
All right, your first
without
break.
pushing the economy
And
into
bonds
recession?
are still up.
As
and
it relates
dollar
to
lower.
goods, it's really an indication that supply chains and shortages are easing. And so what was the first part of it?
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So wages have actually been gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the establishment survey has, it's still at a high level, but it was at really an extraordinarily high level for
we're going to talk about it, but
years. So you see cooling, particularly
if
in
you're a
the private
psycho,
sector
you could
in the
connect
last,
today to Friday in the
in
yen.
the last report.
But then
So
that
I
the
think
bonds
we
and
see that,
bonds
and
and
it's
yen are
happening at a
that's the
gradual
only thing
pace.
rallying
So
or holding
that's
for now.
actually not a bad thing in a sense.
Again, market's
because
still up, but
if
this
what we
is
see
very weird.
A labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases like UPS, and we have the auto workers coming up.
Remember, we were talking about that yesterday.
About a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things and we'll keep an eye on them. But really,
but
that's
hypothetically
that's
speaking, what happens if you raise people's wages 50% in the biggest companies in the world?
Victoria.
No? Okay. Thank you.
Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates? Or is the speed at which inflation is falling?
Yeah, shut up. Inflation's already down. We won.
I think you take everything into account when you start cutting rates. It would depend on the whole, on a wide range of things. And when people are writing down rate cuts next year, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates?
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying
what?
we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, many people wrote down rate cuts for next year. I think the median was several for next year.
How do you feel
and
about that?
That's just going to be a judgment that we have to make then, a full year from
Fair
now.
enough.
And it'll be about how confident we are that inflation is in fact coming down to
that was the question you really wanted, low key. That was, if he answered it, that was the question you really wanted.
A good part of Wall Street
Deep down,
has
that
become
was
more
the one.
confident that the Fed is going to be able to engineer
That was very
a soft
subtle,
landing,
Politico.
and they've reduced their forecast for recession.
CMO halted pending news.
Has changed its
MXL.
view on
Watch
the likelihood
TSEM.
of
That's a
recession
sympathy.
being likely, and if you personally
TSEM unhalted.
have changed
That's a
your
sympathy
view in
to it.
terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view. And I think, that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make, informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that
he said that last
inflation has
time.
come down?
Again,
and you
he
still
said the
have a
same
strong
thing with the
labor
optimism.
market? I mean, is that?
But he said the quote is staff no longer forecast recession.
I wouldn't use the term.
I think they had that last
optimism
time
about this yet. I would say though that there's a pathway, and yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say
it's
the historical
bullish if
record
it's a change from the last answer, but I'm not too sure if it is.
Labor market conditions, and consistent
Again,
with
he brought
having a
that
soft
up
landing,
last time.
you would have some
But
softening in labor market conditions, and
He's
that's
talking
still
soft landing, all
likely
that.
as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment.
AT&T
We've seen
price
softening
raise?
through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Jeff.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress.
Breaking down again at cheek
how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So, in effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level.
Yeah, you're dumping right now, but this isn't on any statement.
Down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until all the way back to 2 until 2025 or so. So.
Jennifer.
I mean, he's not thinking cuts till 2025.
Thank you, Chair Powell. Jennifer Schonberger.
I don't know if you want to get back. Did he just push back everything by a year?
A handful of
I don't think he
banks,
did, but
Silicon Valley Bank failed. When you look at credit conditions now,
That's what it
given Bank
sounded
of
like.
California's acquisition of PacWest,
He
does
could
this
if he wanted
acquisition
to.
suggest the full impact
Hold
has
on.
not been felt, or are you comfortable saying
Again,
that
now
you've
we're
seen
breaking
most
down.
of the
I
ripple
wouldn't blame
effects
this
that
on
may
the
have
statement.
occurred
That
at
was
this point?
questionable,
And
but
how does this play into your
again, you're
outlook
moving
for
down a
policy?
little bit. You're actually breaking
I
down
don't wanna
below
comment on any
everything, the
particular
statement and
merger
all that.
proposal, But I will say, things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong, Aggregate bank
that could have been the statement, man. I don't know.
And is up significantly.
Like I'm saying, my first
year-over-year.
reaction, it sounds like he just pushed everything back another year. I thought he was going to say 2024 for cuts, inflation. That's what the SEP says, borderline. No, he said 2025. He did not say 2024.
And monitoring.
That means he just pushed everything back by a year.
In the banking sector. In terms of the actual effect on, if you.
But I don't know. That's why I said I think that's questionable.
That were
I don't know if he was trying to make that statement, if that makes sense.
Things like that were more.
I think it was just the answer, and then we were already dumping before that. But now you're just breaking down. This is going to be momentum. The bonds are still up, and the dollar is there. So keep watch. This is just equity land.
From them tightening, they may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank credit conditions bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that.
That's the sympathy. They're dying now.
Current data in GDP, and we're seeing strong spending. We're seeing a strong economy.
Ooh,
and it's made us confident that we can go ahead and raise interest rates now for the third time.
Again,
since
that's
the March
related to the sumo one or CMO.
It seems like
I gave you a 5-minute jump. I didn't know the direction.
Well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first year or so of the outbreak, but I would say that wages are probably an important issue.
Don't forget, meta earnings is in an hour,
conditions
less than it.
Are going to be an important
part. So fun fact, any market moves,
of getting inflation
think about
back
IV.
Down. And that's why we
still got earnings.
Need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to raise them?
Well, we have a job assigned to us by Congress to get inflation under control. And we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel or transportation costs, heating costs, clothing, food, things like that, those, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle class people have some resources and can absorb inflation. People in the lower end of the income spectrum have a harder time doing that. So we need to get this done, and the record is clear that if we take too long or if we don't succeed, that the pain will only be greater. So that's how I would explain what we're doing.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event, the market had assigned a roughly 99% probability to the rate move that you announced today. The decision was, of course, unanimous, and the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, I mean, was there doubt? Look, I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that.
Was
there's
a
range of
question,
views about
sir.
what we should do at this meeting and what we should do at the next meeting, and it's a process that we go through.
Many
times
if I was Biden, I would say,
that
that was a stupid fucking question. Fucking give me the next one.
Fundamentally in doubt.
The fuck you mean?
Nonetheless, we have the meeting.
That's how I feel.
And,
fucking was I doubting? The fuck you mean was I doubting?
Some meetings are
Who's fucking, where did you work for? Get him out of here.
less uncertain than others, and I'll just leave it at that.
That was the stupidest question. I agree, pal. Yeah, look at, man, fucking take the mic away from me.
Riser, Market News International. Thank you, Chair Powell.
That
Financial conditions have been
that was the
loosening
weirdest
at a
Fed
fairly,
question I've ever
steady
heard,
clip in
actually.
recent weeks. The
I mean, was
dollar,
there
the stock
any
market,
doubt? What are you trying to get
et
to right now?
What does that mean for the Fed and being sure that inflation will come down to target?
So we monitor, of course, financial conditions, broad financial conditions. You're right, it's the dollar and equities, and we're of course very focused on rates and our own policy. We're going to use our policy tools to working through financial conditions to get inflation under control. The implication is, we will do what it takes to get inflation down, and in principle, that could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing, and ultimately, over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
Nobody's asked about Fed
so
now.
That could happen.
Don't ask him about
question
Jackson Hole.
Is that
Maybe.
consistent with? So if you think about both of them as normalization, imagine it's a world where things are okay, and it's time to bring rates down from what are restrictive levels to more normal levels. Normalization in the case of the balance sheet would be to reduce QT. So. To continue it, you depending on where you are in the cycle. So there are two independent things, and really the active tool of monetary policy is rates. But you can imagine circumstances in which it would be appropriate to have them working in what might be seen to be just different ways, but that wouldn't be the case.
Let's go to Kyle.
Thanks, Chair Powell. Kyle Campbell with American
Said he
Banker.
cut rates while
I have
doing
a question
QT?
about the discount window. I'm wondering if since the bank failures of the spring, if you've seen signs that banks have taken more steps to be proactive in assuring that they're ready to use that facility if they need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as you know, during the events of March, and that that it's a little clunkier. It can be a little clunkier and not as quick as it needs to be sometimes. So why not be in a situation where you're just much more ready in case you need to access the discount window?
Let's go to Mark. Hamrick.
Mr. Chairman, Mark Hamrick with Bankrate.
Is this the last
talked
one?
in the past about getting the
This
housing
might be a little
market
earlier.
back into better balance, excuse me, and also that the market might have bottomed. Where do you see that situation and balance, or lack thereof, right now, particularly with the constrained inventory of existing homes that might otherwise be coming onto market at a time when existing homeowners are reluctant to move? And of course, all of that happening with the 30-year fixed rate mortgage still around 7% on the heels of Fed tightening, and with what you're talking about, tightening industry lending standards. Are we getting closer to balance or farther away? What's your sense?
I think we've got a ways to go to get back to balance, really for the reasons that you talked about. With existing
Disney's
homes,
for
there are
earnings
many
flip.
people
Those
who
are
have
shares,
low-rate
not in the
mortgages
long
and
term. But I still got the long
whereas
term.
they might want to sell in a normal situation, they're not going to because they have so much value in their mortgage, which means that supply of existing homes is really, really tight, which is keeping
bonds
prices
are starting
up.
to crack
On the other
now.
hand, there's a lot of
So if
supply
that,
coming
and then let's see
online
where the
now.
dollar's at. but
And there are people coming in. A lot of the buyers are
Dollar's still
first-time
down.
buyers coming in.
But watch out here, we might hit another low. Still a
with
lot of
these,
cushion.
with these relatively
Again, we
elevated
still got
mortgage rates.
earnings.
But I think
Powell's
this
still
will take
speaking.
some time
You're
to work
still
through.
within the
Hopefully
damn
more
range.
supply comes online, and we work
New
through
low,
it.
though.
We're still living through the the aftermath of the pandemic.
There you go. Dollar's starting to climb. Again, bonds are going to break here.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments of grain, safe passage through the Black Sea, and alternative routes at this point could be closed off. Just wondering, how could that contribute to higher food prices and inflation generally, and how closely are you watching that?
We are watching it, of course, very closely. And you're right, the withdrawal from the Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food. Grain prices did go up on this news, but they remain well below their peaks of last spring. And the moves that we've seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't say so looking at what we know now.
Thank you.
Thanks very much.
All righty. That was early. Oh, wow. Beautiful. Beautiful. I love the sound. I love the sound. Wow, that was great. So we have a lot to talk about. I also just added, are you ready? You guys are going to get so mad. I grabbed another 100 shares of Disney. I know. Not for the long term. These are flip shares, okay, Chattadonia? So not a recommendation. You already know Disney is so bad alongside, what's it called, Airbnb. You know what I'm saying? A lot of things are crashing here, but we got to talk about Powell. I mean, overall, I don't think, again, I think he hustled everybody, and I think the market just really liked hearing Powell confirm that he's down the pause. Does that make sense? That felt like that was like talking to a girl that you've been talking to, and then she already likes you, you know what I'm saying? And like, you just wanted to hear her tell you that she likes you or something, because that's how I feel the stock market took it right there, because he said almost exactly the same thing. There was like a couple of different alterations and changes in terms of like, yeah, there's that 2025, everything was debatable. Again, how he talked about it, even the non-restrictive, the whole no forecasting recession. Again, there was like little moments that we had during that, but even the drop, I'm telling you, even the rise was not on anything like, again, it was just him telling them, yeah, I'm down. He's like, I'm down to pause. Like, of course I'm down to pause. Why do you think I'm doing all this? Like, and then he was like, but I'm also down to raise. You know what I'm saying? Like, that's it. It was a good talk. It was a good talk. No surprises, but I think the market liked to hear what they wanted. But like, again, he did what he did every single time. He gave you both ways with all of it. So overall, I think it's not too bad. You know what I'm saying? Not too bad. We'll see how it plays out. Let's see how it plays out. Classic Powell, classic Powell. But here, I need to get that out. Where did I get it at? 80, I think 85, 86. 85, 69. We'll talk about it a little more. Give me a second. It doesn't sound bearish. It sounds the same. Yeah, I agree. You know what I'm saying? Like, it does. Honestly, that's what I was telling you even before Powell even got off stage. Just think about earnings. Could have been worse. It's what we expected. I mean, now it's just like, I still believe the same thing. Again, that's why I think the bonds got a bid, but everybody, you're just going to feel the same thing. That's it. The next two CPIs, the jobs report, it will be very important. We're going to hear from Powell at Jackson Hole. So anything you doubt with 2025 or anything about jobs or anything else he said, you know what I'm talking about? He will be able to confirm or deny by Jackson Hole. And even then, just in general, like if that inflation keeps coming down, we will get our pause. At least no more rate hikes. If the jobs report at least doesn't get stronger, it doesn't have to go down. I think that's what Powell was communicating, and he even warned at it. Again, if anything, there was job market talk and labor market talk around when we were going down. You know what I'm saying? So that was part of it. That was definitely part of it. But I think we're in the same spot. I think we may get a little bit more volatility on the data. Watch for the confirmation, confirm or deny at Jackson Hole. I mean, some of you may like it, some of you may not, but I mean, that's why I've been saying go slow. And I mean, I like the bonds. I feel comfortable. It just seems like we're kind of in the same spot. So I don't know. How do you feel? But that's it. You had your headlines. They've raised rates. I hope you're aware of that by now. Again, he's not concerned about the Russia stuff. He sees a strong economy. He doesn't see inflation reaching 2% until 2025, Powell says. Powell, Fed staff no longer forecasting a recession. Fed can't afford to be patient and resolute, or they can afford. Dollar drops a third. That was 35 minutes ago. All options are open for September. Again, I'm just going through the highlights. Again, it was like the same Powell, but it wasn't too much. But I'm just going through some of the top statements in the headlines that came out through all of it, going from the latest said to the first thing he said. All options are open. Powell possible. We'd raise or hold in September if data warranted. He cautions labor market may soften to tame inflation. Inflation moderated, still a long way to go, Powell says. Powell FOMC to take dependent approach on future hikes. Full effects of tightening yet to come. Committee is set on 2% goal. Banking system is sound and resilient. And that was it. Everything goes back to the statement. And his opening remarks were more dovish than June. So if you looked at like the algo of dovish sentences, hawkish sentences, this was more hawkish than not, believe it or not. And then watch the Fed futures. That's it. Now it's really going to come down to the September futures. I think people are also keeping in mind, what's it called? I think they're keeping in mind the earnings here after the bell. But I'm saying welcome to the data-dependent game you've already been in. So do you really like me? Tell me you like me. So like, I know can I kiss you then? Is that? I'm telling you, that's the stock market just wanted to hear. They just wanted to hear Powell say, all right, man, no, I'll stop. That's good. I mean, if you really think about how psycho the dude was a year ago, I understand. I really do, man. I really do. You know, my man, like that's why we rallied again, even on the way down. It's just like he was talking some of the job stuff, but this was the same meeting as before. And now it's just like, I don't know how we got tricked into it. I mean, I hope you respect it enough where, you know, this is like a weird holding pattern. Again, I've been discussing this for the last couple months. I don't know if you've been listening, but I feel like this kind of confirms it. Maybe I have confirmation bias, but I mean, we'll find out. But that's what Powell's saying. He said, wait till September and just wait till Jackson Hole. Just check the box, bro. Check the box. That's it. Powell just wanted confirmation, man. The market wanted confirmation. Market's just a little sassy. You guys just wanted to hear, yeah, well, maybe a rate pause is on the table. Can I mimic Powell's voice? Oh, well, nope. It ends up coming out like Obama. No, I cannot do Powell. But I will tell you, I like the Fed, and I will not get in their way. Now, if they cut rates in 2025, that would be fucked. However, I think we could do a lot. Now, if you haven't liked the video yet, you are a baby back. And, sorry about that. Yeah. Yeah, where's that? It's my good buddy for you. Yeah, he told you like the video, huh? Come on, like the video. Don't be so shy. Why are you here, huh? Come on, just show a little. Does your mouse not work? Come on. I get you Wi-Fi in a McDonald's parking lot, and so you can like the video. Fuck off. Come on. But good evening, Chad. That was an early speech. He ended 30 minutes early, but I don't know, man. That was Powell, and I would usually have a lot more to say to you, but I really do feel like that one was kind of, I think these next couple months, this end of summer is going to be wild. So maybe it's nothing too, because at the same time, if he keeps doing this for a while and they're talking 2024, then 2025, again, a lot of people are thinking September. So we still have a lot to monitor, but Very interesting. And then we have data too. Again, you have a PCE on Friday as well. Not only do we have to close out these earnings, so keep in mind Meta after the bell, but you do have what's it called? I have my puts. So now let me tell you this. I grabbed like a Disney play today. I'm still in the earnings play. I think Meta is going to do good. Are you ready for this shit? Are you ready for this? Y'all ready for this? Everybody pow, bow, 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 bow. Okay, ready? Hear me out. So I think that Meta is going to do good. I wanted to play the volatility today. Again, even the Snapchat options and a couple of those things, they look dirty. They were scaring me. But even then, I don't even think the options plays for today, like they still kind of even suck. Wait, why is that Snap? I don't want Snap. I want Meta. I was going to say, what? I would have been disappointed, but I do think you didn't really get anything. Yeah, both sides lost today, which I'm kind of disappointed of. I thought the Google would add a little bit more hype. So here's the deal. Okay? Oh, here. Whoa. Yo, somebody say, who the fuck is this? Hold on. Oh, I don't see it. Wait. Rate strategist, Chicago. They were saying that stocks reverse. They're saying so. So our interpretation of Powell and that, like, that 2025 thing we were talking about, we weren't the only one who caught. I guess that was kind of weird. So they're saying stocks quickly reverse gains after Powell said he does not see inflation returning to 2% until 2025. That was about the most hawkish thing he said. While Powell said the Fed would stop hiking rates in advance of reaching the target, investors view 2025 as a long time away. It was weird. I guess so, but that wasn't, other people are talking about it. I guess it, whatever. At the end of the day, I just thought it was, I don't know if he said it. That was just something like, when somebody says something, you're like, did he just say that? Like, I feel like it was just borderline, but I guess we weren't the only ones who picked up on that. So I think it's kind of funny, to be honest, but where were we? We were going on the Meta options. So here's my play on Meta. Actually, no, fuck you on Meta. I'm sorry, excuse me, but did you I want 3,000 likes. I'm sorry. I forgot. You got more people in here? I'm gonna fucking bilk the new guys too. What did you think this is? Everything's free 99. Oh, you want the earnings play? Yeah, I want 3,000 likes. Josh is kind of angry today. I'm having a lot of fun, so I hope you are too, man, and I hope you've gotten all the information. Don't worry, that's it. So I love you. But yeah, I forgot. I need some light. Too expensive? That's fine. I feel like playing earnings is expensive too. I feel you. I agree with you. So I'm on to shy away when it's expensive. So I won't blame you. I feel a little better about my decision to withhold for likes than now. Thank you. I appreciate that. Like giving, God bless you. You guys are like 10 likes away or 50 likes. That's fine. 50 holdouts, we could get the Teamsters, we could renegotiate this. I'm fine, but I'm pretty patient in my stance. How much time do we have? We have 30 minutes till the bell. Again, earnings after the bell. Oh, we didn't even go over the Meta earnings preview. What if I include that? See? There you go. I'm negotiating with you guys. There you go. I could include the earnings preview. Beyond that, that's come on. I was just gonna talk about some play ideas, but I could include an earnings preview in that one for sure. So again, you have Chipotle after the bell, ServiceNow, PTC, LRCX, ENVX, QuantumScape, eBay. QuantumScape could be a runner. Mattel and Wyndham. So, honestly, you do have Meta after the bell, and that one's going to be important, but you low-key have a couple of other names. So, I only have a play on Meta, ServiceNow, LRCX, ENVX, QuantumScape, and Mattel could probably be some big ones. And then you have Wyndham Resorts. So, keep that in mind. Oh, the Chad unionizes? That'd be crazy. I feel Meta's coming up, though. So, interesting. And you mega like, that's great. We're almost there. You guys are close, but we haven't hit it yet. But good. It kind of gives me time to even get you an earnings preview. You know what I'm saying? So I'm down. Right. I think, Meta. I think they're going to spend a lot of money. I'm worried. I don't think. I'm scared. I'm paranoid. I think there's a difference. Did the chat quit again? I don't know. You guys ran it up on the likes. I don't know. There's been a couple of times you have to refresh today if the chat it would stop working. But the likes, you guys are almost there. Mattel is, again, I just went over all the earnings. MNK halted. They're kind of clapped. Snap, Doge, MNK 210%. Aren't they bankrupt? Snap's on the high. Interestingly enough, the chat dies. Done that a couple of times today. Yeah, YouTube kind of, like Josh kind of angry. YouTube been kind of angry, man. What do you say, MNK? Yeah, it's done this. Remember, they're related to the opioid and like even bankruptcy stuff too, I'm pretty sure. So watch. Oh, we hit the likes, baby. So what do you want first? You see, that's the beauty. Once you hit the likes, bro, like I provide very good customer service in that sense. So you said I was angry, so I hope you're having a wonderful day. If I could get you anything, let me know. I'm glad that we met our 3,000 likes. So which one would you like first? I got a couple of play ideas. I have a couple of ideas we could go over. I could share with you my plays and what I'm about to do, or we could start with the earnings preview. Just you let me know what you'd like first, and I'll bring it out. RCL, Meta. You want PHILO? Oh, you guys are no. I'm saying we were talking about Meta here, sir. So you let me know. You want me to surprise you? Oh wow, is that what you're? I have a coin. I could probably flip a coin if that's what you're looking for. But I would. I'd rather leave it up to you. We could get you a Chipotle earnings preview. You guys have been awesome guests so far, but we'll see. We only have about 30 minutes, and then it depends how long we talk about the play. So, let me stop wasting time. Your time is valuable, so thank you for liking the video. Again, we are below VWAP right now. NASDAQ below 0.3, SPY down 0.2, and the Dow Jones green for the 13th day in a row, setting a record. Okay, here. Meta earnings preview. Second quarter earnings after the market close on the 26th of July. The street is expecting second quarter results above the midpoint of management's guidance on revenue. Currently, consensus expects total full year expenses at $88.1 billion. Expenses at the midpoint of management's $86 billion and $90 billion guidance. Consensus full year capex is currently $31 billion, just below the $31.5 billion midpoint of management's guidance range. Areas of focus: Reels. Most see Reels gaining momentum and expect improved monetization. Investors will be looking for details on Reels time and impressions growth. AI and Advantage Plus. Investors will be looking for any details on incremental gains from Meta's AI-powered ad model and how the company is further incorporating generative AI into its business. Threads. After a torrid start, daily active users have reportedly tailed off. Investors will be looking for any details on engagement, enhancements, promotions, and possible monetization of Twitter X competitor. And Josh is looking for anything of how it relates to expenses. And then expenses and CapEx. All eyes are on 2023 expenses, given recent cost and job cut announcement and lowered OpEx guidance in both fourth quarter and first quarter, $86 billion and $90 billion. CapEx is similarly a key item as the company continues to invest in the metaverse, Reels feed, and AI capacity, as well as Threads. We note CapEx guidance was lowered to $30 billion to $33 in fourth quarter 22 from $34 to $37. So stock performance and rankings. Meta is 142% up year to date, outperforming the S&P IT index, which is up 45%, and the S&P, which is up 18.7%, and the NASDAQ Internet Index, which is up 45.4%. 83% of analysts have Meta as a buy equivalent rating, up from 80% last month and 69% a year ago. 12% of analysts have the stock at a hold equivalent rating, down from 14% last month and 27% a year ago. 5% of analysts have the stock at a sell equivalent rating, down from 7% last month and up from 4% a year ago. The average price target is $312, which represents a 6.3 premium to the current price. So before I show you the play, can I give you one more update? To give you an update on Meta, 1 year ago, 63% of analysts had a buy target on the company. After the stock has ran up 145%, now 89%, or 83, excuse me, now have a buy equivalent rating on the company. Okay? Just wanted to let you know. Just a fun fact. I love the unanimous scammers. Fucking scammers. So, there's that. Now, as far as the play, here's what I'm holding. I have one Meta play. I have 10 of the Meta August 18th 292 puts. Why did I buy them? Is it because Mark Zuckerberg's a lizard? No. I bought them, I believe last Tuesday, maybe a little bit before that. It was on this date. We were trying to buy them. What the fuck is this? Wait, no, I'm on the wrong play. Excuse my language. I thought it was linked. They scammed me. I felt like I was just reading what was on the screen. I'm telling you, LT already exposed me. He told you I got that Joe Biden in me. You know what I'm saying? My bad. I was just reading what was on the screen. I'm not going to lie to you. I don't have that play. I have the August 210 put. I'm sorry. It didn't make sense. I was like, how come? I was just reading what was on the screen, and then it just stopped adding up. You know what I'm saying? It just stopped adding up. But anyways, no, real talk, though. This is my play. I have the August 210s. I grabbed 10 of them. I was going to say, it was like last Tuesday or 2 Tuesdays ago, we had the earnings run up. So I didn't buy this for any other reason. The whole idea was, remember, all the stocks were running. This was before Netflix and Tesla earnings. I wanted to buy out of the money puts because I thought the premiums were low and there would be a IV run up depending on what happens with the plays, right? So that's what happened. So I got the play, it went down, and then it rocketed up, and we were up on it. And then just the last 2 days after the stock, again, I think the stock is even lower, believe it or not. So to give you an idea, this is why I like shares more than options. We should have gotten something on it, but now we're about down, or actually break even. To be specific with you, I bought them for 37 cents, and now I'm at 28 cents. That means on 10 contracts, I am down $103. When the stock is down like, what, $3 to $5 a share, something like that, a little bit more. But anyways, this was my play. My idea was buy it ahead of earnings, sell it right before earnings to get the earnings premium. Should have sold out the day before, but usually with my strategy, I hold it all the way till the end. That usually never fails me. But yesterday it failed, and today it's failing as well too. But now, here's my play. I think Meta should do good simply because there's been no bad advertising trends so far with Google. Snapchat, again, they suck, but it's not like they missed on earnings. It's not like they warned on advertising. Again, I think that's a more company-specific thing. So overall, just no trend weakness. But again, Google, that was very good. Snapchat just seems company-specific. Meta should do good, right? They have the threads. I'm worried about expenses. But that being said, I want to hold the put. But here's the problem. If you held the Microsoft put yesterday, which was a very similar put, you lost, even if Microsoft went down. So again, like I'm already showing you, the option fucking sucks. If it was shares, you would be making money. And Microsoft dropped 4 or 5% today. The same option that we took for like a 50% loss or whatever, that play didn't even go up. You know what I'm saying? So even though you got the so you could just take your money out. So I have $200 left in this play. Like, fuck it. I'll go buy half a PlayStation. I don't know, maybe a PS4. Shit. But if it does do really bad, like let's say Mark Zuckerberg had a secret credit card like Sam Bankman, you know what I'm saying? And we find out, or they spent maybe Threads. We thought he was just copying and pasting. What if Zuckerberg was like, I spent $20 billion on Threads? I would trip out. Because he might do it as an excuse. You all thought Threads were free. I don't believe. I've been saying that since day one, bro. I don't trust these motherfuckers. I don't think Threads is free. Everyone's like 70 million users, 100 million users, Threads, this. But I'm like, dog, I don't think it's free. Like, you know, it reminds me of when I was a kid, and I thought if my parents like owned a store, you get everything for free. You know what I'm saying? Like, I thought the mother effers who owned the gas station, I thought they got gas for free. I thought the people who owned the grocery store got Cheetos for free. So I feel like it's kind of that logic. I don't know. I don't think Threads is free, bro. Like, so we'll find out. Spy's coming up and show us Meta. The people treat you like you get it free. I feel you, man. I'm stuck. My currency is fucking likes, and I'm having trouble, dog. You know what I'm saying? So I feel you. I'm like, all right, man. Let me see what other analysis I could give you about the yield curve, the Japanese yen, and then the live plays while they're moving. Fuck, I just need a like on the video, man. Where are we at? So that being said, I want to hold the Meta put, but I think it's a stupid idea. The only way you make money on it is if you get lucky. You either preserve $200 that you have remaining, or Meta and Zuckerberg totally bites the bullet, and then, even if they drop 10%, you still lose money. Let me say that again. Even if they drop 10%, you still lose money. This is a 210 put. So that's the problem. It's holding up value way better too, even though it went down after going up. I thought they were going to scam a little bit more. There's not even IV clap. Yeah, IV clappeth and timeth clappeth, and just like, unless there's a bomb, it's not doing it. It's pricing in 10%, a little bit less, I think, but if it did 15, how did they move at the last ones? I don't think we have that data. They have to drop 33%. Yeah. Not just for it to hit, but you have a little bit of time, but even then, like, you would need a little bit. You would need a little bit, not a little. You need a lot to get. Again, the Microsoft one, these are 2 standard deviation plays. That's what I'm saying. So you would need a 2 standard deviation move. That would be $60, and you would still be out of the money. But then it would come to life because it just moved 2 standard deviations. That's it. So that would be a $60 move in this case. 240. So if you think Meta could go to 360, then maybe you think it goes to 240. But that's where pretty much that play does not become remotely profitable or hold its current value, in my opinion, unless you go to 240. That's the only way. Last earnings, they moved 10. What about the last 3? So the last one was 10. What about the 3 before that? It went up 20. Baptized, thanks to Josh. Thanks for showing what I was missing. God bless you, baby. You got long term too? You know that's part of the, because I'm not a preacher, dog, but I'm here to, and now you got the long term, correct? Because you got to make sure. So 3%, 21%, 13%, and 3. They could do it. 21% though. That was 3 quarters ago. But they've moved 10%. Seems fair. MXL and CMO resumed. You're flipping 400 Disney for earnings. 300 at an average of 86.57. I put Sim. Abivai, I mean, they better do good, but then again, I kind of hope they do bad, because if they do bad, we might have our buy on Abivai finally. Well, I need to give me like another 10% down. I think it becomes money. Whew. SEMO, again, they're backing out of the deal. Boeing keeps hitting a high. Holy crap. Dude, the NASDAQ recovered too, low key. NASDAQ's only down 0.07 and the S&P. Chipotle's today. Chipotle now, LRCX, and a couple of others. There's some big ones, low key. And travel. Yeah, SEMO, remember TSEM, that's kind of what led it. They bounced up a little bit. And then MXL is the buyer. They could bounce, but they're still negative on the day. And then SEMO's about to give up the premium. Where's real estate? MP Dubs, silent, but still real estate. They're outperforming the index for sure. And the video, I'm in AMD. I think relatively speaking, AMD's cheaper. That's it. Everyone's tripping out on why I'm in it, but it's like when the video made the pop, dude, AMD's cheaper now than after all of it. I think most of the chip makers that had some of the AI, I guess they're all kind of, even Intel is low-key closer than NVIDIA. And then what was the other one? Broadcom, they're already at the high, so. And then they got earnings run up, but there's a lot of time. That's the thing. There's just a lot of time till the earnings run up. And we have PCE on Friday. On the email. We have Chipotle. I don't have a take on Chipotle. I could get it for you. I think they're going to do good, actually. I think I've heard good things from Chipotle. But they're just fucking premium. I haven't checked my email since Powell, man. We might have to wait. No email on Powell Day. China plays are still going to, again, the yen. Oh, So that's the thing. If Powell's meeting today is kind of moving there, it's like if Powell made a more actionable move to getting the meetings live, I feel like essentially, though, you might have to have maybe the Japanese do the same. That's why I think it might be confirmed tomorrow. They're definitely raising the inflation target because at the end of the day now, even after today, literally, the differential now between our rates in Japan, it's widening. So I think if we're getting kind of live, they might have to get live too. That's why I'm saying that in the sense of maybe that's the reason why the yen caught a bid earlier. But I think Friday is going to be very interesting now. What time is it? Oh, we only have 2 minutes till the 10-minute rigged. So only 12 minutes remaining, and then it's Meta. Oh, my goodness. Where are they at? All right, so these are the ones. 10-minute rigatoni. That's crazy. Again, then there's the TSEM. That's wild, actually. Just short in the video. Pray for me. Good luck, my friend. May the Lord protect you. May the Lord protect you. What do they say? You get the strongest. He gives his hardest battles to his strongest soldiers. Good luck, my friend. Good luck. I'm in AMD shares. Only options I grabbed was the big ones, like the Meta, Amazon, the Google, and one more, Microsoft. That's it. No Apple. Thank you for all you do. GG. Can't wait till I drop the memberships and donations. What? You dropping some? Let's go, baby. Oh, yes. Amen. Claim it. And long term, baby. Long term. Amen. Where my long terms at, baby? 10%. Yeah, UNH is dumping. Interesting. Is XLV? Whoa. B Bio TR. Yo, something. Yo, healthcare. This has to be healthcare related. Something's popping off here. Healthcares are all just kind of catches little companies there. Cigna, Humana, and a couple of random biotechs. I'm not seeing anything. Hold on. Maybe I'm being dramatic. Is Teladoc coming down? No, but I just saw a lot on the low ticker. What time is it? 10-minute rig. Never mind. I'm dramatic. That's why. No. It's 10-minute rig. 10-minute rig. 10-minute rig. There's 10-minute rig mixed in with all of them moving. And I just noticed one industry all moving down. Whew. That was it. Enjoy, my friend. The Teladocs are high, though. So the Teladocs are holding like 100% solidly now. So it's on the bid. You could get just 1 penny under 100% on the bid, and then the ask is above 100%. They're not bad. I sold out of the other ones, but I'm kind of down with the Teladocs. I thought it was going to go way slower. I'm actually kind of shocked. So again, we sold half of those, made them free a little bit earlier, and we're good to go. So I think the Meta should do good, but I'm very tempted to hold my puts here. And I don't know. I think I know the answer. So I'm going to wait here until this final premium towards the bell. Maybe they go crazy. Because I was just up on these earlier in the day. That's the crazy part. Like these weren't, or I was just like just under break even. No, yeah, they were break even in the morning. Is Meta even down? Cocoa slumps 1.9 in London or climbs on supply concern again. $500 million on the sell side. No, Meta went up. They went up a lot. Oh, Google. Yeah, duh. Disney, I think, just sell before they report. Maybe even, I don't know, I may want to push some, but otherwise, I think it'll get it. It's only been straight down in the weeks leading into the report. There's going to be an update at once on one of these ahead of it. So if not, I'll get cucked on it. But worst case, I'd be even down to hold it. I played Disney last year and we held it for a while, but he moves a decent amount for how small he is. So again, I have long-term and flips on that. And you only have 8 minutes remaining. We should have played Teladoc shares. it was decent. I mean, I like what it is. I don't think it was. I think it was kind of neutral. Because Teladoc, every $100 you would have made, every $2,000 would have made you $600. So in here, every $2,000 made you $2,000 on the option. That's it. So and then you just would have had more safety. That's why I just make them free. If you make them free, you have nothing to worry about at that point. I don't care about losing the profit. And then if we have 6 months to get lucky, if crackheads want to beat crackheads, well, I'll fucking take it. But I think shares, 200 shares, you would have got $1,200. That would have been like just under 5 for 4,000 investment. Not bad. Gunlock says first rate cut will come. Interesting. I thought he would have said sooner. That's not bad. It was up 30. Which one did? Ours are up 100%. So the 50s went up. We bought them at 38. And then they went up to 75 to 78 now. So $76 would be 100%. Oh, the stock's up 30? Yeah. It sucks for what did the short terms do? And then 1 minute till final five. The short terms only got 200%. That's kind of fucked. Yeah, bro. We're going to run after they expire, these fools. Look, that's kind of crazy, bro. You mean to tell me the Julys went up the same amount as a damn weekly? Or 200%? That kind of sucks for a 30% equity move. 200%. 200. Again, you did 100% better than the ones with time. But even then, anything still out the money, you made the same on small time. So we're in the best options on that chain. So just I'm chill with it. But now just eliminate risk. And now, yalla, take it. That's it. I thought the weeklies would have done like 1,000% usually. So in that case, you should have got shares over weeklies. But I think the leaps, I mean, you just got the same gain as a short term, little less. But now you have the other 6 months. No meta leak comments. No. And then again, final five. Where they at? See, so meta. MP Dubs new high? Hell yeah. Meta came down a little bit. Oh shit, earmuffs. Chattadonia. It's about to get loud in here. So please, this is your moment now. I'm just waiting on my moment. Does anybody want to buy these for 30 cents? I'll give you a deal. No? Anybody want them? You tell me. All right. I sold 8 of the metas. I'm keeping 2. So I'm going to keep $60 after losing the other 80. That's it. Okay, so now we're about to get very loud in here. We have earnings after the bell. Hopefully you're ready for all of it. There's going to be a lot of different companies. I'm going to be very focused here on Meta, and I'm sure the rest of the market will. We've already had Powell, but if you get sensitive to loud noises, you are going to want to mute your speakers right now. Literally right now. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, we're going to be coming through the aisles with the trash bag if you like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description, that's going to be your nightly watch list and main channel layover. It's going to be around 4 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 79 degrees and sunny, looking like a beautiful day, unless you thought Jerome Powell would say something new, because he didn't. He did not say anything new at all. But fortunately, we're no longer under COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys in business. If you're interested in your Cole Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thanks for flying with the coat, and hopefully have a wonderful evening. Chattadonia! Earnings after the bell. Get ready, ladies and gentlemen. It is now time to finalize your plays. If you are not aware, you have Meta, you have ServiceNow, Chipotle, LRCX, ENVX, QS, eBay, Mattel, and Wyndham Resorts. But now you are running out of time, ladies and gentlemen, okay? I'm going to be very specific. You know how much time you have left? 1 minute! Go, 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 go! Ladies and gentlemen, boys and girls, it's time to bring it home. You gotta wrap it up. Finalizer plays, options, shares, futures. There will be a Powell follow-up. You got more data, but now we also got earnings after the bell, ECB tomorrow, and then the Bank of Japan. But you have less than 30 seconds left. Finalize your plays. Don't let them scam you. But Chad, bring it home. Go, 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 go. GG, baby. That's it. Not much time. Speak now or forever hold your peace. 15 seconds. Oh, my goodness. eBay Lottos. That's it. That's it. Bonds are holding. Stocks are kind of coming back up. Dow is going to set a record today. Oh, my gosh. 5, 4, 3, 2, 1. Ding, 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 ding. Or nah. Let's go, baby. Oh, Chattadonia. Let's go. We did it. We made it. We did it. We made it. Ladies and gentlemen, boys and girls, I need a GG. Let's go. Let's go before the earnings come out. Let's go. Don't be shy. This is your moment. GG. It don't matter if you made money or lost money. I know you learned something. Everybody that stayed in the game. Everybody that contributed. All my 10%ers. All my long-term. Everybody saving. Let's go, baby. God bless you. Big earnings. I think you're already getting some. Chad, you're already getting a couple of earnings. I think you might get Mattel. I don't know. Get ready for all of it. Good game, baby. Everybody that contributed, all co-real estate. Good game. That's what I'm talking about. Hey, man, get ready. Meta right before 300. GG. Shout out to Twitch. Shout out to YouTube. The donos. Anybody holding it down. My positive people. Good game. Everybody that contributed. Even a hater, baby. You still made it to the bell. Good game. Let's go. ENVX. That one's running.
My money on stocks, I can show you the top. Every bottom I pop, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
Ha! I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Hold on, I don't think anything's out. You got, I think ENVX is out. Oh, you got another uncle? Oh, wait, hold on, you got this one? Hold on, I don't think anything. I got ENVX. I will get you those reports. I'm really all about Meta right now, though. That's it, but ENVX is on the high. Let me see if I can get that one.
Yeah, boss of Chris, they said
Chattadonia, I love you. GG, God bless you. ENVX.
Pulling back, I'm pulling up, you pulling that. I double down, then double day. I changed the plan, I'm fuck with that. Nah, this should be your motivation. Balance, growth, and values. I ain't talking about it. Stop.
I have ENVX, but it's not pretty.
Go also got inflation. Told you it was tough, but
so I don't have the easy numbers. I'm gonna wait till the easy numbers come out.
Complacent, get your patience if it reset what you making, cause it hasn't taken place. And when it does, you can't replay it. So I hope them words you saying don't come back to harm you later. This a vicious game we playing, but we in it though. Put me in the dictionary and that's the fucking getting it, bro. Please don't get it twisted, that's the man who leaving when we's broke. I just kept it simple, nothing special, just the shit we saw. Tell me why you bitching, everybody giving 24. So use it wisely. It's surprising how much time they waste despising. That could really tilt the balance or can kill you at the margins. Beg your
So
pardon,
adjusted
I ain't
loss
never beg. I
and a
planned
VIX,
it and I got
they
it.
beat
Long-term Luka
by a little
Doncic
bit.
with the options. I'm Giannis. Feel like Jokic with the passes.
Again, we just need Meta. You could go to the IR website. It's not out yet, though.
You can't tell me that I heated if you've never been through fire. Whoa, I'm the favorite today, yes, before a favorite. You got motive, not no motivation. Stop with all the faking. Thought I told you when I'm finished, then you gonna hear me say it. They can't do it how I
shit,
done
a
it.
line?
Trying to make the payments. So fuck it up, yeah.
ALGN is out.
I watch the end, I show the top, then buy again. Some love the top, some play to win. I love the work, they love the
I don't have pretty numbers on that one either, but they just came out. It looks good for now. A line, ALGN.
You ain't need the love when you in love with it. Made $1 million bucks, I gave all of it. Y'all play the kid, I ain't faking shit. I claim it shit, I caught that, and I made the grip. He fall off, but I can slip if I stop now. Still leave him rich.
Are you ready now? That's it. That was the pregame song, bro. That's it. Meta's not out yet. So NVIX, they did a little bit better than expected, I think, on their loss, but they're still at a loss. 41 cents per share. A line came out. It looks good. That one's actually up a lot. Again, ALGN, this is a big runner. I think this might be a Kathy play, but I don't have the pretty numbers, so forgive me for being lazy. I don't want Meta to come out, and then that's it. But Meta's either going to be in like 2 minutes, 5 minutes, or another 10 minutes. You know what I'm saying? That's it. We gonna see. We gonna see. Rolling in my F-350. I don't drive a fucking EV. It's coming soon. It's coming soon. So, you're getting a couple more names coming out. But Chad, God bless you all. Thank you for being here. I love all of you. I don't know if the moment is going to go crazy here. Again, we're waiting for Meta. You're getting a couple of earnings. These aren't going to be the crazy. There's a lot today. There is a lot today. But if you head out or not, I love you. God bless you. I hope you had fun today. I hope you learned something. I hope you're ready for these next couple of months, because Powell just said this data dependent in this September. Oh, man. But God bless you. Thank you for your time. Thank you to all the people who were bullied into liking the video. I understand, but I love you. And thank you, and God bless you, and thank you for supporting. Look, and now you could clap with me. You supported, baby. So I love you. Let's go. Get the long term. At the very least, the Teledoc pays for it, okay? GG, goodbye. Amen. Amen. We're waiting. We're waiting now. Where are we at? 5 minutes? No Meta? 5 minutes? No Meta? Uh-oh. Oh, never mind. 5 minutes with Meta. So hold on here. Again, you're getting a pop. How does it pop? Even Google. Second quarter results, 2023 revenue, 31 million. Is this it? Yeah. 31.99 billion. Cost and expenses, 22.6. Higher than last year, but I think that's a lot lower. Hold on. Yeah, they see third quarter revenue 32 to 34. They guided up on Rev. That's a guide up. You haven't had that one in a minute now. So there you go. Oh man, even the spies ripping shit. But that revenue guide stands out. I think they saved 10 billion. Hold on. I don't know. So you guys are posting the quick one right there. It looks like they guided up on revenue, which is a great sign already. But legit, I think he might have saved 10 billion. What the fuck? I don't know if that's possible. I was thinking the opposite. So diluted EPS 2.98. It's higher than 2.46. What was the expectation? Family daily active users was 3.07 billion, an increase. I only have year-over-year numbers. I need the expectations. EPS 298, estimate was 291. And then sales, again, they beat sales and guided up for next quarter. Expenses were 88 billion and 91. They saw 86 to 90. So he raised full year guidance. Hold on. Full year expense raise. Sees higher infrastructure, but then watch if AMD and chip makers go up. It's a little higher. It's lower than last year though. All right, that's interesting. Guide up, but he did guide down full year. I think they saved some on the quarter though. And then headcount was down 71,000 as of June 30th, a decrease of 14% year over year. Let's see. I want to know how they're going to take that one. So again, it seems like they cut, now it's at 14%, decrease of 14 finally. Approximately half of the employees impacted by the layoffs on a reported headcount as of June 30th. Because remember, they weren't getting, they fired a lot of people, but if you don't remember what happened, they still were showing up on payroll for like 3 to 6 months. So remember, a lot of these companies, they were like, we laid off this many people, but it never showed up. So it's just showing up now. That's it. So now it looks like because I think last time it was the same amount of people. I swear they had 70,000, or I think they had last quarter the same amount of people. So watch the chips. Again, yeah, ANET, if they're saying full year infrastructure expenses, I feel like some of them show, did they go down? ANET went down on that. Why did I turn after hours off? So job cut pops were, well, now it's finally showing up in the numbers. I closed the puts. I closed 8 of them. So pretty much I just kept $60 just in case, because I did want to hold it if there was a surprise, but it didn't seem like it was going to be a good play. So I just kept $60, took the other 200 or whatever. You know, I've done it with all the plays so far. Pre-earnings, they weren't hitting. Took my losses here, whatever it was. Still got the, you know, I spent like what, $900 I've already gotten back. I guess even with the losses, like almost 600 here, or like 500. So then we have the last Amazon one, which is break even, but we'll see. Probably dead after this. eBay down. LRCX is up 1.6. Again, I'll get you those in a little bit. Daily active users, 2 billion, 2.06 versus 0.3. I don't see any crazy comments on Threads. So again, they didn't, I'm actually surprised. Where is the Threads? CFO outlook, we expect third quarter revenue to be in the range of 32 to 35. Our guidance assumes foreign currency tailwind of 3% year over year. We anticipate full year to be in the range of 88 to 91, increase from prior range of 86 to 90 due to legal related expenses in the second quarter of 23. Outlook includes $4 billion of restructuring related to facility consolidation charges and severance and other personal costs. We expect Reality Labs operating losses to increase year over year in 2023. They expect higher infrastructure costs next year. Given our increased capital investments in recent years, we expect depreciation expenses in 24 to increase by a larger amount than 23. We also expect to incur higher operating costs from running a larger infrastructure footprint. Anticipate growth in payroll as we evolve our... What? Oh, no. And then Reality, we expect operating losses to increase meaningfully year over year due to ongoing product development and efforts of augmented reality to be in the range of, we expect full year to be in the range of 27 to 30. Lowered from our prior, so they lowered that. That's good. Ugh, fucking weird, bro. So here, so far, dude, they just said they want to hire more people again. They're going to lose more money again in Reality Labs. And then they're saying full year capital expenditures, they expect 27 to 30, which is lowered from 30 to 33, but then they still expect to spend more money. I'm very confused. That's a weird ass report, dude. I'm reading the straight filing from the website. Looking ahead, we continue to refine our plans as we progress through the year. We expect total capital expenditures to grow in 2024. So so again, they lowered guidance, they lowered expenses for 23, raised them for 24, and I don't know, but it looks like they're trying to hire again and lose money on Reality Labs. At least I have that in writing. So, and then again, they said, including invest in our compelling opportunities of artificial intelligence and metaverse, and then they dropped those. So here, this is it. I don't want to... Loading up my F-350. So I think analysts are picking up on that now, or maybe somebody. But yeah, here it is. That's what I'm saying. They say compelling, AI, all this, but then like right here, second, we anticipate growth in payroll after they just fired all those fucking people, and then towards higher technical costs, and then Reality Labs more meaningfully losses year over year due to ongoing developments and investments to further scale. It's the same shit they've said, but it's interesting. Their cost breakdown, lower in 23, higher in 24, make more revenue this year, which is good, but then it's like, well, I don't know. I think we might have let off Zuckerberg too easy. Told you should have blocked his number. That's all I'm saying now. $90 wasn't enough. That's it. You guys let him off. You let him off with it. Now he's like, hey, man, Back to his lizard spending ways. Interesting. So, let's see. So, full recap, Meta adjusted EPS 298, expected 287, revenue 32 billion, expected 31.06, ad revenue 31.5, expected 30.5, sees quarter 3 revenue 32 billion to 35.5, expectation 31, daily active users 2.06, expectation 2.03, monthly 3.03, expectation was 3.0, continue to invest in opportunities including AI and metaverse. eBay has earnings. Quarter 2 adjusted EPS beat by 2 cents. Revenue 2.5 billion in line. 30% of users tried AI future in quarter 2. Declares cash dividend of $0.25 a share. They see third quarter adjusted EPS 96 cents to $1. They expected 69. Did eBay guide up pretty big? Yeah, that's weird. They're down. They had decent guidance there. I didn't see their expenses though. Oh yeah, you said Chipotle. Chipotle's already. Oh, they went down. They let Chipotle go down. Again, they killed it though last quarter. I don't know how much they spent on Threads. And then I think they want. Meta already gave back the pop low key. About FT50. Service and now that. What's the other one? Quantum. QS can move a lot, but I don't know. I'm kind of disappointed in Meta. Is that weird to say? I think they're average, but that cost thing's weird. We need to see how they explain it. I think they could come in with AI hype, but they guided up. I just think ad spend is strong. But it's weird though, because they're talking about spending more, but all these cloud companies just got knocked off of it. Again, even the ES, they shot up and then came right back down. So did Meta, but I think they need to talk a little bit. He's going to talk a little bit more about it, but that's it. U.S. Speaker McCarthy, no deal on spending with Freedom Caucus. When do they do the conference call? I think it's after hours. Lots of mixed signals. It'll smooth itself out. Well, remember, we have a couple more with Amazon and Apple, but you also had Powell today. But, I mean, at least it wasn't bad. That's it. If anything, obviously, I told you, I'm always paranoid with spending with Meta, and I'm sure a lot of people are after what just happened. But at the end of the day, that wasn't a miss. Like, they didn't miss on anything. They didn't scare too much. Again, nothing. Everything is still lower than all the other lower numbers or the higher numbers in terms of expenses. They raised revenue, so that's what I'm saying. I don't know. I'm not impressed, but I do get. Seems like all these ads, the ad market is stabilized for the most part after all that other stuff we've gone through. To say AI, yeah, maybe, but it's decent. But I also think it's kind of disappointing in the sense we haven't had like the excitement. Like even Google, that was kind of exciting, but they just did one move and that's it. But we haven't seen anything like the Nvidia, since we got the Nvidia, man. We need the Nvidia, man. Microsoft tried, but Microsoft still had to stick by 26% Azure growth. That's it. Again, Azure was growing at 56% last year. That's the whole point with all of it. LRCX, Chipotle guides for full year. Well, they say sales growth mid to high single digit range. Analyst consensus 7.4. They did 12.65. Estimate was 12.3. I think Chipotle did good. 2.5 billion revenue. 5.1 estimate was 253. So they were at the lower end of revenue. Q3 comparable restaurants in the low to mid single digits. Full year comparable growth in mid to high single digits. 255 to 285 new restaurants, including 10 to 15 relocations to a Chipotlane, which assumes utility and permit utility delays. And then estimated underlying full year tax rate of 25 to 27. Meta going again. LCRX. LRCX or LC Lending Club. Oh, I feel like Watch Root. Aren't they related? Or is that different AI? What's the other one? LRCX. I was going to check that. Again, they had 1.71 billion. Non-GAAP margin 45.7. Estimate was 45.2 or 44. Non-GAAP operating margin 27% versus estimate of 25 and 31 a year. I think they did good. I think they killed it. Lam Research 3.21 billion. Estimate was 3.1 and 3.4 or 3.13 in the middle. So B or near the high end. Margins killed it. Non-GAAP operating margin did, again, they beat by 2 points on margin. LRCX did do good. They're only up 1% though. Well, yeah, LRCX beat across. AMD is, I think it's something related to Meta's ad spend. Or Meta's like infrastructure. In a weird way, that's kind of how you could, maybe Meta's, the fact they're raising guidance, maybe it's not that much because they said they were going to spend more on infrastructure, but the chip names and cloud names went down. So again, when Microsoft was talking good, they went up. And then once they were like 26%, it went down. So in a weird way, maybe Meta raised their guidance there for that next year, but it doesn't seem optimistic enough for the chips to kind of, go crazy with it. QuantumScape misses. Oh, that could have been a little runner. Wasn't this like at $100? Yeah, but they didn't do. They need like a better than worse expected. Meta 350 or just there. It's going to be a weird one. Wait till the conference call. I think that comes out in an hour, and then you're going to need everyone else. eBay, did they come up? I thought eBay earnings were good. That one's interesting. I think it has to come down to spending or margins, but top and bottom line numbers didn't seem off. Riots on the high. I don't drive a fucking EV. NQ unsure through Friday. Nah, I think no NQ till Jackson Hole, or unless you have panic data. That's it. That's what I got. Unless there's data that's going to make you panic or get geeked up off of it, if inflation drops or jobs or whatever, I think wait till Jackson Hole for any sort of NQ re-short again or not. Otherwise, I'm going to just vibe out, play the earnings, and then I think the market it needs something. But other than that, Powell is I think he heightened the importance of the data, but maybe not, because then you have one set of data, then the next one. And then Jackson Hole's in between that. Oh no. What's the quote here? DJ Meta, Reality Labs, we expect higher infrastructure. So again, all the headlines on Meta that I read to you from the statement, they're hitting the wire like one by one right now. Again, anticipate growth in payroll. We evolve our workforce. That's the stuff I already showed you. They hit the wire one at a time. There's a late one. But shit, dude. And stay on yen. Oh, yeah. Yen, especially after, again, just the rates are up. Powell's kind of keeping it live, and I think they're going to raise their target. But they're not going to abandon YCC, but in general, though, I think the people feel it underneath the surface. If anything, though, I do think October is very, very pivotal. But then again, there's still a relationship between the Fed and the BOJ. At least that's what I like to believe. The next big data. I think the CPI and PCE tomorrow and all of the other data sets those are important, but then the real big speaking will come out of Powell. You'll also get other Fed speakers as well. But it's just going to be this, again, this whole data dependent thing. Powell just said the same thing, but now we're really close enough to either ending it all or Powell just being a psycho and a sicko. So we will find out. But yeah, I think, Chad, I think we might have to call it. I think unless, I don't know when the conference call. Did we listen last time? When is Facebook conference call? Loading up my 350. Oh, 2 p.m. Pacific. Oh, I left it on last time. That's what I did, I think. I think last time, remember? Or is that Tesla? I left one of them on. Yeah, I'm not going to do that. I need to poop. Yeah. I don't think this one's not as important. Last time Meta was like recovering and shit. You see what I'm saying? This time, this shit don't even matter, dog. It's already up another $100. It could drop $100 and you still gonna be like, yo, thank you for a 200% play. So that's what I'm saying. It's fucked up, bro. It's fucked up. That's it. Now we got ECB tomorrow. Telling you, tomorrow morning now, ECB. That'll be the next one. Then we got Amazon, Apple. And then, like we said, all the other ones. Leave it on. I know what I'm going to leave on for you. You know what I'm going to leave on for you? You don't know what I'm going to leave on for you? You know what I'm going to leave on. Exactly what I'm going to leave on for you, bro. But with a little earnings.
Depot on the beat.
It's a cult, baby. Yeah, Boston Cribs, they said it crash. I kept the band, so Lambo cash. I kept it cool, was moving fast. I came with nothing left with the bag. You should do the math, I ain't pulling back. I'm pulling up, you pulling that. I double down, then double day. I changed the plan, I'm fuck with that. Nah, this should be your motivation. Balance growth and values. I ain't talking about it, stop rotation. Prices going up, but that ego also got inflation. Told you it was tough, but it's different when you finally face it. Take it, fuck complacent, get your patience. If it reset what you making, cause it hasn't taken place. When it does, you can't replay it. So I hope them words you saying don't come back to harm you later. This a vicious game we playing, but we in it though. Put me in the dictionary and that's the fucking getting it, bro. Please don't get it twisted, that's the man who leaving when we's broke. I just kept it simple, nothing special, just the shit we saw. Tell me why you bitching, everybody giving 24. So use it wisely, it's surprising how much time to waste despising. That could really tilt the balance or could kill you at the margins. Beg your pardon, I ain't never beg, I planned it and I got it. Long time Luka Doncic with the options, I'm Giannis. Feel like Jokic with the passes, I'm a holder, you a talker. Getting older and I'm wiser, I can run it like Elijah. You can't tell me that I heat it if you've never been through fire. Whoa, I'm the favorite to the yes before a favor. You got motive, not no motivation. Stop with all the faking, thought I told you. When I'm finished, then you gonna hear me say it. They can't do it how I done it, they still tryna make the payments. So fuck it up, yeah, that's the plan. I ain't watching them, I watch the end. I short the top, then buy again. Some love the top, some play to win. I love the work, they love to spend. They love the rest, love folding hands. They love the clap, they need the friends. I ain't need the shit. Been with nothing, I ain't fearing it. You ain't need the love when you in love with it. Made $1 million, I gave all of it. Y'all played the kid, I ain't faking shit. I claim the shit, I caught that, I made the grip. He fall off, but I can slip if I stop now. I'm still leaving rich.
Yo, did they go bankrupt? If so, that's gonna be awful. I don't think they're scammers, bro. Let me check. That's big news if it happened. If it like actually goes bust. I'm just gonna play you a couple, Uncle. If nothing crazy happens, we out, dog. I'm trying to stall. Nah. I don't wanna rock that. Pull up in a bed body. I don't put the top back. Hit me with the divvy. I don't even need the NASDAQ.
Skinny and shit pretty. I don't even need the ass fat. Kenny was a freebie. I don't even need a fast one. I was never greedy. I just never fucking had shit. Now I'm bet that I ain't never fucking going mad shit. Please stop backing. Y'all need masking. Little more balance.
Spy's not reacting. That's crazy.
Pull it to the valley. Got these motherfuckers carrying. Pulling up the lunch. I got it looking like a Marion. Remember when I put them on the motherfuckers daddy? Put it some more fighter. I don't give a fuck about it. I'm still in the game like a screaming athlete. Got a little fame, but it ain't changed nothing about me. Nah. Same old J, you smoke more J, still make dumb plays, but I play less games. Always ready for the war, I ain't playing campaign, but I really need a reason for I pop champagne. Proper for the fall, so I gotta stay safe. Lot of money on the table, boy, that look like bait. I'ma think it before I get it, boy, that look like fate. Either way the story goes, no, I love that fate. Had these motherfuckers hated me before they love me. Now they selling half and they ain't playing with their money. I told them take a tenth and pay yourself, cause that's your money. Put me on the bench cause I ain't playing with you dummies. They ain't give us nothing, even if they did, no, I wouldn't take it from them. Then we took a shit, but we still try to love them. Got so many wins that I can't trip about a folly on my wrist. Better get a B&B and rent it for the scenery, and maybe live the seasonally and keep on buying stats every month. Spread it evenly and shout it out to people that believe in me. I hope you living peacefully, and same thing for the people that don't speak to me. I do this shit for everybody equally. I guess it's just G and me, and when we done with that, we going back to the reality. Yeah.
Oh my goodness. Yeah, the yellow stuff does look old too. Sorry, I guess it's already priced in, but that low key, I don't know. I think the government might do something because I don't know. It'll low key have some pretty big. It's just supply chain shit. People were worried about that, but nothing else is going on. You get one more Uncle song, but here as an intermission, 6 p.m. Pacific time, Cult Real Estate on Powell Day. If you ask me about real estate tomorrow, you will be met with an Uncle song. Bring your real estate questions. Bring a friend. Okay, maybe some ambition. I don't know. Maybe a desire. It's free 99, but let's go. And again, I was telling some of you guys out there, like, I don't know if you're a wholesaler, if you're looking for something, but whatever. Even if you are another real estate agent, like we said, you guys are all in local areas. You should go to this call to meet somebody who is near you. I don't know what you're doing in real estate, but we have a crazy network with it, and these guys are ready to work, and that's what they are doing. So the fact of the matter, I think some of you guys could be working together and link up in your areas. This is the time and place and where to do it. You know, motherfuckers want to get Instagram scammed and all of that, but I'm just telling you, that's where, again, you were trying to do real estate in Cali, Texas, North Carolina, and Arizona. I can name every state. You're going to have somebody there, and that's what I'm saying, bro. That's where you guys want to establish those connections. So that's tonight at 6 p.m. So see you there. God bless you, baby. Whether you're in the business or not, but think local and think your area and get connected to your local co-area agent. So for whatever, whether you use him or you're going to work with him, you're going to bounce referrals, whatever it is, but just know the person. Amen. Amen. Okay, last one. Last one and we out, bro. That's it. Call Real Estate's in the description. I said I should have a link there. Wait for it. You'll wait. It'll come. It'll come. I know it will. Amen. That's it, man. You know? So, Chad, that's it, bro. That's all we got. That's it. I got to get going, too, actually. So, listen. I'll tell you afterwards. But you get a little bit more. I need to share my journey with you. Frontera reports New Zealand 50 share buyback program. Are you ready? Are you ready for it? Are you ready for it? I have more, but we have to run it by editors because it was going to get me canceled. Come on, I'm telling you. I told you, I'm working, baby. I'm working. Come on. Come on, bro. I'm telling you. That's it. Y'all don't understand. Come on. That's it. Whoever. Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Style is forever. Swag is no, fuck out of here. Long term. Yeah, long term's forever. God willing. Even then, you might die, but the long term may live on. You know that? It may go to the next one. Oh, they don't feel me. That's for the kids, baby. Go get them a dividend. Put it in a Roth, baby. Why not? Why not? Why not? It's okay. Even if you didn't. My parents didn't, but I'm just saying, why not? Why not? Amen. Amen. I'm leaving on that. I hope they feel me, Chad. I love you. God bless you. Have a wonderful evening and peace. Out. Yeah, you're not fuck your mind, Josh. You thought you were gonna lose me, huh? Yeah, what about you? You like them economies, the interest rate, huh? Come on, get your kids to college. You get them you make them a 401,000. They're gonna be great. All-time highs. Yeah, so what, Hunter? Fuck Hunter. I don't even know him anymore. Who's he? Fuck you. Anyways, I'm leaving. Now, Joshua, hold on before you. Was that you on the country music? Does that mean you have to live in the country? Then why are you talking about California? Did you say the Republicanism is a disease? Oh, okay. Now, hypothetically speaking, if you said that, would you admit that you're a baby back bitch? No, sir. Excuse. Did you say that? If you said Republicanism is a disease, did you? Okay. Now, if you somehow said that and I could prove it, would you admit that you are a bitch? If you tell me, I'll let you. I yield back. He's not. Nope. I reclaim my time. Thank you. Have a wonderful evening. Goodbye.